Hello future CAs, Vanakkam, Namaskaram or Sabko Swagat to Expected Question Marathon for CA Interlaw for our September 25 exams. Why I'm introducing in multiple languages is because we have students now from across the country watching this Expected Question Marathon with so much of hype that you guys have. So before we begin or during the marathon, I want you all students to do one thing either now or in the middle or towards the end. Whenever you're going to comment, I want you to comment, guys. Spam the comment section with your name, or you can just choose to ignore your name and just write which location you are watching this marathon from, because I would love to know from which all cities and states you're all watching. And if you actually find value of this expected question marathon, write a small, not a feedback, but your experience as to how it is. I'm asking this for one reason, guys. I have been doing expected questions from 2020 COVID onwards, but in the old syllabus, until the old syllabus, it never reached people. I used to get 500 views, 1000 views, but accuracy used to be there. Whoever used to follow used to be like, sir, please do it, please do it. Hardly for 20-30 students, I used to keep doing it always. In new syllabus in May 24 alone, I skipped one attempt because I can't predict patterns when the cycle is restarting. And again, when I restarted in September 24, I was surprised that the video took off and everybody liked it, because what we are putting over here is coming in exam. This is not just some random prediction. This is based on trend analysis, correct? Then we did 2 attempts only, expected questions. Then someone told me, sir, why don't you do a marathon for expected questions itself? So last attempt, May 25, was the very first time I tried a marathon for expected questions, which came for roughly about 2 to 3 hours. And this time, I thought, since we have 2 days of time and all of you are banking on this expected question list, why not me do something little more exhaustive? And here it is, guys. This is a quick short intro for another 2 to 3 minutes, so you get an idea as to what you can expect in the next 5 to 6 hours or 3 to 4 hours. We don't know, guys, how much time it will take, correct? But what I want you guys to do is, if you are starting to watch this live at this point, of course, this live, once it gets over, till your exams, I will keep the video, guys. But you're starting off your day with me. So at least, if not, you don't watch for the whole time, at least for the first 1 to 2 hours, or I know some of you will stay till the end. If you can stay till the end, before lunchtime today, whole law, you will have a bird's eye view, and believe me and trust me, your confidence will go up. Those students who watch till the end, in the end I have a gift for all of you, and those students will communicate their gift in the comments, guys. Let me start off, guys. Materials, what I'm going to use for this is going to be my Gen Z notes that I have, along with my CA Inter normal concept law material. Both these materials, you can just go to CA Classroom website, and in the free resources, you can download the PDF if you want, or even without material, you can follow with any material that you are following, because end of the day, it's the same concept. Next, please have a copy of this expected questions list that we have. Okay, mostly you would have seen this expected question list. Somewhere you would have seen this, guys. So keep this copy of expected question list. So because we're going to solve questions predominantly what is there in this list only, guys. What is there in this list only. Once the live gets over towards the end, some student I know, out of love and affection, they themselves will prepare the timestamps. So you just have to wait till few more hours, and all the timestamps will come. So those students who want only specific topics, you go take those specific topics and you watch it. Sir, what about the duration of this? Follow, guys. The duration of this is very, very simple. My regular class of law is close to 120 hours. My fast track or workout is close to 75 hours. And all the marathons, concept, workout, MCQ, everything I have put out freely on YouTube is close to 36 hours. If you want to know what are these marathons, I'm not going to tell you now, guys. Just recently I have put a 2.5-day strategy video for law. In that, I would have briefly elaborated what are all the marathons that we have, which is freely available. But that also I will add it in the description of this video. Sir, we don't have time for all of that, sir. How long will this be? I don't want to compromise on quality because we have 2 days time. I am expecting this to go on average around 6 hours plus or minus another hour. If it is too much, skip the topics that you don't need. But if you, out of your entire 35 hours of preparation, yes, I am going to borrow close to 20% of it. But the 20% of the time that I'm taking from you, you will know if it's going to add value for you or not, guys. A lot of you will be like, sir, if I can watch this alone, can I pass the exam? Of course, yes. This and along with some topics where you need detailed support, go to the little detailed marathons, and that's about it. With that, we are going to start off our expected question marathon. Of course, I'm going to be fast because I have to package the entire syllabus of expected questions, which is almost close to 80 to 90% of syllabus in 6 hours. So don't expect a lot of concepts from me, only exam oriented points, guys. We will start off. But before that, for all the efforts that me and the team is putting in, I just need one thing from you guys. I'm only asking out of gratefulness, everything. If you guys are yet to subscribe to the channel, do that, and then we will start off with the class. Why, sir? These small things may not matter much for you, but it matters a lot for me because I want to know how big our community is growing, guys. I think in this last 1 year, I have never asked for this, but recently I'm going to ask only for a few times, and then again I will stop asking because I know you all will do it. So with this, straight away, let's get into the expected question marathon. One last thing I want to add, sir, is this 100% live? Let me give you clarity. This is almost close to 70% of what you're going to watch now is freshly taken. Maybe like it's just taken now. It's even being taken after your accounts exam or during your accounts exam time. So it's freshly based on this list only for September 25 exams. And 30% of topics, I am just borrowing from my own classes and just plugging in that here and there so that the complete 6 hours will become a proper holistic experience for you guys. Don't worry, guys. I have taken care that whatever you are watching, the time will be of value. That's it. This is the little intro that I wanted to give. Let's straight away get into topics. Sir, are the topics going to be in sequential order, starting from preliminary until other laws? No, guys. How I'm going to keep it? The first 11 chapters will be Companies Act only, but the order will change. Don't expect me to start from preliminary. The order will change. Little bit of shuffling here and there because you know the syllabus. Once we finish the 11 chapters, we will be going to other laws, and those 4 chapters will take place, and then this whole expected question marathon will come to an end. Again, any honest feedbacks that you guys have, let me know. That's it. In the next 2 days or until your exams and beyond law for group 1, even group 2, we will keep giving enormous support. That's it, guys. I don't want to take much of the time. Let's quickly start off. Hey guys, finally welcome to the expected question marathon. We will go one chapter at a time. I don't want to start off with preliminary and bore you in the morning, guys. I want to start off with a chapter that will give you inspiration and motivation for you to become the auditor of a company. You're all studying for what purpose, guys? You're all studying for money, section 142, remuneration. You want to attend AGM as an auditor and you want to be appointed as an auditor, correct? So I want to start off with this chapter so you get a lot of inspiration that, okay, when I clear my exams, one day I will practically experience what I'm learning in this chapter. So I will start off with this chapter and then go start from the basics, from preliminary, incorporation, and that way we'll keep going, guys. First, like I already told in the start introduction, I will be using mix of all my notes. For some concepts, I will be using my main material, concept material that we have. For some concepts, I will be using my Gen Z notes, and for some concepts, I will just write here and explain here in front of you. I will write and explain in such a way that all the expected questions are covered in detail for you. Does it mean, like I already told, you should study only expected question and go to exam? No, sir. You need to study the whole syllabus in 5 to 6 hours or even lower time. I can finish all these expected questions concept in rapid speed. But otherwise, you guys know that there are other marathons or resources that you have. But anyway, we don't have so much time. So let me start off with remuneration. Why everybody is studying is for that money only, guys. So for that money, remuneration section 142 says statutory auditor will get remuneration in form of an audit fees, Now, for doing audit, no, you have to travel, you have to eat some food. If your client is in Mumbai, from Chennai, you have to travel to Mumbai for that food flight expense. So your audit fee, for example, if audit fee is 10 crores, now this audit fee can be inclusive of or exclusive of travel or other food expenditure. If it's inclusive, within 10 crores you have to finish. If it is exclusive, you will incur the actual expense and claim reimbursement. Now, who will decide the remuneration of auditor? So 10 crores you will really get yes guys, Deloitte for auditor of Reliance gets 40 crores as audit fees. Okay. So now the shareholders will decide the remuneration of the auditor by passing an ordinary resolution in the AGM, guys. By passing what? By passing an ordinary resolution in the AGM. But if it is the first auditor will vacate in the AGM, in the first AGM. He will hold office only till the end of the first AGM. In that case, I can't wait for shareholders. Therefore, for first auditor, board will decide. So, for example, remember, statutory audit fees is inclusive or exclusive of travel and food expenditure. First auditor, board will decide. Subsequent, shareholders by passing in ordinary resolution. Beyond this, can auditor get other fees? Yes, for GST auditor, for tax audit you can get, but not covered in this section. You can get fees if it is allowed service and ICA Act allows for the same. Let me go to the next provision, guys. Okay, 145. Auditor to attend the AGM. Now, all the work auditor has done, all the work he has done, auditor wants to attend the AGM and sign in the AGM. So let me quickly cover for you 145 and 146. 145 is signed. 145 is signing, guys. So auditor has to sign the audit report. Now, if it's a firm of partners, not necessarily the partner who has done the audit should sign. Any partner in the firm can also sign the audit report, guys. And any observation and reservation that the auditor is having, he can read at the AGM. So simple, who will sign? Only the partner can sign. If partner is not able to sign, some other partner from the firm can sign. Observation, reservation can be read at the AGM. Now I will come to the AGM. The word says he shall attend the AGM. It is a mandatory and he also has the right to speak and be heard at the AGM. Now practically, if the auditor is not able to attend, because I am auditor of 4 to 5 different companies. All companies are having AGM on same day. I can't use A and go to multiple places, correct? So the authorized representative of the auditor, somebody else who's the CA can go attend the AGM on behalf of me. For example, let's say guys, I am the auditor of Tata Motors. I am not able to go because I have class or some other commitment. I will send my other partner to go there, or if not partner also, some other CA also I can send. Not necessarily partner, guys. Following? Okay, with this we are done with 142 and 145 and 146. Next to what we are going to do, so this auditor to attend is going to be 146, auditor to sign is 145, guys. Okay, now next, if you don't do your duty properly, sir, I got suitcase, sir, they gave me gift. If you do all those things, then you have penalty provisions. We have penalty provisions in section 147. We have penalty provisions. Okay, so in this penalty provisions, very simple. The important penalties, let me discuss. If the auditor has done contravention of section 139. Sir, what is section 139? Appointment of auditor. Or 144. Non-audit services. I am not supposed to do internal audit. If I am statutory auditor, I am not supposed to do accounting and bookkeeping. If I am doing all of that, or appointment is not within the time limit. And section 145, I am signing by taking suitcase. Then the general penalty is minimum 25,000, maximum up to 5 lakhs or 4 times the remuneration, whichever is less. For example, if my remuneration is 2 lakhs, What is 2 lakhs into 4? It's going to be 8 lakhs. So my maximum penalty will be 5 lakhs or 8 lakhs, whichever is lower. Which is lower over here? So my maximum penalty will be only 5 lakhs. Nothing to worry. When this general penalty will come, if I have done any offense in these sections without knowing, without knowing I did it, guys. Next, if it has been done with the intention to deceive or defraud somebody else, then that person will get imprisonment of 1 year, up to 1 year, and minimum 50,000. Here minimum is 25, double 50. Here 5 lakhs is maximum. Here maximum is 25 lakhs or 8 times the remuneration, whichever is lower. So what, sir? Suitcase I got is 50 crores. I will simply go to jail for 1 year, pay penalty of 25 lakhs. That's the maximum. No, sir. Jail 1 year I will spend. Anyway, I'll come back and I have 50 crores or 49 crores for myself to spend. That's where it comes the additional liability. If you have such plans, what they are saying, whatever remuneration you got, you will refund. Sir, I never got 50 crores remuneration, sir. 50 crores is suitcase. Remuneration is just 1 crore or 2 crores. The main point is this. If you did fraud, any damages other parties incurred because of the sign that they trusted on you, okay, like creditors, statutory bodies, income tax department, any other person, whatever loss they are arising because of your signature, because you made fraud, the entire money you have to compensate. And the liability, look at this over here, where the partner or partners in the firm have acted in fraudulent manner, then in relation to company or director, they shall jointly and severally liable for all criminal acts. That means, for example, if a firm has partner A, B and C, fraud is done by, sir, only A did the fraud, sir. A did the fraud. Even B and C will be liable. Partnership, joint and several liability. Are you following, guys? And in case of criminal liability, other than fine, who did the mistake over here? Who did the fraud? Our fraud friend is A. Then arrest. The criminal liability, imprisonment is only for A. Remaining partners will not be imprisoned. They will be waived off, guys. Are you following? So even if the loss is 500 crores, you got suitcase for only 50, then full money you have to pay, personally liable. Are you following, guys? Clear? This is section number, like I mentioned over here, section number penalty provisions. Now, cost audit section 148, very important for me. Usually between ICA and the CMA Institute, Cost Audit Institute, there is some issue. Okay, whatever the issue is. So they have never tested this in exam. But in latest exam, they have tested section 132, which is NFRA. ICA doesn't like NFRA also, because NFRA is taking away our powers up. So for that reason, what they have done, guys, because there is an amendment in cost audit, if they have to ask unexpected question to shock you, then cost audit will come. So for cost audit, what I will be doing, I will be having a separate 10-minute discussion with our notes, separate 10-minute discussion explaining what are all the amendments, because you have studied something old, what are all the amendments in detail, and I will cover that. If you know those amendments, for example, if you know those amendments already, just fast forward that part, or just those 10 minutes you relax and take a break and come back. Okay, next let me go to the next part, guys. Qualification and disqualification of auditor, section 141, fully, qualification, disqualification fully, and 139, appointment related to government company, first and subsequent related to government company only, guys. Let me go to that. First, disqualification, I'm saying fully because you don't have to mug up fully, but any one point can come in MCQ or a separate case study. But before that, let me go to section 139, appointment of first auditor. Even though we have all the points here, I am going to discuss the expected question concept. Otherwise, it will become like me revising the whole thing. First auditor for a government company, C&AG will appoint within 60 days, guys. C&AG will appoint within 60 days. If C&AG is not able to appoint within 60 days, then the board will appoint within the next 30 days. Board will appoint within the next 30 days. Are you all with me, guys? And then, if board also fails in next 30 days, shareholders will appoint in next 60 days. If you look at the logic here, board is 30, shareholders 60. If I add both, it becomes 90 days. Why 90 days is given? For me to conduct an EGM, I need 90 days. Do you look at the logic, guys? For me to conduct an EGM, I need 90 days. That's why they are saying for first auditor for government company, first C&AG, give them 60 days time. Usually they will not fail, but in exam they will fail. So if they fail, board 30 days, shareholder 60 days, together it becomes 90. Even for first auditor, if you see, no. Even for first auditor, if you see, for other companies, board 30 days, shareholder in the next 60 days. If you add 30 plus 60, it's 90 days from incorporation. Again, that will become 90 days like EGM. Are you following, guys? Got the logic? Always it becomes total as 90. For this, you have to pass an ordinary resolution. Sir, what about subsequent auditor, government company? Very simple. Unlike other companies where the auditor, once he is appointed, he has office for 5 years. For government company, every AGM, you have to keep reappointing. So, you have to appoint him within 180 days from the commencement of financial year. So, and then he will hold office till the conclusion of, till the AGM of that financial year. What they're trying to say here, guys, follow. What they're basically trying to say, if this is April 24, year ends in March 25, I have to appoint within 6 months, 180 days from commencement of financial year, which is nothing but what date? 30th September 24 I will appoint, and he will hold office until what? Look at this. He is going to hold office until the end of AGM of that financial year, correct? So for this financial year, April to March, AGM will be generally in which time? It will be 30th September 25, correct? Within 6 months from end of the financial year. So look at this. I will be appointing him within 6 months from the start of the financial year, and he will hold office till the AGM of that financial year. That means basically what they are trying to say, here also in one AGM I will appoint you, you will hold office till the next AGM. Are you getting it, guys? Are you getting it? I am appointing you in one AGM, you are going to hold office till the next AGM. But how they have given this? You will be appointed within 180 days from the start of the financial year, and you will hold office until what, guys? AGM of that particular financial year. So it's basically AGM to AGM if I have to interpret this in detail. Are you following, guys? So I'm done with subsequent auditor and first auditor for a government company. Let me go back to our expected questions. 139 government company points is done. Next to 143 subsection 12, fraud reporting. Sir, what is this fraud reporting? 143 subsection 12. If you see, look at this. What they are saying, as an auditor, in the course of your audit, if you find out fraud is 1 crore or more, then within 2 days, you need to inform the board of directors. Within 2 days, I will inform the board of directors and ask, and hoping they will reply within 45 days. Hoping they reply within 45 days. Same thing I will be having here also. Yeah, okay, same, look at this, yeah. So hoping you'll reply within 45 days. If they reply, along with their reply, within 15 days, I have to forward that to the central government. And here the key points, when I am forwarding this to the central government, it has to be addressed to Secretary of Ministry of Corporate Affairs. Important key point here, it should be in sealed cover, in registered or speed post, and once the courier is sent, I have to again send them an email to confirm whether they got the letter. Very important. Fraud is less than, or if the board is not replying within 15 days, then still you will wait for 15 days and inform central government. Less than 1 crore, okay, inform board on audit committee within 2 days, and that's it, my work gets over, I'll keep in the audit report. Same thing in Gen Z notes. Look at this. Very simple. Sir, fraud is more than or equal to 2 crores. Within 2 days, inform board or audit committee. Learn with me. Then you have to wait for 45 days for them to reply. If they reply within 45 days, within next 15 days, you will in ADT 4, you will send to MCA of secretary. If it is less, if they don't reply also within 15 days, if it is less than 1 crore, in 2 days you will inform board or audit committee. Once you inform the MCA, like I said, in sealed cover, you will again mail them asking if they got this particular letter, guys. Are you following? Okay. Hoping you're all understanding, guys. Fraud reporting is done. Next, I'm going into section 144. Before I will go to 139 in the last. Let me go to 139 in the last. Non-audit services related to network firm concept. Okay. Non-audit services. So if I go to non-audit services, guys, section 144, if I go to non-audit services, hold on. Yeah, if I go to non-audit services, look at this. Network firm, what they are saying over here. Let me take in the book itself so that it will be easy for you to understand. Yeah. The auditor, if you are the statutory auditor, you should not perform the following services. Like what, sir? Accounting and bookkeeping, internal audit, design and implementation, actuarial service, all these points. This only I have given a mnemonic called I cube, I am dupe. Why I am calling it I cube, I am dupe? If you do all these things, you're a dupe. That's it. Okay. So I cube includes three things. What are the three things for I that we have? Investment advisory services, investment banking services, and internal audit. So three things with I: investment advisory, investment banking, internal audit. A will stand for actuarial service. M stands for management consultancy services. Look at this: management services, and A stands for actuarial services. Then D is for design and implementation of internal controls. O is for any other kind of services or outsourced financial services, and B is for bookkeeping, accounting and bookkeeping. If you remember the mnemonic, it's fine. Otherwise, just learn how you are learning itself, guys. Okay, now it becomes easy. I cube three I's: internal audit, investment advisory, investment banking. A, actuary. M, management. D is for design. O is for other services. One more O is for outsourced services. Other services, outsourced financial services. B is for bookkeeping. That's it. Now, if the auditor is giving this service to anybody in B, then that service is not allowed. That service is not allowed. Okay. Are you following, guys? The auditor should not give that service to anybody else. Who is the auditor? This is the network firm. Look at this. A is the auditor. That can be the firm. That firm should not give the service to B. Sir, who is B? B includes not only company, the company's holding and subsidiary. Are you following? If I am providing service to Tata Motors, I should not do that to auditor. If I am the auditor of Tata Motors, I cannot be providing non-audit service to Tata Motors or the holding of Tata Motors or the subsidiary of Tata Motors. But who am I? I am the firm, including firm's parent, including firm's subsidiary, including firm's associate. Are you following, guys? So if I'm a firm, if it's Deloitte, for example, then the Deloitte's parent, Deloitte's subsidiary and Deloitte's associate and any other firm using the trademark or brand of Deloitte cannot provide this service to B, guys. That only is not included. Along with that, the firm's parent, subsidiary, associate and brander, if the firm has significant influence or control in some other entity, I will repeat, if the firm Deloitte is having control or significant influence in some other entity, then that some other entity also cannot provide non-audit service to the other entity. Are you following, guys? That's what I have it over here in paragraph, but I'm not getting into the paragraph over here. That's what I explained beautifully over here with these chart notes that we have from Gen Z. Are you following, guys? Simple. These services people mentioned here. Who are they? Firm, firm's parent, firm's subsidiary, firm's associate, and anybody using the brand name of the firm, and any other entity where the firm has control or significant influence. These people in A cannot provide this I am dupe service to B. Who is B? Company, company's holding and company's subsidiary, guys. So with this, we are done with non-audit services related to network firm concept, that brand and trademark. Next, we will be going to removal. Read along with section 115, removal or removal by the board, guys. Now, if I go to removal, section 140, yeah. Let me finish off section 140 fully over here, guys, so that you will get a nice revision. What I have included in this expected question is removal by tribunal or removal by the board is what I included. But let me finish off everything since we have it over here. The first thing is resignation. Auditor has the right to resign whenever he wants. My wish, my health is not good, I want to take a break. If you resign, just file ADT 3 by intimating within 30 days from the date of your resignation. Within 30 days, you need to inform 3 people: ROC, company, and C&AG if you're a government company. If you don't do this, penalty. Simple, guys. Resignation means within 30 days, inform company, ROC, and C&AG. Now, removal by the board of directors is very, very lengthy procedure. First, the board should pass a board resolution. I want to remove an auditor with some reasoning. Then that board resolution within 30 days, you need to inform whom, guys? You need to apply to central government to get central government's approval. Central government will take their own time and pass an order. Central government will take their own time and pass an order, and that order, once it comes within the next 60 days, you have to pass special resolution and also give opportunity of being heard to the shareholders. Let me repeat the whole thing again, guys. Removal by the board, very simple. You repeat with me. First, the company will pass board resolution. Then within 30 days, apply to central government and get their permission. Central government will take their own sweet time to pass the order. No time for them to reply. But once central government replies, within the next 60 days, you have to pass SR and give opportunity of being heard to the auditor. This is removal by the board. Now, removal by tribunal. If you see removal by tribunal, sorry, I wanted to, removal by shareholders is what I wanted to discuss. But let me finish this. Removal by tribunal is very simple. Any person can complain to tribunal, or tribunal by itself, if they want, they can pass order, remove auditor. Once auditor is removed, for the next 5 years, you can't be auditor of any other company. What is the catch here, sir? If central government is asking tribunal to pass an order by conducting investigation to remove auditor, normally the tribunal can pass order in any amount of time. But in this case, central government should pass the order within 15 days, guys. Within 15 days only. Now, removal by shareholders is section 140 over here, read along with section 115. And this is my top expected question this time. Generally, whenever a shareholder wants to remove somebody, especially remove the auditor, he has to give a special notice to the company. Which shareholder can give special notice? Such a shareholder who has 1% of paid up share capital of company. Only if you have 1% of paid up share capital of company, you can give a special notice to the company, and in the general meeting, they will pass an order. Resolution will be passed to remove the whom? Auditor. Now, the special notice provisions is there in section 115. When I go to meetings chapter, I will explain fully about special notice. What is the time limit for me to give special notice, all of that. But this section says, if shareholders want to remove the auditor, they have to give special notice. Then in the general meeting, we will pass SR to remove the auditor, guys. Are you following? But special notice timelines is there. Meetings chapter. When I go to meetings, I will quickly explain it over there. With this, we are done with everything except section 139, which talks of, 141, qualification and disqualification of auditor. This let me quickly finish, guys. I don't want to take much time. We started off with a topic. Since it's the first topic, it's taking a little longer time. But as I keep going, I will slowly pick up the pace. For you to be an auditor, simple. Qualification, you have to be a CA as per ICA Act. You have to be a CA as per ICA Act. If it's a firm, then majority of CAs should be practicing in India. Because today we allow firms with CAs, CS, advocate and lot of people. But if you're a firm of CA in India, majority of them should practice in India. And the firm will also include an LLP, guys. Disqualification, we break it down into three buckets, guys. First bucket, what they are saying, for a company, look at this. For the company is holding, the company is subsidiary, the subsidiary of the holding and the associate. And what is important here, subsidiary of the associate, you should not have business relationship. Are you following, guys? I will again repeat. If I am the auditor of a particular company, then with that company and the company's holding, company's subsidiary and company's associate, I should not have a business relationship. Then that associate subsidiary and that holding subsidiary also, I should not have business relationship. But what is allowed is two things. Professional service as per ICA Act, like what, sir? Tax audit, all that is allowed. And commercial transactions. Any commercial transactions, people think it's only hotel, airline, hospital, telecom. No. Any commercial transactions, even automobile, etc., is allowed if it's happening at an arm's length price. That means market price, it should happen, guys. If it doesn't happen as per this, you are disqualified. If it happens as per this, it is allowed. Otherwise, if I'm auditor of Hyundai, you can't tell, hey, you should never buy car of Hyundai. It won't make sense, correct? Next, Proceed next, guys. If you are next one, what they are saying, any employee and officer of the company cannot be auditor, and their employees and partner also. Let me just explain this with a small diagram that we have in the book. So what they are saying here, look at this. If you want to be auditor of a company, then you should not be an officer in that company, you should not be an employee in that company, and you should not be partner of the officer, or you should not be employee of that officer, and you should not be partner of the employee, you should not be employee of the employee. For example, let me say this company is Zomato. Let me say this company is Zomato, guys. If you want to be auditor of Zomato, you cannot be the employee of what? Zomato, or you cannot be any managing director or officer of that company. Sir, I am not the employee, sir, but I am partner with an employee in Zomato, or I am employee of the employee of Zomato. For example, if this employee is Raghu, I am not Raghu, I am Rahul, and this Rahul cannot be auditor of Zomato because Rahul is the employee of Raghu. Raghu, while being in employment in Zomato, is doing some other business. Are you following, guys? Like this relationship is not allowed. And they're also saying, if the person is a director in the company or relative is the director or KMP. Let me explain. In this company, if a person is a KMP, then you cannot be an auditor. In this, if person is KMP, look at this. Yeah, where is that? Yeah, in this, if the person is director of a company, so if I have right here, look at this. In the company, you are a KMP or you are a director. So if you are the KMP or director of Zomato, you can't be the auditor of that. At the same time, if you are relative, I am not the KMP, guys, I am not the director, but my relative is the KMP or director in the company, then you can't be appointed as the auditor. Clear, guys? This is done. Next one, they are saying very simple, because of limited liability, body corporate is not allowed, LLP is allowed, guys. Next, if I go, any partner, individual or relative, together or individually, should not have guarantee or security up to 1 lakh is allowed. Indebtedness up to 5 lakh is allowed, and security, we'll come to security, up to 1 lakh is allowed for face value only. Now, for which company, sir? Here we have this company. The same thing is there, except subsidiary of associate. Come down over here. You cannot have guarantee or security or indebtedness or have shares in the company or the company's holding or company's subsidiary or company's associate. Same as above. Or the subsidiary of the holding company. This associate has a subsidiary. No, that is not there in this relationship. So who should not have it? The partner, the individual, my partner and my relative should not have any of this. Now the catch over here, everyone knows this concept. Security, shares alone is not allowed for the partner or individual. Okay, it's 0. The limit is 0. The shares security is allowed only for relative up to 1 lakh face value, and if it crosses 1 lakh face value, you have to sell it within 60 days. Within 60 days, you have to sell it, guys. Are you all with me? And lastly, sir, who is relative, sir? You're all saying relative of the partner, all that. Very simple. 2 subsection 77 says, for the individual, first close family, father, mother, son, daughter, brother, sister, and spouse. This is my close family. Father, mother, son, daughter, brother, sister, spouse. Everywhere you add step. Stepfather, stepmother, stepbrother, stepsister. Okay, you add step. You can't have step spouse. Okay, that becomes basically your ex spouse, or that becomes an affair, guys. You can't have step spouse. Okay, then step son is there, but no step daughter. Step daughter alone is not there. There is a logic for this. When the law was made, it was very discriminatory in nature. That's it. No step daughter. And additionally, we have daughter-in-law and son-in-law, guys. So simple for me, parents, kids, brother, sister, spouse. Step is there everywhere. Spouse not possible. Daughter alone, there is no stepdaughter, and son-in-law and daughter-in-law. This is the relative. And last disqualification that we have, the last dabba. If you are doing any service in 144, if you are providing any non-audit services, then you cannot be what guys? Auditor. If you don't have COP, you can't be auditor. Maximum limit is 20, but this 20 doesn't include smaller entities like 1% company, dormant, small company, and any private company with turnover up to less than 100 crores guys. Are you following? Then if you're convicted for fraud anywhere, up to 10 years, you cannot be auditor anywhere else. Again, I will repeat this point alone, maximum 20, but in this 20, we don't count OPC, dormant and small company, and a private company also is not counted if paid up share capital is up to 100 crores. Are you following guys? With this, full audit and auditors chapter is done. Sir, you forgot cost audit. Of course, I did not forget cost audit. No, because cost audit is a detailed concept amendment which I feel important. I will be posting a separate video after this marathon gets over in our channel itself for 10 minutes, or in this marathon itself towards the end I will just plug in that cost audit video which is already recorded before. So I will just add it as an amendment so that it's there in this or it's there separately guys. With this, we are done with audit and auditors chapter guys. Let's quickly move on to the next chapter. So let's start off with the expected question marathon for preliminary chapter. For some reason, most students take this chapter very lightly because they studied in foundation and they will skip it thinking it will not come. But usually if you see, they will ask at least one question for 4 marks. And if you know, you're lucky. So I have picked out all the most important areas over here. Let us start off with associate company and small company. Very important because they haven't tested small company for a very long time. This time I'm expecting either small company or small LLP. One of these two should come. Small company means a company other than a public company. So first thing they are saying, if you're a public company, you're not a small company. And they're also saying a small company should not be a Section 8 company. It should not be a holding or subsidiary company for any other company or body corporate. That means this is one point which a lot of people miss out. They only focus on the limits in small company. So first thing, it should be a private company. It should not be a Section 8 company. It should not be holding or subsidiary of some other company. That means it has to be a standalone company where the limits of paid up share capital and turnover, it is an and condition. Both paid up share capital and turnover should be satisfied. Paid up share capital should not cross 4 crores. Should not cross 4 crores and turnover should not cross 40 crores. So my limits are how much guys? My limits are going to be 4 crores and 40 crores. Paid up share capital not exceeding 4, turnover not exceeding 40. Here students get confused. Sir, what is this 10 crores and 100 crores? When you are doing comparison of a private company to check if it's a small company or not, you have to check, is the paid up share capital less than or equal to 4 crores? Yes. And turnover is less than or equal to 40 crores? Yes. Then it becomes a small company. For the purpose of writing provision, you should also see that this 4 crores today, in the future by amendment can become 10 crores, and this 40 crores today, in future by amendment it can become 100 crores. That means 4 and 40 is the numbers to compare, but tomorrow this 4 and 40 can go up to 10 and 100. Sir, why is it like this? Because of inflation, price keeps changing, turnover it will keep increasing. So instead of amending the act itself, in the act there is power that up to this 110 you can easily amend it by just the notification itself guys. Next we will be going to associate company guys. Another definition students generally get confused. Simple. Associate company is a company where, for example, A Limited will have significant influence in B Limited. Follow guys. A Limited has significant influence in B Limited. This significant influence is split into two. They are saying significant influence includes a joint venture. So associate company includes a joint venture, and the other core definition for significant influence is you have 20% or more of the voting power. So if you have 20% or more, so it's equal to or more than 20% of voting power. And here important to note, if A has 20% or more of the voting power in B, A becomes the associate. For A, B becomes the associate. For A, the investing company, B becomes the associate. Now here the key point for voting power, we consider equity share capital and convertible preference shares. We should also take what guys? convertible preference shares. But if this is not satisfied, even if I have 0% voting power, you can still have significant influence and thereby you can still become an associate company if you control the business decisions under an agreement. Are you following, guys? You are controlling the business decisions of B. A is controlling business decisions of B through an agreement. I hope this part is clear when it comes to small company and associate company. Next one is listed company and amendments as to what is not listed. Important, boss. Yes, it has been tested in the past and it is pretty much important for exam also. So listed and unlisted company. So basically what is listed company? Any company whose securities are listed on the stock exchange. It is not necessary that only shares should be listed. If shares are unlisted, even if debentures are listed, we call it a listed company. Any one securities. The words used is securities, not equity shares. Now this is the amendment over here as per rule 2A, where they are giving some points which let me explain to you guys. So here what they are saying, these 3 points are not listed. What is one? Public companies which have not listed their securities. Of course, unlisted public companies are not listed companies. Then they are saying private company which has listed their non-convertible debt, debentures. So what, sir? Just now you told no, sir. If debenture is listed, it becomes a listed company. Yes. But if these debentures are listed on a private placement basis, that is the key. Sir, what is the implication of this? Basically today nowadays, for private company also shares are listed on stock exchange. So it becomes easy to transfer within the existing shareholders. So for private placement basis, for purpose of private placement also, those shares will be listed in a closed network in the stock exchange. So what they are saying, debentures listed on private placement basis for private company is not a listed company. And the same point extended for a public company which have not listed their equity shares but listed, look at this, non-redeemable debt instrument, debentures, non-convertible debt instrument, debentures, non-convertible redeemable preference shares, both the keyword is private placement basis. Are you following, guys? Here if I change it as convertible debt securities on private placement basis, then it will become a listed company. Why? Convertible debt, now it's going to become equity, listed it becomes a listed company, guys. Okay, I don't think they will ask that much depth question. All you have to look for is non-convertible debt, non-convertible redeemable preference shares, private placement for public company and for private company. This is the important area which they have tested also. Next one, what is a dormant and startup company? So let's quickly see now what is a startup company, guys. Simple, they have not tested this, but startup comes in other provisions. Startup company is a company only up to the first 10 years. After 10 years, you can't call something startup, guys. How many years you will keep starting up? Then the turnover of such company should be less than or equal to 100 crores. It should never cross 100 crores. For example, if I am in the 7th year of operations and my turnover has become 120 crores, then sorry, you are no more a startup company. Conditions is mutual. Both should be satisfied. So one is it should be up to 10 years and turnover should not exceed 100 crores. And lastly, in the appropriate Ministry of Commerce and Industry, they have to get this DPIIT certificate, guys. This is a startup company. Now, what is a dormant company? So basically, to tell you in simple words, dormant company is a company where it does not do any significant accounting transactions. A company which is incorporated for what purpose? Formed and registered under this act, Companies Act, for a future project, for a future idea, I just incorporate a company, or to hold an asset. Building is there in the name of the company. No other activity company is doing. Or intellectual property, R&D, what I am doing. For purpose of R&D, one company is incorporated. For example, Elon Musk is doing this Neuralink. He started 15 years back. That time it was an idea for a future project to hold some intellectual property or to hold asset. And they have no significant accounting transactions except R&D, guys, or just an idea. So that's a dormant company. It's allowed as per the act. What they are saying, a dormant company can do only these 4 things. That means they're trying to say no significant accounting transactions means a transaction other than these 4. So other than these 4, nothing else is allowed. So what are these 4? The basic things that are required by a company. When you incorporate a company, you have to file annual return. For that, you have to pay fees to ROC. Correct, guys? Then next, Under other laws like PF, ESI, Bonus Act, or let's say some Factories Act, whatever, you have to pay some statutory obligations, whatever is there. For other laws, GST, income tax, you have to do filing. For that purpose, other laws. Then you can't have a company without having shares. So for that purpose, allotment of shares. But if company is there, we studied it has to be a physical officer. So physical office means there should be something for maintenance of office and records. So payment for maintaining its office and records. That's it. Payment to ROC, payment for statutory dues of other companies, allotment of shares, and maintenance of office and records. This is the way in which a dormant company is incorporated. Look at the wordings over here, where it is formed and registered. A normal company, a private or public company, can become a dormant company. How it will become a dormant company normally, guys? Where any company has not filed the annual return or financial statements under section 137 in the last 2 years. Okay, so any one of these two, financial statements or annual return, has consecutively not been filed in the last 2 financial years, any one is or filed, then it becomes a dormant company. So basically, FS or annual return not filed in the last 2 years, then you will automatically be converted to a dormant company in the records, guys. That's it. We are done with next concept over here, dormant company and startup company. Next, holding and subsidiary along with section 19 and public financial institution. This came in recent exam, September 24 also. Many made silly mistakes, so it can come again, guys. So let me quickly go over that. In other companies, we have public financial institutions. Let me finish that. Public financial institution is nothing but an addition of statutory company plus government company. That's it, guys. Statutory plus government company. What is statutory company? A company established under central or state act, which is nothing but incorporated under a special act. Plus, such a company incorporated under a special act, for example, LIC, incorporated in LIC Act, at least 51% of paid up share capital is held by central government or state government or combination of both. This is what definition of government. So left hand side statutory, right hand side government, both together it becomes a public financial institution. Example, LIC, incorporated under a special act, and 51% of more of paid up share capital is held by central government, state government or combination of both, guys. Is that clear? Next, foreign company definition we will see in foreign company chapter for sure, guys. Yeah, holding in subsidiary company I have to show you. Now, I'm sure you all know what is holding and subsidiary company, guys. Basically, what is holding in subsidiary company? A company in which you exercise more than 50% of voting power either by yourself or by one or more companies. Then the former company is holding, the latter becomes subsidiary. Or you control the composition of board of directors. For example, A in B Limited, one way has more than 50% of voting power, or the other way, I may not have any voting power in terms of shares, but I control the composition of board of directors. What do you mean the controlling composition of board of directors? You can appoint, remove, restructure the board. Fine. This is simple, sir. We know this. Don't waste time on this. The next important thing is section 19. For section 19, you need to understand the background, guys. Look at this. If there is a holding company and subsidiary company, if holding has, let's say, 52% in subsidiary, now can this subsidiary also have 60% in holding, guys? No. If this happens, it becomes an absurd scenario as to who is holding, because both of them are controlling each other. That's never possible in life. In a relationship also, one person only can control the other person, correct? So keeping this in mind, that's why the law is saying this is not possible. That means what? Subsidiary company cannot have shares in holding company. But section 19 says in certain exceptions, in 3 exceptions, subsidiary company can have shares in holding company. What is that? The first one, subsidiary can hold shares until the point of relationship of holding was created. That means before this 52 was purchased, imagine subsidiary had in holding 40%, correct? So I had 40% here. Here nothing was there. Now suddenly I had to purchase 52%. Now what to do with this 42%? This 42% which I purchased before the relationship of holding and subsidiary was established will still continue. But what will happen is you will have no voting power. You will have no voting power for that part of shares. So the first one, you can hold shares. Look at this, the exceptions. Look at this, the exception. The subsidiary was already a shareholder before it became a subsidiary. That 40% was already there. In this case, you don't have voting power. Very, very important. Second, you're holding as a trustee. Sir, what do you mean as trustee? Let's say here Vijay Mallya is there, and Vijay Mallya has created a trust with Deepak, a trustee, transferring all his assets to Deepak, asking him to take care for the benefit of his son beneficiary, guys. Are you following? Now follow very carefully. Now the trustee is doing what, guys? The trustee is going to take care of all the assets on behalf of his son appointed by the author. Now trustee can hold shares of the author. Now what they're trying to say is, if this Deepak trustee is a subsidiary and this Vijay Mallya is a holding company, this subsidiary can hold shares of, holding the author as a trustee, because I am not holding for my benefit, I am holding for benefit of another person, the author's son. Is that clear? In this case, yes, you have voting power. Only in the first case there is no voting power, but in the second case there is voting power. Lastly, can hold as a legal representative of deceased member. Let me explain. There is a holding company. In that holding company, Michael Jackson, MJ, is the shareholder of the holding company who passed away. He passed away. Now, subsidiary of this holding company, okay, this subsidiary is the legal representative for Michael Jackson. Okay, this subsidiary is the legal representative of Michael Jackson. Therefore, when Michael Jackson dies, all his shares will go to his legal representative. So subsidiary is a legal representative, and now subsidiary is holding shares of Michael Jackson on behalf of the holding company. So in this case also, subsidiary has no direct interest in holding. They are holding shares on behalf of their legal representative. Therefore, here also voting power, yes, it is allowed, guys. I hope this part also is clear for you. Okay, so we are done with this also. We just have two more concepts in expected questions. Okay, yeah, I have to go to definition of body corporate, financial statement, or net worth, or managing director, and OPC. OPC very important because not tested for quite some time. Now let's quickly get to the definitions that we have. These definitions, if you guys are watching, even if you are my regular law class student, I wouldn't have covered this in any of the marathons or regular class or any workout batch, because at that point this wasn't that important, but now it is important, so I'm adding it into our discussion, guys. First is body corporate, but don't worry, we would have discussed body corporate in LLP Act in regular class. Same definition. What is body corporate, sir? Body corporate is a company registered in or outside India. Company registered in India is a normal company, but company registered outside India also is covered, and it does not include what? It does not include a cooperative society under Cooperative Societies Act. That's it. Financial statements, we would have definitely covered it, guys. Where we would have covered it? In financial statements, books of accounts chapter. So here financial statements includes what? Your profit and loss account, balance sheet, notes to account, statement of change in equity, and cash flow. What is important over here? What they ask in exam also, cash flow is optional for a few entities. Sir, what are those few entities? Small company, dormant company, one-person company, and even a startup company. Let me repeat, small, dormant, one-person and startup company. But for startup company, what they are saying, it is optional only if the company has filed the financial statement and annual return. Let me repeat, for startup company, it is optional only if they are compliant in filing the FS and annual return. If they have not filed, then they have to prepare the cash flow statement. Next important definition, out of the box question that they can ask is, who is a managing director? Now, managing director is a person whose name is defined as managing director. Now, this is the concept I have never taught so far, so I will be maybe little slow over here. Managing director is a person whose name is mentioned as MD in articles, or the board by passing a resolution is appointing somebody as managing director, and that somebody will have substantial powers in management of the company. You can call them MD, you can call them CEO, you can call them in any particular tag you want. Sometimes they will call them as head consultant, or let's say lead management, or whatever they call them, guys, CXO something. So here they are saying, by whatever name you call, if that particular person has substantial powers in management of the company, he is called a managing director. So now this managing director, what is that substantial power? What are few of the administrative tasks that he will cover? This administrative task is given in the act in the section. First, he has the power to affix the common seal wherever he wants of the company in any rental agreement, etc. He can draw or endorse check or negotiable instruments, guys. Check and negotiable instruments. Of course, negotiable instruments include your checks. Then he can sign share certificates, and also apart from signing, if somebody else wants to transfer shares, he can direct the registration of share certificate. So for example, let's say Alia Bhatt wants to transfer shares to Ranbir Kapoor. In that case, if I am the managing director, I can tell, come on, do this transaction. And lastly, the Companies Act in a separate notification also says, if somebody has to be called a managing director in the company, the precondition is first he has to be appointed as a director. Only if this particular person is appointed as a director, let me repeat, only if this particular person is appointed as a director, then I can call them itself as a managing director, guys. Are you following? So precondition is they have to be a director. Next definition, where this will be used, generally in buyback chapter, they will tell compute the net worth, 10% of net worth or whatever. So what is net worth? Net worth is defined as paid up share capital including equity and preference plus all free reserves, profits of the company plus securities premium will be my net worth, guys. You should not include, see, it is not minus here, it's actually not minus. So basically you should not include revaluation reserve, not included. No need to minus, guys. You will not include revaluation reserve. For example, if this is 100, if this is 50, if this is 10, the total is 160. No need to minus revaluation reserve. You just don't include revaluation reserve, but you minus what? P&L debit balance, if any, or deferred revenue expenditure. Let's say that's 20 negative. I will minus 20 and end up with a net worth of 140. What this is basically saying is my money, what I will have if the company closes down, minimum guaranteed. And the provision also says something technical. I can't explain the logic here because we don't have time. It does not include write back of depreciation on amalgamation. For those who know amalgamation, in case of amalgamation, sometimes you will reverse the depreciation because of revaluation of asset. In amalgamation, what will happen in purchase method, value of asset will go up. That time automatically you are reversing the depreciation, which is nothing but reversal of depreciation is nothing but again revaluation. That also we should not include, guys. These are the 4 important definitions that we have. So now if I go here, I've covered all these 4 definitions. Last, this 1% company, I feel it's very important for MCQ or standalone for September 25 exams because they haven't asked this for a lot of time. Very recently only they have asked the Section 8 company, and that is why in this list I have excluded Section 8 company in expected questions. Please don't skip Section 8 company. I am not discussing over here because it is recently tested. You have enough time, learn Section 8 company by yourself. Now 1% company, because it is important for MCQ or standalone, let me spend a little longer time. I will spend close to 8 to 9 minutes on 1% company itself, and then we will complete this preliminary chapter and move on to the next chapter, guys. Fine. Hi guys, let's start off. Today I'm going to start off again with 1% company. Previous session we learned 2 things. What is a 1% company? Why 1% company is there? And we ran through some points. I personally felt maybe we rushed a little bit towards the end in 1% company, did not go through points. You are also not attentive. So I just want to take 10 to 15 minutes to revise 1% company points again and then go to the next concept. Okay. If you already understood, it's fine. But I was not satisfied because yesterday while I was teaching, you guys distracted me. 120 lesser, some other number. So my mind went off. So I was not at my best. Simple. 1% company exam, what to remember. Look at the time limits. You have 15 days one, 30 days one time limit, 120 days we have a time limit, 180 days you have a time limit. That's it, guys. These are the time limits you have. And then we have some other key points in 1% company. 1% company cannot invest in 2 things. What is it? Securities. It cannot invest in NBFC, and we also saw We'll come to the last point. We'll fill the key point there later. So what are the points each? Let's fill the English over there. First, for one person company, 120 days is where the topic starts with. Okay, what is 120 days? In one person company, anybody can start. Who can start a one person company? Indian citizen only. Whether resident or not, we don't care. Why only Indian citizen? Not a Russian citizen or a US citizen? No, today if Donald Trump wants, he can start a private limited company in India. Yes or no? Yes. Foreigners can start companies in India. Very much. Elon Musk can start Tesla in India. Up a one person company, Elon Musk cannot start. Why? Why? It is to promote Indian solo entrepreneurs, not for foreign nationals. அவங்க வந்தாங்கன்னா I don't see one person company's biggest advantage is cost saving. You have a lot of exemptions, no need to file a lot of things, so cost is saved. Should I give you cost saving for foreigners? அவங்க dollars இருக்காங்களே, they have dollars, correct? So if you want, you start private company. Are you following, guys? And also, if something goes wrong in a company, let's say Kingfisher Airlines, whom do you wanted to catch? But he escaped. He's sitting in UK in flight. We are still not able to catch him, correct? Now let's say a one person company started in Russia. They put a website in India, took all the money. Suddenly nothing is delivered. Now you see means error 404 is coming. How will you catch him? He's already not in India, correct? So that is why the topic says it should be an Indian citizen, plus in the previous financial year he should stay in India for at least 120 days. Why he should stay in India? Otherwise, if he's staying abroad, he will scam us. You can't catch him also. Which has set good examples, correct? So what is this previous financial year? I will give an example. Let's say for the financial year 22-23. Okay. If you stayed for more than or equal to 120 days, then in the current financial year which is 23-24, in our example, we are now in some other year, then you can start a OPC. Are you following, guys? This is financial year or calendar year? Financial year only. It used to be something else. I will not tell what it used to be. For exam, it is financial year. Are you following, guys? So for example, if I take financial year 26-27, I want to start OPC, sir. Can I start? It depends on the previous financial year 25-26, whether you stayed for more than or equal to 120 days. So Indian citizen plus this condition is important. Are you following? Residentialship? No. Indian citizen. Okay. This is 120 days. So I'm discussing key points for OPC. I know we already finished. Just for more clarity. Is this done, guys? This is regarding 120 days. Regarding 180 days, what is it? In an OPC, there are two people. One is a member, one is a nominee. Correct? Okay. Now, an individual, take yourself for example, let's say we have Sanjay or anybody. Okay. You can only start one OPC. You can't start multiple OPCs. Correct? So, in one OPC, you can be and you can be nominee in some other OPC. Is that clear, guys? So, what they're trying to say, because of some scenarios, let's say OPC A, OPC B, X is member here, X is nominee there. Now, because OPC B's some member died, X can become member in both OPCs. If at all a scenario like that comes, or why always death? Let's say he became unsound mind or is convicted, so he can't enter into a contract. Okay, anything where he can't enter into a contract, then if suppose you become member of two OPCs, you have to continue only in one, for which you have 180 days. Are you following, guys? This with regarding 180 days. What is this 15 days and what is this 30 days? Very simple. When a nominee of an OPC leaves for whatever reason, first of all, should nominee also stay for 120 days in India? Nominee also should he stay for 120 days in India? Yes. Nominee, this 120 days is for member, and unsaid rule, it is even for nominee also. We should have that 120 days condition. Are you following? Clear, guys? Okay. sir, if nominee vice or 120, if nominee is in US, suddenly member died, how can nominee become member? See, if you think vice or 120, act is not clear about it. If you think only for member I will keep more than or equal to 120 days, nominee that rule is not needed. Nominee is in US only, member died, who will become the new member? That means you are making somebody a member who is not staying in India for more than 120 days. Correct? Loophole not possible. Therefore, both have to stay for 120 days. Act எங்குமே இருக்காது. That is interpretation. Are you following, guys? Now, if the nominee leaves that role for whatever purpose, because he is going abroad, exam question they will ask, nominee is going abroad, nominee is getting married, nominee died, whatever. If nominee leaves, I can leave by myself. I don't want to be a nominee. No problem. I have to appoint a new nominee within. That's it. Who will appoint? Member will appoint. I will appoint new nominee within. Whenever you appoint a new nominee, you have to intimate ROC within 30 days. That's it. Are you following, guys? So you will intimate ROC within 30 days. Yes, no. 15 days is for new nominee. 30 days intimate ROC. 120 days citizen should stay in previous financial year for 120 days or more. 180 days if you become member of 2 OPCs, pick one for within next 180 days. Then we also discussed yesterday with logic. I don't want to go to the logic again. OPC cannot invest in securities. We saw that case law because I'm simply there. I have lot of income. For example, I'm creating one more OPC, transferring my income to that OPC. I'm diverting my income. So you cannot invest in securities. One more logic for this is, when will you invest in securities? When will you invest in life? When you have more money. Correct? Sir, my salary is only 25,000. It is enough for basic needs if I am in Chennai city. So I don't have enough money to invest. When will you invest? Only when you have surplus money. So the logic is, oh, if you have enough money for investing, why OPC? You start private company and you pay all the compliance fees. Are you getting the logic, guys? So OPC cannot invest in securities. At the same time, it cannot invest in an NBFC. Then one more key point in the circle itself. OPC can convert to any company, but it cannot convert to a Section 8 company. Logic, to convert to a Section 8 company, you need special license. You need special license from government. So you need to apply, make a fresh application. Are you following, guys? So these are the key points. I think we are done with all the key points. Yeah, that's it. These are the key points that are there in OPC. So basically it is one circle with 1, 2, 3, 4, 5, 6 key points. Are you understanding, guys? Clear? Okay. Now, we will also discuss along with OPC, we have few relaxations available to OPC, but I will come back to that later. I told you previous class, we will come back to that later. So with this, I am done with the OPC related points. We will move on to the next one. So let's quickly start off with the expected question marathon for incorporation of companies, guys. So this chapter, it's been quite a long time since they've asked for more marks, because it's a very basic chapter. Some attempts they will skip this fully. Some attempts they will ask this only for 4 or 6 marks. So I am taking the most hot topics from this. First is name clause related concepts. They haven't tested this for quite some time. So what are the key points to remember over here? Name, you should reserve the name. First, apply on the website. For that, if you are reserving a name, if it is for a new company, the name will be reserved for 20 days, guys. For 20 days, they will reserve it. Within that, you have to finish the incorporation process. Sir, if it is for an existing company, then for 60 days, it will be there for an existing company, guys. Are you all with me? Next, few important things. The name should not be identical or resemble an existing company. For example, Tata Motors. I'm saying Tata Motors. No, with 2, 3 A's, not allowed. Then it should not be undesirable in the name of central government. I should not do Anti-India Limited, Anti-Down Limited, or something like against the political party. I don't want to name political parties over here, guys. Anti the party you hate dot private limited, guys. It should not be like that. That name will not be given to you. Then what they are saying, Such a name should not be, what to say, the name cannot represent boards or commissions set up by the government, like Kadi Village Corporation, Small Scale, Prime Minister Limited, Crime Bureau, Court Limited, like that it should not be there. Now what is, and then if the company's name is not reflected in its activities, then it has to change within 6 months. My name of company is some network limited, and what I'm doing is, let's say, hotel. Okay, the name should have some relationship with the company. Otherwise, you should change within 6 months. So, what are key points over here? New company means 20 days, otherwise 60 days. Now, extra thing over here, if the 20 days is not sufficient for you, look at this. For new company, if 20 days is not sufficient, you can again pay additional fees of 1000 rupees and extend for another 20 days. Sir, that also not sufficient, sir. Then again you can extend for another 20 days. So what they are doing, basically it is only 60 days time, guys. Basically it's how many days? 60 days time only. But for new company, first they are giving 20, pay more fees. If you are yet to incorporate, another 20, again 20 days. Then lastly they are saying resubmission is allowed within 15 days for rectification of any defect. That means once the name you have applied, within 20 days it's reserved for you and you have to file for incorporation of company. Now in this 20 days, within 15 days, if you want to modify any mistakes, you can do it. Sir, it doesn't make sense. No, sir, within 20 what 15. But if it's a 60 days case, in that 60 days, within 60 days, you can make some changes within 15 days. So important for exam, new company, 20 plus 20 plus 20, existing 60, rectification 15 days. That's it, guys. Next, section 3A, unlimited liability. What is this unlimited liability saying, sir? Very simple. Every company has minimum number of members, 7 for a public company and 2 for a private company. Where a company does business for more than 6 months with less than 2 members for private and less than 7 for public company. For example, private it has become only 1. For public it has become only 4. Let's say death or whatever. Then within 6 months, the company has to increase the number of members. If they don't do it within 6 months, then all the remaining members who are carrying on the business for more than 6 months shall be severally liable. Liability becomes unlimited from the period incurred during that period. Until the defect is rectified. So for example, let's say it's taking them 4 years to rectify the defect. The entire 4 years liability is unlimited. Basically what they are trying to say, in these 4 years, since you don't have members as per Companies Act, I am treating you like a sole proprietor, guys. Next, if I proceed, alteration of registered office clause, any scenario long pending. Even in my previous expected questions, I have been keeping this, guys. Change of registered office. Before that, let me finish some few basic registered office provisions. Once company is incorporated, within 30 days, company has to set up its registered office, guys. Are you following? They have to set up the registered office within 30 days. It should be a physical office and not a virtual office. Very important. Physical and not virtual. Labeling, the name, address, all that should be there in all business letters, etc. And wherever they are doing office, every place where business is conducted, you should paint the name of the company, guys. Next, where a company, I'm only covering the key points over here. Where a company changes its name during the last 2 years, it has to, along with the old name, it should also use new name. Are you following, guys? If you change the name for 2 years, use both old and new. Now come to change of registrar office. Sir, within the city, let's say in Chennai, from Egmore, I'm shifting to Ananagar. Let's say you're in Mumbai, from West Bandra to East Bandra, you're shifting, guys, within the city. Nothing is going to affect the members because members can anyway travel up, pass board resolution in board meeting. That's it. And then intimate ROC within 30 days. So within the city, you will pass board resolution in board meeting and intimate ROC within 30 days. Are you following, guys? Simple. Within the state, within, let's say Tamil Nadu, same ROC. Let's say Chennai to Vellore, or let's say within Kerala, Kochi to Trivandrum. Now members have to travel to go to new place. See, in the first case, members were not much affected. So I never asked the members. But in second case, members are affected. So along with board resolution, you should also pass special resolution. After you pass board resolution and special resolution, you have to intimate ROC within 30 days. This is nothing but outside the local limits of any city. Now the third case, is within the state but different ROC. This is possible only for Tamil Nadu and Maharashtra in practical scenario, because Tamil Nadu has two ROCs, which is Chennai and Coimbatore, and Maharashtra has Mumbai and Pune. Sir, why only these two states? Discrimination? No discrimination and all here, guys. What they're trying to say, these two states only contribute highest to GDP. Most companies are there here. So to manage them, we have two ROCs. That's it. But in exam, beyond these two states, they may give some other state and tell that state has multiple ROCs. So within the state, if you are shifting or one state to another state, in both these cases, you have to get permission of regional director, because the head of ROC is your regional director. For that, we have a procedure, but I will create a simple chart and show you in some time, guys. That alone, we will keep it towards the end of this chapter. Okay. Next is 10A, commencement of business. Another amended area not tested lately. Commencement of business. Section 10A, guys. Let me take that for you, guys. So what is commencement of business saying? Once I receive certificate of incorporation, what if the company becomes a dummy company and they're not doing any operation? So every company within 180 days of incorporation of the company has to file to ROC the following. This is mandatory for every company. Now look at this. From the date of receiving certificate of incorporation, I just now told you within 30 days, you have to establish the registered office. Correct? You have to establish the registered office. But I will intimate ROC regarding this registered office, file with registrar, verification of its registered office. Hey, I have the registered office. This is the proof. You will set up within 30 days and intimate them. And again in section 10A, proof of commencement of business, within 180 days, you have to file two things. And the first thing I'm going to file is verification of its registered office. All the documents you will file by sitting in the office and taking a photo with Google Maps pin. That's for practicality. Second, when you do incorporation of company, allotment of shares, what is the proof that money was actually allotted to shareholders? Or sorry, what is the proof that shares are allotted to shareholders? And what is the proof that shareholder gave the money to the company? For that, what they are saying, the declaration should be filed by director and every subscriber that they have undertaken the shares, and such declaration should be verified by CACS CMA. So two things to file to ROC within 180 days, verification of registered office, and declaration by directors and subscribers of MOA that they have done the allotment and signed by CACS CMA or advocate to be given within 180 days to the ROC. If you don't give it, there is some penalty you will go through. Now what will happen? If no declaration is filed within 180 days and registrar has reasonable cause to believe that company is not carrying on business. Let's say in our regular class, I will show students how company is actually incorporated. Then in that case, after that I never followed up, then the ROC will initiate for removal of name of the company. And if the company has to obtain approval from any secretary like SEBI or RBI, the same shall also be obtained. Are you following, guys? So ROC will remove the approval. And in this section 10A, for certain companies, SEBI or RBI approval also is needed, guys. 10A is done. Concepts under section 8, including conversion. I know in preliminary I told it's not important, but incorporation, it is there, guys. So apologies for that confusion. Section 8 also we will discuss in our, marathon, guys. Quickly. Section 8, I'll ask you some questions, you will give answers. We will participate like this. Section 8 companies for what purpose? For promotion of any art, science, religion, etc. Then, what is the minimum paid up share capital for Section 8 company? No minimum paid up share capital. The purpose cannot be, it should not be profitable. Therefore, Section 8 company cannot declare any dividend. Instead of using the word private, public, it's not for business. So, they will use words like club, association, chamber. If I want to start a Section 8 company, okay, it has to be charitable. I have to get the name like chamber. But before all of this, before no minimum paid up share capital, I need to obtain a special license from the central government. Now, for you to get this special license, when you apply to central government, few attachments are important. What are these two attachments? A and B. A declaration by advocate, CACS or CMA, that MOA is according to Section 8. Really they are doing charitable work only. And estimate of future income and expenditure. I have to give a projected income statement. So for me to start a Section 8 company, let me summarize so far, guys, with me. First, I will prepare MOA, AOA, signed by CA, CS, CMA, anyone advocate, and give a draft income statement and file to central government. Then they will give a special license. This company will use names like club, association or chamber, and we cannot declare dividend. What is the minimum paid up share capital? No minimum paid up share capital. Later, I am telling I started for charitable purpose, but I started making profits and I bought Rolls Royce. I am doing a lot of things. Really, a lot of people do this. If central government finds out this, they will order for any one of this. Change its status. From Section 8, you become private or public. Very good. Second, you are already very big. 10,000 volunteers are working with you. Okay. Spiritually, you are a big company. But now we found out you are a profit-making company. You will amalgamate with some other company. Are you following, guys? Amalgamate with some other Section 8 company. Are you following, guys? Let's say there are two temples. One temple which is a Section 8 company, we found out they are doing activities beyond its objects in Section 8. Then this temple will be amalgamated with some other temple. Worst case, nothing can be done. Then order for winding up, and when you wind up, the excess funds or assets that you get will be transferred to insolvency and bankruptcy fund, or it will be transferred to another Section 8 company with similar funds. So three things happens if you don't follow your objects: convert status, then amalgamate with some other company of similar objects, or order for winding up. Profit will go to either insolvency bankruptcy fund or some other Section 8 company with similar objects, guys. Then normally for general meeting notice, we all know it is how many days? 21 days. So here instead of 21 days, it's going to be 14 days, guys. 14 days. And one important point, a firm can be member of Section 8 company. Follow, guys. These are some relaxations given. Instead of 21 days notice, 14 days notice. Firm cannot be member of any other company because liability is limited for members, but firm's liability is unlimited. But Section 8 company, we won't have any liability. Therefore, firm can be a member of Section 8 company. Now, if Section 8 company can alter, or if they want to convert, cannot alter MOA and AOA without approval of central government. Next, if Section 8 company wants to convert to any other company, they have to follow the following procedure below. Now come down. If you want to become a Section 8 company, what I already told you, the detailed process, SPICE form will be given, supporting documents, MOA, AOA, CACS, CMA will sign, estimated future income, which I just told you above, and declaration. This only I elaborated above, these points will be given, but the projection of the income and expenditure account is for the next 3 years, guys. Next 3 years, you have to give projection. Now, in our expected question, I told you including conversion. So, this conversion is important for us, guys. How the conversion will take place? Let me summarize this. So, this conversion looks a bit scary for you guys, but I know how to simplify it for you, and that's why I wrote it over here. Simple. If a Section 8 company wants to convert itself to a private or public company, first they have to pass special resolution and explanatory statement as to why they want to convert, and they have to file it to the regional director. They have to file it, guys. Once they file it to the regional director, a copy of this application, should be given to lot of concerned parties like ROC, because ROC of course you give, Income Tax Department, because all these days Income Tax Department Section 8 company may have not paid the tax. We want to know why they are converting. Charity Commissioner, all these days you gave charity, now we are not giving charity, we want to know. Chief Secretary of the state and central government and state government under which this Section 8 company is operating. If Section 8 company is operating in 4 states, then all the 4 states. So far let me summarize what I told you guys. If Section 8 company wants to convert, pass a special resolution along with explanatory statement and file to regional director, and the copy should be given to ROC, Income Tax Department or Commissioner, Charity Commissioner, Chief Secretary of State and Central Government and State Government. Now these concerned parties, if they have any objection, then they will send the representation within 60 days of the copy when they receive. When they receive the copy, from the time when they receive the copy, which will generally be the same time when application is made to RD. So within 60 days, they will apply to RD. Then RD will take its own time, its own sweet time. And once RD is satisfied or not satisfied, if it's not satisfied, it will reject. If it rejects, what to do? In life, if you get rejected, what to do, guys? Start again from scratch. Start again from here with a different application. But if you get lucky and if RD is passing the order for conversion, then after that, my Section 8 company should now convene a general meeting where I have to pass a special resolution. Why? I have to now alter my MOA. From a Section 8 company, I'm becoming private or public. Give it to my current ROC. ROC will give me a fresh certificate of incorporation. I am telling you like a story, guys. The Section 8 company will pass SR explanatory statement and file to RD. Copy will be given to all these concerned people, Charity Commissioner, Income Tax Department, Chief Secretary, Central Government, State Government. If they have any issue, within 60 days, they will give representation to RD. Then RD, if they are not satisfied, they will reject. If they are satisfied, pass an order. Then once they pass an order, company should now convene general meeting and pass special resolution and file to ROC, and ROC will give a fresh certificate of incorporation. Two additional points which you need to learn over here is within 2 weeks of applying to RD, the public should also know, no, I am no more a Section 8 company. So in newspaper and website, in 2 languages, English and vernacular, they have to publish within 2 weeks of filing to RD. And compliance wise, annual return and financial statement, nothing but our 92 and 137 should be complied up to the previous year, not last 3 years, not last 5 years, should be fully complied, guys, should be fully complied. So if this happens, your Section 8 company conversion is fully done. Next, let me go to doctrines, ultra vires, indoor management and constructive notice, guys. Now coming to these doctrines, guys, since most of you will know this in foundation, I will be a little quick over here. First, doctrine of ultra vires, very simple. What doctrine of ultra vires is saying? Every company has an object clause. Okay, company can do only what is there in this object clause. If you want to alter this object clause, what they should do? We have to pass a special resolution. That's it, very simple. But without altering special resolution, if you do anything which is not there in the object clause, then such a transaction is called ultra vires the MOA, ultra vires the MOA, and this principle is laid down in doctrine of ultra vires. That means what they're trying to say, summary, if something which is not there in object clause, if you do that, then that becomes ultra vires of your MOA, and that entire transaction will be void ab initio, guys. Next, 2 other doctrines that we have, important ones. Doctrine of constructive notice. Simple. What is doctrine of constructive notice saying, guys? Doctrine of constructive notice says few public documents of the company like MOA, AOA, etc. These public documents, every person entering into transaction with the company would have read and understood the same documents. So tomorrow, for example, if a new creditor is entering into transaction with me as a company, I don't have to give him my MOA and AOA. My assumption is you already read and understood. Therefore, that is a defense for the company against third party. So tomorrow the creditor cannot come and tell, hey, you don't have power to take the loan in MOA, OA. How did you take it? The director is not having the power. How did you take it? You should have read and known. For me, it's a defense that what is there in MOA and AOA, you should already know. But for this, there is an exception. What is the exception? For example, company is saying for taking a loan more than 10 lakhs, they should have passed a board resolution. This is there in the articles of the company. Now, third party is my bank. Now, bank should know that company, as per the articles, for more than 10 lakhs, they should pass a board resolution. If bank does not know, it's a defense for company against the bank. So, bank only will be in trouble. But bank knows this. Whether they actually passed, how do I know? Whether the company actually passed, how do I will ask them, they will tell, yes, that's it. So, exception to doctrine of constructive notice is your doctrine of indoor management. Defense for third party. Third party bank is saying, yes, company has to pass board resolution as per articles. But did they actually pass? What happens internally in the company is not in the purview of the third party. I can't know what if they're actually done. If I'm aware of the procedures, it's enough. Whether they have actually done the procedures, I am not relevant. Are you following, guys? So, the first thing, doctrine of constructive notice, for that, it's defense for company. For this doctrine of constructive notice, the exception is what, guys? doctrine of indoor management, which is defense for third party. Now, this doctrine of indoor management again has some exceptions. For example, the bank over here, what I told you, the bank over here knows that company has to pass a board resolution. So I left it. Doctrine of indoor management, defense for third party. According to me, the bank, I am the third party. Company is supposed to pass the resolution. Correct? Company is supposed to pass the resolution. But I have a suspicion that they did not pass. I have a doubt. Or I know they did not pass. By knowing they did not pass, I am still entering into transaction with the company. If you have knowledge of irregularity or if you have suspicion of transaction, knowing that they should pass, but still now you know that they did not pass or you have a doubt and still entered into transaction, this is the exception to indoor management known as Turquoise rule, which is called defense to the company again. So basically, constructive notice exception is indoor management. Indoor managed exception is again going back to top. So in the first case, in which case guys? In the first case, who's having the defense? Company has the defense. In the exception to indoor management also, defense has the company. So, company has the defense, sorry. In the first constructive notice and exception to indoor management, company has the defense. Company should be like, you know we should pass. You also know we didn't pass. Then why did you enter into transaction? Are you getting it? I am the company or the bank. Here, I am saying, hey, okay, you know I should pass. Here, you thought I passed and left it. Okay, fine. But here, you knew I didn't pass and still you were silent. So again, I get the defense because you were not prudent. Are you following? What are the other exceptions, sir? Knowledge of irregularity, suspicion of transaction, forgery, doubt as to existence of agency, and precondition is required to be fulfilled where the company itself can exercise a particular power. These are the exceptions. I know doctrines, I should be spending a much more time. For those who know what is doctrines, this will be a revision. For those who don't know, you need to spend more time, guys. Next one is alteration of articles and entrenchment provision. Very simple. Look at this. If you want to alter articles, you just have to pass a special resolution. If it is going to be private to public, very simple, remove the restrictions of private and remove the restrictions of private, it becomes converted. Simple. But public to private, big company of public money is becoming private, then you have to get permission of central government, which is now delegated to regional director. But I am not discussing that. I am discussing entrenchment provision. Sir, what is this entrenchment provision? For special resolution, we need 75% or more, correct? Now, entrenchment provision means something which is more restrictive than a special resolution. I am saying, hey, I am the director in the company. To remove me, you need to pass a 90% resolution. Okay. Now, I need to pass a 91% resolution to remove me. This is more stricter than special resolution. How to add this? Such provisions can be added at the time of formation of the company. When you are forming the company, you can easily add it. Or later if you want to add it. Subsequently, if you want to add. For a private company, if you want to add an entrenchment or remove entrenchment, unanimous resolution is sufficient. You have to pass that minimum. But for a public company, if you want to add entrenchment or remove entrenchment provision, then special resolution has to be passed in the general meeting. Special resolution should be passed where, guys? In the general meeting. Are you all with me? Clear? Next, tribunal order in case of false incorporation and section 20, 21, 22 can come with Nidhi combination also. Follow? Let me go for section 20, 21 and 22. Okay. Okay. Let me start off first with tribunal order. This is the detailed process of incorporation. I am not going through that, very much part of the syllabus. But in the process of incorporation, if the company is giving wrong information and they got incorporated, for example, directors involved in fraud did not disclose, tribunal found this out later, then the tribunal can order the following: regulate the management, change the directors, alter the MOA and AOA for benefit of the stakeholders like company members and creditors. In this case, you did fraud, so liability becomes unlimited. Or, hey, you did fraud, I cannot change your management. I am not comfortable with that. I can't make you. I just want to close you fully. Remove the name from the register of members. You are no more a company or order for winding up. So basically, what tribunal can do, guys? It can first either regulate the management by changing MOA. Easy one. Or liability becomes unlimited. You become unlimited company, or remove the name itself, or lead to winding up. Look at this. Lenient, little strict, very strict, very, very strict, or any other order it may deem fit, guys. Coming to last three sections, 20, 21 and 22. Execution of negotiable instruments. Sir, what is negotiable instruments? Bill of exchange, promissory note and check. Who will sign this? Who will sign this? Very simple. This is like a, what to say, song. Company having common seal. Yes, I will use the common seal. Put the chapas case. No, sir, company is not having the common seal. Okay. Do you have same CS, common seal, but different abbreviation? Company is having company secretary. First, company is having common seal. No, sir, no common seal in the company. Sorry, company is having common seal. Yes, then common seal will be used. No, sir, no common seal is not there. Then do you have company secretary? Yes, then the CS plus the director will sign. Sir, CS also not there, sir. No problem. Every company should have minimum 2 directors. 2 directors will sign. So repeat with me, guys. For execution of negotiable instruments, bill of exchange, promissory note and check. Company has common seal? Yes, use common seal. No common seal? CS plus director. No CS? 2 directors. The same thing will also be used for executing share certificate in your share capital chapter, guys. Next, this is execution of negotiable instruments, section 22. Reverse. Execution of documents like rental agreement or any other agreement the company is entering. How do I execute this? Document should be signed by any key managerial personnel of the company, KMP, or the officer or employee if he is authorized by the board. So simple, KMP will authorize. If not KMP, any other officer or employee who is authorized by the board. Board itself is telling no. What's your problem? Sir, board is authorizing employee. Security to put seal. Yeah, it's okay. If board is authorizing him, he will put the seal, guys. Sir, who is the KMP? Sometimes they ask me who is the KMP also. CEO or managing director or manager. CS, whole time director. CFO or any one person. One level below the whole time below directors. One level below directors who is in whole time employment. This, no other option. You have to mug up, guys. Simple. Managing director, manager. CS, whole time director, CFO, and one person, one level below. Basically, if you look carefully, these are the people who generally sign the FS under section 134, guys. Last one, section 20. This only came in exam for 6 marks in one of the recent attempts. Serving of documents from ROC to company or from company to ROC and members. Simple. If ROC has to send something to the company, I am company, ROC is in Chennai or Coimbatore, they will send by registered post, speed post, courier, or they can come to my office and leave it, or electronical mode. Now, if company has to send to ROC also, same thing. Registered post, speed post, courier, all of this. What is the catch here? If company has to send to members, the same thing is there. Plus, if any member is specifying a particular mode, hey, I want in WhatsApp, then we will send in WhatsApp, guys. We will be sending it in WhatsApp. Are you following, guys? Exception to Nidhi company, what they are saying. Anyway, I will always keep uploading a separate video for Nidhi company. There I will be discussing all the provisions of Nidhi company. But quickly over here, serve the document only to members of Nidhi company who are having 1,000 rupees or more of the face value, or more than 1% of paid up share capital, whichever is less. They are saying don't waste money. If somebody has 2 rupees face value, don't send him notice. Minimum he should have 1,000 rupees face value in Nidhi company, or 1% of total paid up share capital, whichever is lesser, then only you should send to them. Otherwise, what they are saying, this document will be given in the newspaper. You can come and see. It will be given in the newspaper, guys. This is section 20, 21 and 22. With this, we are done with all the concepts of incorporation of company, except for shifting from that state to state, which I will quickly finish now. So now we are in the final discussion, shifting of registered office within the state, but ROC is changing, and the next one is state to state. Both are detailed procedures. First, let me give you the timeline. Then what I wrote in red here are the key points which are common for both. And lastly, I'm writing a few points which are unique only for state to state discussion. Of course, state to state is a little more detailed procedure. First, if it is within the state or state to state, company has to pass board resolution, special resolution and file to regional director. Let me finish off within the state ROC change. Let me write here ROC to ROC change. Okay. So within the statements, board resolution, special and file to regional director for the purpose of shifting. Now regional director will decide within 15 days, but he will communicate the order to us only after 30 days. It's a very unique provision given in the rules, guys. So again, once I file to regional director to shift from, let's say, Chennai to Coimbatore, he will decide within 15 days, but he will communicate the order to me within how many days, guys? 30 days. Once I get the order, within the next 60 days, if I am the company shifting from Chennai to Coimbatore, once RD gave me approval, within the next 60 days, I have to file to ROC, and ROC will give me a fresh certificate of incorporation. So let me explain the steps again, guys. Very simple. What are the steps? First, I have to pass board resolution, special and file to RD. RD will decide within 15 days, but communicate the order to me only within 30 days. Now, once I got the order of RD, within the next 60 days, I will intimate ROC, and ROC within the next 30 days will give me a fresh new certificate of incorporation. State to state, it's much more simpler. Same board resolution, special resolution and file to regional director. Here, RD, because it is state to state, they have to discuss with multiple states. So they will respond to us within 60 days. So pass board resolution, special and then you file to RD. RD will give us the order within 60 days. Once I get the order from RD within 60 days, in next 30 days, I will file to ROC. Let me again repeat the state to state, guys. Board resolution, special and file to RD. RD will give me order within how many days, guys? 60 days. And once I get the order from RT within 60 days and within the next 30 days, I will file it to whom, guys? ROC. ROC will give me the fresh certificate of incorporation. Are you following, guys? So here it's a 60-30. Here it's a 30-60-30 tab. Are you all with me? I want you all to keep repeating. Even though you are watching from your house, just keep repeating with me, guys. Now, in both the applications to RD, certain confirmation should be given by the company. What? Creditors' consent. Creditors have given their consent for shifting. That is one. No workman dues is pending. All the workman dues are paid. Otherwise, company will be like running away. Correct? No change in legal cases. Let's say I'm shifting from Tamil Nadu to Jammu and Kashmir. I have so many legal cases pending here. That's why I'm jumping to Jammu and Kashmir. No, you can jump. There should be no pending cases. Or if cases are pending, you cannot change the jurisdiction. The cases should still continue in Tamil Nadu. So you can shift, but the case should continue in Tamil Nadu. Or if you're shifting from Mumbai to Pune, if there are any case pending in Mumbai, you should still continue the case in Mumbai. And lastly, you should get permission or inform the chief secretary of the state that employees of the company are not affected, guys. Who is not affected? Employees of the company are not affected. So quickly the attachment will have common for both the cases. Creditors' consent, workman dues are paid, no change in legal cases if any pending in jurisdiction, and chief secretary that employees are not affected. I am not terminating any employee. Then you will give a newspaper ad as usual for the shifting. This is common for both. With this, within the state, ROC to ROC is done, guys. Now, state to state, some more extra points. Within the state, we had only creditor. Here, you should also get consent of the debenture holders, and this list of debenture holders and creditors should be a list not later than 30 days, guys. It should be a latest list not later than 30 days. Then, when you are making application to RD, you should also make a declaration by KMP and 2 directors that all the information I'm giving is correct, or CS or 2 directors should sign the creditors list is true and fair. So KMP and 2 or plus 2 directors will sign that all of this is done correctly. Apart from that, we will also call our CS friend or 2 directors. This same 2 directors will sign the authenticity of creditors list. Yes, it's correct creditors list. We have not missed out anybody. I am not doing any scam. And lastly, over here, additionally, they've added, if any enquiry or investigation under the Companies Act is pending, any enquiry or investigation is pending, you cannot shift. See, above, if legal case is there, you can shift, but for case you have to come back to old court. But here, if any investigation is pending, you cannot shift, guys. So in 5 minutes, I have summarized within the state and state to state. So with this incorporation of company, all the concepts are done. Let's move on to the next chapter, guys. Yes, we initially thought it will take less time, but we are going in detail, revising the whole syllabus, guys. So even if it takes close to 7 hours, it's completely worth it. So ensure you watch it till the end. If not now, sometime you watch it before the exams. It will add value, guys. Now let's go to the expected question marathon for prospectus chapter, guys. For your September 25 exams, this chapter is little less important. Why, sir? In May 25, it was massively tested for close to 15 marks. Does not mean this time it won't be tested. The weightage will reduce. Let me go in the same order of questions I have given over here. First is shelf prospectus or red herring prospectus. Sir, what is shelf prospectus? Very simple. I'm only going to focus, like I said, on key words and key points for exam. Shelf prospectus is basically a prospectus. Once you issue, it has a validity of 1 year. That's why section 31(3)(1), the 1 stands for 1 year validity. Valid from which time? From the date of issuing prospectus or from date of first offer? It is from the date of the first offer. Maybe I issued the prospectus today, but the first offer is only next month. Then the 1 year starts from next month. During this 1 year, how many times I can do, guys? I can do any number of issues during this 1 year. But every time you are doing an issue, for example, I'm doing an issue on 1st October. 1 month before that, I have to issue something called information memorandum, and this information memorandum will contain all material information or changes in it. For example, if any charge has been taken by the company, all that will be given over there. I am a shareholder. Can I give money in advance itself? Yes, calls in advance is allowed. And if you give calls in advance, company will use it and treat it just like other calls in advance. However, if the shareholder wants a refund of that, if he requests for the same because of change of information or circumstances, you have to refund the same within 15 days, guys. Sir, what is next? Red herring prospectus. The immediate next section 32 is red herring prospectus. That is a prospectus which is used in a book building issue. In book building issue through red herring prospectus, quantum of shares or price per share is not given. Quantum of share means, for example, they are saying 1000 shares. Okay, 1000 shares are there. That number will not be given. Okay, quantum of shares 1000 or price per share, let's say into 100 per share. This breakup is not given to us. Once you issue red herring prospectus, sir, what is important for exam? The purpose of this is to determine the price by the market itself. Market will determine the price. Now, what you should do, once you are going to issue red herring prospectus, that should be filed to the ROC 3 days before the offer. Before the actual offer is going to open to public, 3 days before, this RHP should be filed to the ROC. And after the offer is closed, after closure, for example, offer is open for minimum 3 days, October 1, 2 and 3. 3 days before October 1, you have to file it to ROC. And after the offer is closed, after October 3rd, if there is any difference of information between the RHP and the final prospectus and details of number of shares and price per share should be filed to ROC and SEBI, guys. This is with respect to red herring prospectus. Next concept that we have here, I will come back to definition of promoter in the end of this discussion, guys. Next is fraud. Fraud had amendment quite some time back, but ICA has not tested this. It is section 447 which comes in multiple places. Very simple. 447 tells only one thing. The act itself always tells what you are doing. Is it involving public interest or not involving public interest? Simple. If it is going to involve public interest, punishment is high. Imprisonment minimum 3 years, maximum 10 years. And fine, minimum amount involved in fraud, maximum 3 times the amount involved in fraud, guys. This is if there is involvement in public interest. Now, how to remember these limits? Don't worry. If it does not involve public interest, they are giving two limits. Let me take the bigger limit. Bigger limit, fraud is more than or equal to 10 lakhs or 1% of turnover of the company, whichever is less. I have to compare both. Sir, fraud is 12 lakhs. Okay, fraud is 7 lakhs, 1% of turnover. I should keep both. For example, what I should do? Let's say the fraud amount which is done by the company comes to 7 lakhs, guys. Now it is not more than 10 lakhs, but I have to compare with 1% of turnover of the company. Let's say the 1% of turnover of my company is only 5 lakhs. So the fraud amount of 7 lakhs is not more than or equal to 10 lakhs, but it is more than 1% of turnover of the company. Therefore, it falls in this bucket. Are you able to follow, guys? It should be higher of anyone, either 10 lakhs or more or 1% of turnover of the company. If it is a bigger fraud, again imprisonment. Look at the difference here, 3 years to 10 years. Here 6 months is minimum, highest is again 10 years. And the fine, same as this fine of public. Minimum amount involved, maximum 3 times the amount of fraud. That means public interest or not, penalty is the same if the fraud is higher. Only difference is imprisonment minimum becomes 6 months here and 3 years there. This is how you will learn and remember. Now smaller fraud, government is not that much interested, less than 10 lakhs or it is not, what to say, it is less than 1% of turnover of the company, less than that. Then in that case, imprisonment up to 5 years, no minimum period. It can be even for 1 day, up to 5 years, and fine also not very high, up to 50 lakhs. I can even keep 5 rupees fine, but up to, the word used is up to. So these are the limits in section 447, guys. Next, what is deemed prospectus, underwriting commission and irregular allotment? More likely in MCQ, even can come in separate question. Deemed prospectus, again, let me go back to our notes, guys. Deemed prospectus section 25. What is deemed prospectus saying? If a company wants to issue shares to the public, they have to issue prospectus. But what some companies will do, they will enter into an agreement with a middleman. We call him as an allottee. Could be an investment banker, could be a mutual fund house, could be some other partnership firm or a company. Now this agreement is entered between the company and the allotment, separate agreement, where the company is transferring shares to this allottee and this allottee later will transfer shares to the public. So what happens? Indirectly shares of company goes to the public. If an agreement like this is made, it is called deemed prospectus if any one of these conditions are satisfied. One, the allottee guys has sold shares to the public within 6 months. That means from the time company has given shares to the allottee has given the shares to the public, and this has happened within 6 months of entering into agreement. So within 6 months of agreement, if allottee has given the shares to public, then it's called a deemed prospectus. Or the allottee, this investment bank or partnership firm has not paid full consideration to the company. The full consideration from allottee has not been paid to the company. If any of these conditions are met, it is called as a deemed prospectus, which is relevant for our exam, guys. Next, underwriting commission. Let me go to underwriting commission over here. Okay, underwriting commission will come in section 39 and 40. 40 underwriting commission, guys. Sir, what is important for me in exam in section 40? First, the underwriting commission. Underwriting should be authorized by the articles of the company. Authorized by the articles of the company. If it is authorized, what is the percentage, sir? For shares, 5%. For debentures, 2.5%. This number is the maximum amount of commission I can give. Or articles, whichever is less. So if you want to give less than 5% or if you want to give less than 2.5 for debenture, articles should mention that, and whichever is less will be given. Sir, how do I remember, sir? Very simple. Shares is what you learn first in the chapter, higher percentage 5, and debentures is 2.5 percentage. Generally, we learn so much about shares to think share is higher percentage. That's it. Some lame way of remembering percentage, but share is 5 and debentures is a smaller percentage case. Fine. Next, the source for paying this underwriting commission can be my existing profits, reserves and surplus, or now I am doing an issue. No, I am doing an issue of 100 crores now. from that issue itself I can pay underwriting commission, which is proceeds of issue. Then the prospectus should contain some details like name of the underwriter and other details of the underwriter. This should also be contained in the underwriting prospectus agreement, guys. That's it. Next one we will be going to irregular allotment. Sir, what is this irregular allotment? Let me explain. Okay, irregular allotment has been recently tested, okay, in the recent attempts, so chances are less. But basically, irregular allotment is not given in the act separately, but due to multiple case laws, this has been there. So I am taking this from our book. Same thing should be there here also. If it's, yeah, it should be there here somewhere, or let me just take it from our book itself, guys. Yeah. So what they're saying, if the provisions of Companies Act is not properly followed, like company does not issue prospectus when making a public offer, prospectus is not given, contents of prospectus or any information is misleading or faulty, prospectus not filed with registrar, minimum subscription of 90% under section 39 is not received, or that 5% of nominal value should be there if that is not received, or if you're going to list the shares, application from approval from recognized stock exchange is not received in section 40. If you don't receive the approval from recognized stock exchange has to give that approval. If that is not given, then in these cases we call it as an irregular allotment, where the allotment is not valid, guys. Any of these cases, so basically the core provisions of this chapter, if it's not followed, it becomes an irregular allotment. Next, 29 demat and 28 offer for sale. Let me quickly cover that. 29 demat and 28 offer for sale. Now 29 demat says all the shares of the company should be in dematerialized form, even if it's private or public. If it's not there in private or demat form, then such company cannot do the three most important benefits which is given to shareholder: rights, bonus and buyback. Not possible unless it is in demat. Then this demat is maintained by depository. They can't do for free, no, you have to pay them. So yearly you have to pay fees to depository, and apart from that, security deposit of not less than 2 years should also be paid. So you have to pay security, like how for rental house, sometimes you pay 2 months rental advance, 6 months advance, some Bangalore means you will pay 1 year rental advance. Like that here, security deposit of 2 years should be paid and yearly fees should be given to depository. Then if there are any grievance, that grievance can be, if grievance should be addressed, every company, not all the shares will be in demat. If I have 100 shares, 90 may be in demat, 10 may be in physical. That reconciliation should also be prepared by the company every year, so that we can explain why it is not in demat for certain number of shares. And lastly, money for the CA and CS in this section. Every year we have to file a PAS 6 to ROC within 60 days of conclusion of half year. One financial year is April to March. So after every 6 months, from the end of that year, end of that half year, within 60 days. When does the first 6 months get over? April, May, June, July, August, September. So once September 30th hits, within the next 60 days, October and November, before the next 60 days, a CA or CS should file a PAS 6 to ROC for this demat reconciliation and all these details, guys. So these are core details in section 29, where shares are in demat. Next to 28, offer for sale. What is offer for sale saying, guys? Very simple. Existing shareholders selling shares to new shareholders. In offer for sale, I am not issuing new shares. Remember, I am not issuing new shares. For example, let's say N. Srinivasan is the shareholder of CSK, India Cements. He is now selling his shares to Ambani. Are you getting it, guys? Or I am buying the shares of CSK. So I am not getting new shares of CSK. Existing shares I am getting. For this, what they are saying, the company will help existing shareholders to sell the shares to new shareholders. For that process, company will incur some expense. Those expense have to be reimbursed. For example, CSK is incurring expense to sell the shares of N. Srinivasan to Ambani or to me. That expense which CSK is incurring, the shareholder should have to replace. Now, some provisions are applicable, some are not applicable. NA, what is not applicable for offer for sale? 39 and 40. Sir, what is 39 and 40? Don't worry. Allotment of securities. minimum subscription 90%, minimum application value 5%, that allotment and underwriting commission and application to be dealt with stock exchange. Those two provisions are not applicable, but all other provisions, 26, contents of prospectus, what all you will give contents, last 5 years data, director should sign, all those will be there. 34 and 35 and 36, criminal liability, civil liability, all those points are applicable. And 37 is also applicable, guys, which is class action suit. So 34, 35, 36, 37, criminal, civil, profit from other transaction, profit from misleading, and 37 class action suit. All these are applicable for offer for sale, guys. Next, criminal and civil liability, since it came in the latest May 25, less important, but don't skip it, because in old syllabus this used to be examiner's favorite question where they used to keep repeating this multiple times. So let me take that for you guys once over here. Criminal and civil liability. Okay. Yeah, I will get that. Before that, let me finish off the definition of who is a promoter, who is the definition of promoter as well, guys. So I will go to all of this now. So now let's go to criminal and civil liability. Very simple. There are some golden rules in framing the prospectus, which says prospectus must give the entire picture of the company. It must disclose honestly all information accurately, and there should not be any untrue or misleading statements in the prospectus. If something like this has been done, because people believe what is there in the prospectus in utmost good faith, and still if you're trying to cheat them, it leads to criminal or civil liability. What is criminal liability? I will arrest that particular person. So if prospectus includes any statement which is misleading, wrong information, my sales is 10 lakhs, I'm showing as 10 crores, or omission of any matter, the director has a case on him, criminal case, that has been not disclosed in prospectus. So if any statement is misleading, wrong information, or anything important is not disclosed, omission, then the such person who has authorized it, every person who has authorized it, liable under section 447. 447 we just now saw some time back. What is the defense available to the party who signed it? Because every person who has signed it, director, promoter, everybody who has signed is liable. He should prove that that statement which is misleading or omission is immaterial. For example, I told I'm constructing a house. I told I will paint the building white, but I painted it as light blue. That is immaterial. I should tell that will not decide the value of the property. I should prove it's immaterial. Or I should prove he has reasonable ground to believe it was true. Hey, I didn't know, pa. I relied on the expert report, so I thought it's true. Expert did fraud. Don't blame me. Or he should believe or continue to believe until issue of prospectus that omission was necessary. He said this omission was needed. There is a genuine need not to include this. If you can prove all these, not to me but to the court, then you will be exempted from the criminal liability, but not very easy because courts will take a lot of time. This is criminal liability section 34, guys. 35 civil liability, they are saying arrest and all later. Because of you, how many fellows suffered loss? So all the promoters, directors, present and even proposed directors, experts, and every other person who said I like to sign, let me go and sign. Every person who has signed the prospectus is liable to pay compensation to everybody who has sustained the loss. And if you signed with an intention to defraud, my mindset itself is fraud, sir, I am born to do fraud, then you are liable, personally liable itself, fully you are liable. Here also there are some defenses, guys. One, the director before the issue of prospectus withdrew his consent. Sorry, I don't want to be in this anymore. Take me out of it. Initially, I was a bad person. Now I want to become good. Withdrew my consent. Or it is issued without his consent. Somebody did forgery of my sign. Or I didn't know. Without me, my sign was used. And once I knew about this, I have given a public notice that it was been issued without me. Are you following, guys? Then third one, I relied on expert, sir. I relied on expert. So I am not liable because I relied on the expert. And last one, there is reasonable ground to believe it to be true. Hey, I thought it is true, pa. I didn't know it's fraud. I genuinely thought it's true. I genuinely thought every day morning, if I drink all these, supplements, I will be healthy. I thought it's true. Somebody fooled me. So if you can prove these 4 points, then it is defense for you from civil liability. Additionally, let me also leave 37, but 36, punishment for fraudulently inducing persons to invest money. This one has not been tested, guys. So let me add this, even though it's not there in the expected question list. Let me take this also, where a person induces another person. For example, I am inducing you so that you take credit from a bank, you take credit card, or you take a loan, or I am inducing you to take underwriting agreement, or I am inducing you, and by inducing you, making you buy and sell shares, with that I am earning profits from sale of securities through price fluctuations. This third point where it happens, big influencers with millions of followers will tell all their followers to buy some shares and sell some shares. Before that, they will do some transactions and earn some profit. So if you do any of this, making somebody get a loan, underwriting, or price fluctuations through securities by giving wrong information, wrong forecast, or deceptive information, then you are also liable under section 447. So we are done with criminal and civil liability. Here I want to add section 36 also. Next, the new addition 33 and 38. So these are two new concepts added in the syllabus, very much part in our syllabus. Never tested so far. Never means never. Section 33, abridged prospectus. When is abridged prospectus not needed? Abridged prospectus shall not be needed in the following three cases, guys. Abridged means shorter version of the prospectus. See, the abridged prospectus is maybe not there in syllabus, but when it is not there, see, underwriting agreement for shares. When underwriting is done, we don't need abridged prospectus. Rights issue, because existing shareholders, we don't need it. Or shares or debentures not issued to public or private placement, then it is not required, guys. This is section 33. Then 38, punishment for personalization of securities, meaning, in allotment of shares, not everybody will get the allotment. So I want to get the allotment. For that purpose, what I am doing, I am applying for that with a fictitious name, fake name, or multiple applications with my change of surname and first name and last name. Karthik Manikonda, Karthik M Karthik. Like that, I'm making changes and applying the Google form. Then if they find out, then you will be liable in this section. And lastly, induces to company to allot under fictitious name. My name is Karthik, but I'm applying in some fake name, let's say Ram, or whatever, some fake name I'm applying, guys, fictitious name, I'm using somebody else's name, like that, then I will be liable. Are you following, guys? So applying in fictitious name, or inducing company to allot to fictitious name, or changing my name. So basically, anyone uses dummy identity to get the shares, or multiple name changes in their own name, they will be liable for personalization, because I am one person but trying to be multiple person. Consequence of above, what happens? The person getting allotment is liable. The court will ensure that the allotment becomes void, and if there is any gain which came due to this allotment to the shareholder, that gain will be transferred to IEPF, guys. With this, all questions done except definition of promoter. Let's go to that. So what is the definition of promoter, guys? 2 subsection 69 defines the definition of promoter. Promoter is somebody, any of these three is met. First, if their name is used as promoter in the annual return or prospectus, if their name is used, then they become the promoter, guys. So for example, in the annual return of the company in 92, name is used, or in prospectus that name is used, means whoever they are, whether they're related to company or not, but if their name is used, they become promoter. Second, control over the company directly or indirectly. I have shareholding or some kind of a control, then like let's say more than 50%, or let's say you're an associate, some kind of a control over the company directly or indirectly. Mainly this relates to holding subsidiary relationship. And third one, in accordance with whose directions or instructions board is accustomed to act. This also is again holding subsidiary, other relationship. So point 2 and 3 is nothing but your holding subsidiary. So what are the 3 important points here, guys? Name mentioned in annual return or prospectus, control of the company directly or indirectly, in accordance with whose directions you are accustomed to act. For example, in CSK, India Cements has control through shares. That is point 2. In CSK, Dhoni does not have any shares, but he has control over the board through his instructions, and his instructions board are accustomed to act. So Dhoni will become a promoter in point number 3 if in his instructions board is accustomed to act, guys. That's it. With this, we are done with all the questions in promoters expected question marathon, guys. Let's move on to the next chapter. Now let's do a quick expected question marathon revision for charges chapter. Now charges chapter, I will not say it's not important, but it's little less important for our September exams, because in previous May exams, this was tested for more than 10 marks. So this time the chance of that being repeated for more than 10 marks is very, very low. Does not mean you have to skip this chapter, because easily one question we can expect charge separately or charge in connection with deposits or some other chapter. Now this is actually a very, very small chapter. If you have the time, you can revise the entire chapter itself. It's not worth taking the risk of skipping concepts in this chapter. But as per our expected questions, we will revise the provisions in this expected questions. First 81 or 85, I mark it as important because this is the only section which is not yet tested in this chapter. If I go to 81 or 85, very simple. 81 says register of charges to be kept by the registrar, meaning those register of charges for creation, modification, satisfaction, rectification, all that should be maintained by the ROC. Should be maintained by whom, guys? ROC should maintain it, which is nothing but the central database which is there on the MCA website. That's it. What about 85? If ROC is maintaining a register, me being the company, I should also maintain one register. Are you understanding, guys? I should also maintain one register. Therefore, every register in this chapter will be maintained in CH7 at the registered office of the company. What kind of details will be here? In creation of charge will be there, fixed or floating. Then subsequent section 79 modification, and 82 and 83 satisfaction of charge. So basically creation, modification and satisfaction will be there over there in this. And security will maintain this. No. Whoever is maintaining it has to be authenticated by the top management. Who is the top management? Director or secretary or any person who is authorized by the board of directors. Now, who can inspect this? Members can of course inspect, but beyond members, it's a liability. So who is more interested? Creditor. So member or creditor can inspect this during the business hours without any fees. Others, some third party, if I want to randomly go and inspect the register of charges by Zomato company, then I have to pay the nominal charges which is there. Now the most important thing over here, which I feel can be a question in our exam, is register of charges will be preserved permanently, but instrument creating charge is only for 8 years. Let me explain this point alone little bit in detail. I have a register. Okay. In this register, I am noting down from the time company has been incorporated till today, what all charges has been created, what all has been removed. Correct? That register should be maintained permanently. But when I create a charge, they will give a proof. No, like one certificate. They will give a certificate which is an evidence that the charge has been made. So that certificate, instrument creating charge or modification, that will be maintained for 8 years. I hope you are following, guys. It's more like what all notebooks you had in class 5. For that one index you will have, no, that index maintained permanently, but that notebook you can throw it after 8 years, but we keep it for memory, guys. That's separate. Now come back. Next is section 80, date of notice of charge. Easy concept, but examiner has tested this multiple times in the exam. For whatever reason, he likes this 80, date of notice. Very simple. Let's say I am going and buying a particular house in Bangalore, guys. Or let's say I have a dream to buy a house in Kodaikanal. So I'm going and buying a house in Kodaikanal. Later I realized this house, already on loan is there on this house. Ayo, I didn't know about this. The seller who sold to me did not tell me. Now I can't fight with him, because when you are buying as a buyer, doctrine of caveat emptor is there for movable goods. Like that for immovable goods over here, and for movable goods, as a buyer, I should be aware if any charge is taken on a particular asset. So they are saying when a company creates a charge, it is deemed that he has knowledge of the charge from the date of registration of such charge with ROC. That means, see, with ROC, everybody is registering the charge. So it is my headache to go and check with ROC. If I don't check it, it's my mistake. If the party is not aware, then the company is not responsible for the loss. Are you following, guys? Clear? This is basically nothing but doctrine of constructive notice. Charge is a public document. So everybody transacting with the company is deemed to have knowledge about the charge, guys. Next, modification of charge, section 79. or 77, creation of charge and other provisions in section 77. For this, let me go to our Gen Z notes. 77, I have simply easily finished it over here. See, I am using Gen Z notes or our material based on the section, guys. Okay. Anyway, if you want Gen Z notes, there is a separate Gen Z notes marathon. Follow. First, when you create a charge, you will register it within 30 days. Who has to register it, guys? The company, not the bank. The company will register within 30 days. If company fails in 30 days, then they should do in the next 30 days with additional fees. If that also they fail, in the next 60 days with ad valorem fee. So the timeline is 30, 30 and 60. Ad valorem fee is a percentage on the amount of loan. Therefore, they become scared and they try not to get over here. Next, sir, for an asset, I have taken multiple loans, sir. I like taking loans. I may be like Adani, I take a lot of loans. Now, it's okay. You can take a lot of loans if you can repay. That's it. Now, the point is, for the same asset, if you take multiple loans, now, which loan or which bank has the first right? It is not the date of loan. It is the date on which who registered it first. So, who registered it first will have a right over someone who registered it subsequently. Sir, I have given a secured loan. I have taken a secured loan, but I did not register. Then it is treated equal to an unsecured loan. Then when it will become secured loan, whenever you register in the future, that time it becomes a secured loan, guys. Next, the buyer, when asset is sold, let's say for example, this iPhone I have, okay. Now this iPhone, let's say I purchased on EMI basis. Now after 6 months, I don't like this. So I'm selling this to you. You purchased it, okay. When you purchased, you didn't know this iPhone had a loan. I created a charge also on this. Section 80, I have defense against you. Later, when asset is transferring to you, now you have to repay the loan. So the new buyer has to register this charge. Are you following, guys? Next, verification of documents. Very important in this section. Verification of documents, if you see, if the property is located outside India, wholly outside India, the property can be outside India, then it can be verified by either by using option A, option B or option C, company's choice. Option A is, it shall be verified by the certificate under seal of the company. So in option A, company is going to put its seal, company seal. In option B, under the hand of the director or director of the company or company secretary of the company or an authorized officer of the charge holder. So here, what they are saying, charge holder, somebody from the bank will be doing it. Are you following, guys? So in first, company seal. In second, some other or an authorized officer of the charge holder or an employee, director or the company secretary of the company, guys. Basically, key employees in the company or charge holder. And third option they are giving is under the hand of some other person other than the company who is interested in the charge. For example, this is the fourth loan on the asset. Some other bank who has done the third, second or first loan, they can do the signature or verification. Are you following, guys? I am already fourth in queue. Somebody before me already validated SBI, so I can take it. So for example, what to remember, the company can do by itself or any key employee in the bank, charge holder or the director or company secretary of the company or any other third person who has interest in this particular charge. Now, if the property is located in India, fully in India or partly in India, partly outside India. How, sir, partly in India, partly outside India will come, flight keeps coming in and going out of India. So in this case, they are saying follow method B. What is method B? Any director or company secretary of the company or the authorized officer of the charge holder, which is the bank. Are you following, guys? That's it. You will be with option B. That's all. Stop the answer over here, guys. So with this, we are done with section 77. Next time I go to section 79. 79, guys. Modification of charge. Remember that after you take a particular loan, there are chances that that loan that you have taken will go for a modification, not in our control. Correct? So if at all a modification like that happens, what kind of modification will happen? For example, change in interest rate. Initially, I took the loan at 7%. Now I'm changing to 9%. Changing the terms and conditions of the existing charge through an agreement. Earlier, I thought, okay, for example, asset has these terms. For example, interest will be paid like this. I'm changing a lot of terms and conditions. Next, modifying or enhancing decreasing limits. I thought 10 crores loan, I'm making it 12 crores, or 10 is becoming 8. Next, partial release of charge on particular property. I gave a bungalow for charge, ground floor, first floor and second floor. Now half the loan is repaid. Why should I do charge of the entire property? Release the ground floor. I will use it for some other purpose. Or change in repayment schedule. What I'm supposed to repay in 5 years, I'm now repaying in 7 years. So these kind of changes leads to a modification of charge, guys. Now what do you mean by modification is done by creating pari passu charge? If there are 3 charge holders, we will call them A, B and C. Imagine they registered in the same order of A, B and C. A registered first, B registered second, C registered third. So who will get payment first? First A will get, then B will get, then C will get. Now if I'm making a pari passu charge with everybody giving consent, there is no more first, second and third. All these 3 will be getting on an equal basis, guys. Will be getting on an equal basis. That's called converting a charge into a pari passu charge. Now what is important over here? 2 things are not modification. ICA likes to test like this only. I know what is already there, sir. What is already there? Change in interest rate, terms and conditions, decreasing, increasing limits, release of any asset to an extent, change in repayment schedule, pari passu. But what ICA will ask you, what is not a modification other than bank rate? Sometimes RBI will change rate for all the banks and for all the customers. Such a change of rate is not in my control. So that is not a modification of charge. And in case of working capital loans, the nature of working capital itself is to go up and come down, go up and come down. So for working capital loans also, it is not what, guys? A modification of charge. This is the summary of modification of charge, guys. So we are done with 79 and 77. 78, duty of charge holder to register the charge. Now, if you take a typical transaction of, a charge, 77 says the company has to register. But if company is not registering, who is going to suffer the loss? Bank. The bank is the charge holder. So 78 says where the charge holder will register if company fails. Company has the first 30 days time limit. So in the first 30 days, if the company fails, I can either wait for the next 30 and next 60 days. But instead of taking the risk, if the charge holder can register by himself, if the company fails after 30 days, they can register whenever they want. They will apply to ROC. What ROC will do? I need to cross check with the company. For example, if my SBI is the charge holder, sending a letter to ROC saying that Adani took a loan from me. ROC can't believe SBI just because it's a nationalized bank. So what ROC will do? It will send a notice to the company, to whom? Adani. And it will wait for 14 days. Within these 14 days, if Adani, the company, replies with whatever response they give, they will proceed. If they don't reply, then I will proceed and do the registration. The same thing over here, guys. Look at this. Usually company has to register. If they don't do within 30 days, then the charge holder will make application by themselves. After that, registrar will register the charge within 14 days after giving notice to the company, and to ensure that no objection is received. Registrar will not register the charge when in these 2 cases, company itself registered. Okay, fine, no need your application. Or company is giving a show cause notice as to why the charge should not be registered. Adani is saying, no, I never took loan from SBI. SBI is simply saying this. But in this 14 days, if the company is not responding, if company is silent, then ROC has no other option than to go and register. So logic is very simple, guys. Here, I want you to apply it logically. What is the logic here? When you apply to ROC, ROC will send the notice and wait. If you respond, based on the response. If you don't respond, I will proceed and register, guys. That's about it. With this, we are done with also section 78, duty of charge holder to register the charge. These are the expected questions for exam, guys. Bare minimum, learn this and go to exam. That's about it. We will move on to the next chapter now, guys. Let's start off with the expected question for deposit chapter, guys. The expected question marathon, of course. Deposit has been tested less in the previous attempt, and it's been tested for 5 to 6 marks. I won't say less, it's been tested normally. Since charge came for more marks, This time if they want to shock you, they may shock you by giving deposits for more marks because people don't focus. And in this, which I don't expect it much in the exam, is what is not a deposit. There are those 14-15 points asking what is a deposit, what is not a deposit. That is little less important. Why, sir? Came in the recent exam only for 5 to 6 marks. So chance of repetition for our September 25 exam is a little less. What chance is high? Circular for deposit issue and its validity. A very old concept, not tested for a long time. And procedure to accept deposit from public by eligible company. That eligible company, they have that limits is there. They have not asked that. So that process they won't ask in detail. In this process, any one small point, like small concepts within this, like for example, they will ask you what is the percentage. They will give the paid up share capital, all of that. They will tell compute the percentage. I'm giving for public 25% or government 35%. Like that, variation combinations will come. And within that, deposit from members, when to issue deposit receipt, when to make entry in register, 7 days, 21 days. If deposit is not given, repaid within time means 18% interest, duration of deposit, all this will come. So since deposit is a chapter where everything is interlinked, I won't say don't skip what is not a deposit. I mean, you should not skip it. So I will quickly revise that for you guys. So since it's a very small chapter, in about 20 minutes, let me revise the entire area. But you know what to focus on. These things what I have marked here, we will be focusing on that, guys. So let's start off with the revision of deposits. I will just plug in an existing video. It's not video I've taken long back ago, sir. Just a few weeks or few months ago, I would have taken the deposit. I'm just plugging it over here. So it becomes overall a value add for you. Hi guys, welcome to the Gen Z revision of deposits chapter. We'll try to close in 15 minutes. Now, deposits, if you see, there are only two major questions. First, they will ask you what is not a deposit. You have to remember list of 14-15 things and whether it's deposit or not a deposit. Second thing is procedure for deposit. There are some many key points over there. What are the limits, etc. We will go through, guys. Okay, let's start off. Of course, our book is there, but in Gen Z, I'm just using these handwritten notes. What is not a deposit? They have given list of many things. Basically any type of loan. First, let me give you context. Any type of loan that you get from any party or advance from government outside India, government department, private companies, public companies, banks, these are not deposits. So look at this. They are saying amount received from central government or local authority is not deposit. Money guaranteed by central or state government is not deposit. From foreign banks, foreign government, public financial institution, debentures or bonds, listed non-convertible debentures, all these are not deposits. Are you following, guys? Because these are debentures, it's not deposit. Next, they are saying, coming to application money point. If you remember application money, we have section 39 application money and we have private placement. In private placement, they are saying money should be allotted within 60 days. And then if not, you have to refund within 15 days. Correct? That means I totally have 75 days. I totally have 75 days to refund. Correct? To allot and refund. If I don't allot and refund within 75 days, from 76th day, I will call it a deposit. Same thing in section 39. You have to allot within 30 days. And 15 days you have to refund if you are not allotting. So they are saying I will treat as deposit from the 46th day after expiry of 45 days. Next they are saying in case of a private company, directors or relatives of directors giving loan is not a deposit. So director giving loan to deposit or directors relatives giving money to director is not a deposit. These points are something like this only. You should just know what is deposit, what is not deposit. Next point, amount held in trust. I simply gave you money. Keep it as safekeeping. I will come and take it. Bank locker. Keeping in bank locker is not a deposit. I'm talking about locker facility. Okay. Next, look at this. Sometimes they will tell promoter should give loan to the company as a condition so that they can get loan from some other bank. They will tell the word, use this stipulation. Promoter has to give loan to the company, only then bank will give loan to the company. As long as this bank loan is there, promoter loan will not be treated as deposit. But once the bank loan is repaid, promoter loan should also be repaid.
Are you following, guys? Next, security deposit, contract of supply of goods. Sometimes for some goods and let's say I'm ordering 100 kgs of sweets, I have to give some advance. These kind of security deposits are not deposits. Okay. Advance for subscription. Now, for example, sometimes when you get this Mint magazine or Netflix, sometimes you will pay for Netflix 1 year in advance. Sometimes Apple Care warranty, we will pay for 1-2 years in advance, correct? So let's say for any kind of subscription, Hindu newspaper, etc., any subscription, you can adjust against the receipt of such thing. So advance or subscription is not a deposit, because the entry for advance is bank account debit to advance for sales. That is not a deposit. Advance for consideration for future services. Sir, AMC, annual maintenance contract, all those future service I am paying now itself. Sir, college fees I am paying now itself for next 2 years. All these are not deposit, but here they are saying advance for future contract. Here they are saying basically 5 years or terms of contract, whichever is lower. That means they are trying to say maximum advance you can pay is up to 5 years. It cannot go beyond that. Then they are also saying one more point, received by sectoral regulators. Sir, I am paying advance tax for income tax department. For TRAI, I will pay some, what to say, commission or some security deposit. So sectoral regulator, government department, what you are paying from central government, state government directions, I will not consider that. Next, now for sale of goods, sometimes you will give some advance for goods and services. Let's say for school fees, you paid advance, balance you will pay after the first semester or after the first year, first 6 months of school. That time they are saying the advance paid should be apportioned within 6 months. Okay? I'm sure you know this point. Advance paid should be apportioned within 6 months. That means first entry, bank account debit to advance for sales, and second entry, advance for sales to sales. These two entries should be adjusted within 365 days. Same way for capital goods. Sir, I am buying immovable property. Sir, capital goods, I am buying house, etc. For buying house, you have to pay advance. Correct? That house advance, immovable property also, what they are saying over there, they are saying you should adjust it as per the terms and condition that is there, as per the terms and conditions. Then they are saying for these 2 points alone, guys, this 365 days point and for capital goods, assume the seller loses the license to provide that, meaning I paid advance for buying some medicines. After that, that medicine company lost the license. Now he has to, that advance has to be refundable. Advance is refundable. So they are saying once the advance is refundable, once the money is due, I will wait for 15 days. So basically I gave advance for provision of service. Provision of service never happened. So now that money is due, that money is refundable, I will wait for 15 days. If within 15 days if money doesn't come, then that also is treated as a deposit. Are you following, guys? So this 15 days point is very important. Then last important set of points, any money received, mutual fund collecting money, chit fund or nidhi company. Mutual fund, chit fund, nidhi company, repeat with me, all these are not deposits. Any collective investment scheme or real estate infrastructure trust also is not a deposit. Next very important point, if a startup is receiving more than 25 lakhs from a single person in a single tranche, then this is not deposit. Okay. But if startup is receiving less than 25 lakhs, it becomes deposit. Or startup is receiving from single person in a single tranche. Sir, I am getting, let's say, 5 crores, but I am getting daily 10 lakhs. Then it becomes deposit, because it is less than 25 lakhs. It has to be more than 25 lakhs from single person in a single tranche. If these points are met, it's not a deposit. If the money is coming for debt, it should be repayable within 10 years. If the money is coming for equity, guys, if the money is coming for equity, then it will remain as equity, but it should be received more than 25 lakhs from a single person in a single tranche. Sir, I'm getting 1 crore, but I'm getting it 50 lakhs, not deposit. But same 1 crore, 10 lakhs in 10 installments, it becomes deposit from single person. Okay. Are you following, guys? So we saw what is not a deposit. Idea is to ensure that, okay, all these points have we covered. Next, penalty. If you don't follow provisions of this chapter, there is going to be penalty. Go through that penalty, crores, imprisonment, etc. Now coming to main summary table. Sir, what is the percentage? Who can issue how much deposit percentage from whom? This is the main one. Private company from public not allowed because private cannot get from public. Sir, private from members how much, sir? They can get 100 percentage. 100% of what? I will brief it in some time. They can get 100% of something. What is it something? I will tell you in some time. Okay. Sir, next to what about public company? Public company is classified into two, non-eligible and eligible. If it's a non-eligible public company, you are not eligible to get from public. So from public, you cannot get. But from members, you can get 35%. 35% of what, sir? I will tell you in some time. Next, eligible public company can get from public. The eligible from public is maximum 25%, but both put together should be 35%. And for that reason, because this is 25, from members I can take 10%. Internally, I can do any composition mixer, but in such a way, this public should not exceed 25%. Are you getting it, guys? I can even have 30 here and 0 here, 33 here, 2 here, but I can't have 30 below. In bottom, I can have only 25, so above will be maximum 10. So eligible company from public eligible, how much they can get, guys? 25%. So from members, they can get 10. So what about eligible government company? Eligible government company can get 35% in any ratio. That means eligible government company alone, the curious thing over here is from public they can get 35%, from members they can get 0%. So eligible government company 35% in any ratio. Eligible public company, public 25, but overall is 35. Is that clear? Are you understanding, guys? Okay. Sir, all this percentage, it's a percentage of what, sir? All these is a percentage of paid up share capital plus free reserves plus securities premium. It's a percentage of paid up share capital plus free reserves plus securities premium. Are you all following, guys? Now I'm discussing key provisions. Sir, what is eligible company? Eligible company has to be, from this dabba I'm discussing key provisions, guys. So in this, it's a percentage of paid up share capital plus free reserves plus securities premium. Now eligible company, if you see, guys, it is a public company. Net worth should be 100 crores or more. Turnover should be 500 crores or more. Any one if I satisfy, it's enough. Very important. Eligible company 100 crores or more. Net worth and turnover 500 crores or more. Any one should be satisfied, and company should pass the necessary resolution over there. Sir, ordinary resolution will be passed if it's for one limit. Beyond that limit, now we will go for special resolution, guys. What is the limit? Limit is not in this section. Limit is section 180, which is not in our syllabus, so you don't have to worry. So important, eligible is a public company with a net worth of 100 crores or more or turnover of 500 crores or more. Next. Okay. Here I told you, these are all key provisions. I told you private company can maximum issue 100%. That means they can get 100% of paid up share capital plus free reserves plus securities premium. Imagine if paid up share capital is 100, free reserves is 30, SP is 20, then shareholders funds totally is 150. A private company can maximum issue deposits only up to 550. So private company can issue deposits maximum up to how much, guys? 150, yeah. Private company can issue maximum up to 150, 100% of this. But in some cases, private company can go beyond what, guys? 100%. There are some 4 exceptions. Now these same exceptions, what is that? If it's a startup company, in the first 10 years of incorporation, they can go beyond 100%. And any other any other private company satisfying these limits, they can go beyond, guys. What are these limits? The same exception is there now in section 76, what we are seeing now, and same thing is there in section 67 also. It's same provision, double concept. What is 76? Sir, how to accept deposits beyond 100%? These are the provisions. In 67, financial assistance given to employees. Financial assistance given to employees. A company cannot give loan to employees and other things. Those provisions are not applicable for a private company if they fall within these 4. Are you following this? That means a private company can give money to anybody to buy back its own share if these conditions are met. What is it? It's not an associate or holding or subsidiary of any other company. It's not associate, holding or subsidiary of any other company. Are you following, guys? Next, it has not defaulted in repaying borrowings or filing of annual return. This basic default. And borrowings should be less than 2 times paid up share capital of 50 crores, whichever is less. I'm again repeating, guys. The borrowing should be less than 2 times the paid up share capital of 50 crores, whichever is less. How to compute this? Take the paid up share capital and take the borrowings. Sir, borrowings is for me 30, sir. Paid up share capital is 20. What is 2 times paid up share capital? 40 or 50, whichever is less, which is less. 40. I will compare with this 40, 30. Borrowings is less than 40. Therefore, I will proceed. Basically, debt equity ratio. Are you following, guys? Now, these are key provisions. If those who studied our class will know, we are done with our key provisions and deposits. At least read these and go. Now, coming to some common notes. Some common notes over here. Tenure of deposits. One more important tenure of deposits and other common points. Each of these common notes are standalone concepts. Standalone concepts applicable for deposit of public company, deposit of private company, or of eligible company. Same for all. First, deposit period is minimum 6 months, maximum 36 months, 3 years, maximum 36 months tenure. Sir, can I go for short-term deposits? Yes, you can go for short-term deposits for any of the above percentages. For any of the above percentages, the short-term deposits percentage should be only 10% of paid up share capital plus free reserves plus securities premium. But for this 10%, this 10% of deposit can be only for 3 months too. 6 months. Let me repeat, guys. Overall is deposit 6 months to 36 months. Short term up to 10% you can go 3 months to 6 months in case of emergency. So once an investor comes and makes deposit, I have to make entry in register of deposit within 7 days, and I have to give him register of deposit. I have to give him deposit receipt within 21 days. Once when an investor comes, I will register of deposit is 7 days. I will give him deposit certificate receipt within 21 days. Okay, sir, now I am failure to repay within the above time. I have not paid within the above time correctly. Interest will be 18%. Okay, interest will be 18%. What is the maximum rate of interest I can keep to give my deposit holders? RBI will decide that. It is the same rate what is given to NBFC for acceptance of deposits case. So register of deposits is maintained for how many years? 8 years. Basically all registers in Companies Act, register of deposit, register of members, everything is maintained for 8 years except 2 things which is maintained permanently. Minutes is maintained and register of charges is maintained permanently. Next. So there is important thing, I have to file DPT3 deadline. Every year details of all deposits in that year should be filed before 30th June of every year. Next. No right to alter. Of course, once deposit is given, you cannot alter. Deposit trustee will determine. Premature of deposit. Sir, deposit is for minimum 6 months to 36 months. Now, before this period gets over, if I premature and close, then they are saying they will reduce 1%. So, if for the period what is already due. So, let's say I had deposit for 17 months and my interest is 11%. Now, you will still get interest for 17 months, but you will not get 11%. You will be getting only 10%. So for the actual period, they will reduce 1%. However, they are saying, this has an exception. No need for reduction in interest. No need for reduction in interest if it is for emergency due to war, navy, military, or air force. And if they are taking that time, no need emergency. Or if it's for war widows, if that time if it comes, mainly for emergency purpose, we will not take it. Emergency purpose, we will not reduce 1%. Or to repayment is because to maintain with prescribed limit. What do you mean by prescribed limit? Maximum deposit is 35%. Now because of change in debt equity, this 35, let's say, has become 36% in the company. So 1% mandatory I have to repay. Not your fault, my fault. Therefore I will not reduce 1%. Are you following, guys? Next, deposit trustee disqualification. In debentures we spoke about disqualification. Debenture trustee, deposit trustee, same disqualification. Director KMP, then of the company or associate or subsidiary or holding, then depositor of the company, indebted to company, material. There we had 2%. Here we don't have 2%. Material peculiar relationship, guarantee or relative of the person. Then deposit trust deed should be made. Are you following, guys? To remove him, the directors can remove him. That's about it. Okay. Next, joint deposit. Sir, can I have joint deposit holders? Yes. Maximum 3 members together can take joint deposits. MCQ question. Maximum 3 can take joint deposit. This whole chapter of deposit is not applicable for a banking, NBFC, housing finance and any other company specified, because a bank, NBFC, housing finance, or the main work is to give loans and collect deposits. You can't tell they have to follow deposits chapter, so it's not applicable. Then lastly, how do I invite people, like how a prospectus chapter has giving prospectus, here for asking people to give deposits, we issue something called circular, or circular in the form of advertisement. How I will issue this, sir? I will publish in the newspaper and English plus vernacular language. I will also publish in the website of the company. So if my company is going for deposit issue, I will put in the newspaper. I will also put in the website of the company. I will also be sending in registered post with acknowledgement to all my members, to members if it's members. So I will send to my members in registered post acknowledgement, and I will put in the website, and I will put in newspapers, and I can send electronic mode also. Next, what they are saying, the circular should have some basic details like financial position of company, credit rating, all the terms of deposit, what is the period, what is the interest, the credit rating of company, secured or unsecured, charge created. Remember one important thing, if it's an eligible company creating deposit with public, I'm repeating, eligible company creating deposit with public, you have to create charge, and the charge can be created only for tangible assets, only for tangible assets. But if it's for deposit with members, I can create charge with tangible or intangible, but deposit with public now, tangible assets only. Very, very important. Intangible not allowed. And then lastly they are saying this circular, whatever I'm sending in post, website, newspaper, credit rating, etc., should be circulated at least, should be filed 30 days before with the following signatures to ROC. It should be filed at least 30 days before to ROC with signatures. Sir, what is the validity of this? Once I issue the prospectus, it's valid for 3 days like that. Here, once I issue the deposit circular or circular in the form of advertisement, what is the validity, sir? It is earlier of this, either earlier of 6 months from closure of financial year in which it was issued. So if it's issued in 31st March 24, within 6 months from that year ending, or date of AGM, let's say AGM is happening on 30th September, or if no AGM is held, last day on which AGM should have been held. So basically they are saying you issue it anytime during the year, but it will be valid up to 6 months from end of that financial year, or when the AGM is held for that financial year, or whichever is coming early. Either 6 months is coming early na 6 months, or if AGM is kept in 3 months itself, then with that day, basically date of AGM it will terminate if AGM doesn't happen if AGM happens. Are you following, guys? All of you with me? Understanding? Clear? Hello? Okay, so with this we are done with deposits workout, guys. Thank you so much. Yeah. Okay, one more, just I know deposits just got over, guys, but one more quick point. We finished the whole deposit chapter, but one important point I missed out, so I'm just re-recording just for this one point. In deposits, what is not a deposit? One more point I want to discuss. Security deposit received from employee when he is joining or any other date. That deposit is not a deposit if it is not interest bearing, meaning company will not pay interest to him, and it will not exceed the annual salary. That means if an employee's salary is 50,000 into 12, the maximum security deposit I can get from him is 6 lakhs, and for this there should be no interest. Then this is not a deposit. So either if interest comes or it crosses 12 months, then it becomes deposit. So with this we are pakka closing deposit, guys. Idea is we cover 90% of all the points are covered. Here and there 1-2 points missed out. Of course small things will be there, but I'm trying to cover maximum in shortest time possible. Thank you so much. So welcome back, guys. In this small session what we'll do, cost audit has some changes for your May 2025 exam and onwards, where ICA study mat they have eliminated a few syllabus. Now everybody reading from the book, that our book, you have to make some changes, nothing to add, you just have to strike a few pages. That's going to make you happy. That's why I didn't delete it, so that when you strike now you will get that good feeling. Okay. So in cost audit I'll strike off everything which is now not there in the study mat. Okay. Some provisions are amendments, some provisions are just removed from the syllabus. Are you getting it, guys? We don't have to bother why they removed it. CA institute and other institutes will fight. That's their wish. Now, in coming to limit for whom cost audit is applicable, earlier you used to have some limit. I don't want to discuss about that. But these 4 dabbas, just strike it off fully. Are you following, guys? Those 4 dabbas, whatever I put in red, strike it fully. I don't have to explain that because it's not there. Okay. Earlier study mat used to give examples of what is a regulated sector and what is a non-regulated sector. They used to give a huge table in the study mat. That table I never had in the book itself in first place. Now that is removed from study mat. It's not there in the book to strike also. Go to next page. Okay. In next page also, removal and resignation of cost auditor, appointment of cost auditor, all these points are removed from the study mat. So we are also not discussing. Are you following, guys? Clear? Next, cost audit is not applicable in the following cases. Never tested. 3 points. Very interesting concept also. Those 3 also is removed. It's not there in the study mat. Correct, Bishal? This also is fully removed. Okay. So then what is there, sir? Very simple. You need to know what is cost audit first. What is cost audit, guys? Very simple. Let me explain the logic. Now, what we have is very limited provision. I will just mark that and then we will add it in Gen Z notes. Very simple. See, how do you identify cost of something? For example, guys, basically I'm discussing costing paper, not our domain, but we have cleared these papers. Let's say you are keeping one food stall in one expo. Okay. So you have taken one small stall where you are selling some cakes, cookies, etc. Okay. Now this stall is there for 2 days, weekend. So for the taking that stall, you have to pay some money. Let's say you are keeping stall in college culturals. They will charge you, let's say, 5,000 rupees for 2 days stall. Okay. No, your goal is to recover only that 5,000. Huh? No. Your goal is to recover that 5,000 plus you are working there for 2 days. Huh? Your cost is how much? Let's say another 5,000 for 2 days. You have one employee also. For employee, you are paying another 5,000 rupees. Are you following, guys? And then let's say you are baking the cake and the material cost irukuma. I have included labor now. Material, other overhead, everything put together, let me say 10,000 rupees. Now, in the 2 days, you are basically going to spend 5, 5, 5, 10. How much does it come to, guys? 25, correct? Without calci. 25,000 rupees is what I am going to spend in 2 days. My idea is to at least recover this. Okay. Let's say each cake I am selling for 1,000 rupees. Okay. For example, cake 1 kg or half kg, some specialized cake. So 1,000 rupees per cake. Now how much is cost of per cake? How much, guys? Hello? 25, only 1,000 now. Let me just change it to 100 rupees per cake. Makes sense. One brownie piece or whatever. 100 rupees you are selling per cake. Okay. So 250 cakes is what you should target to sell in the college culturals in 2 days. How you do is your game. Keep some giveaway. Okay. Singles cake free. Whatever you keep, case 2 plus 1. Okay. So you will somehow try to get the college crowd and you have to sell these cakes. If you sell 250 cakes at 100 rupees per cake, you are only getting break even. Now you have to sell at 150 rupees per cake only if you target to sell, and if you sell 250 cakes, then you will have some profit. You will end up with 37,500. You will have 12,500 rupees profit. Correct? Now, in this costing, imagine this is easy costing. Anybody can do this. Imagine you forgot to add a few elements, and you thought cost per cake is only rupees 80, but the actual cost is 100. And if you sell for 100, you are thinking you have a profit of 20, but you don't have a profit. It is break even. Correct? This everybody knows. That means ascertaining cost per unit is very important. This one simple example. Now imagine Cipla company, Sun Pharma. They have thousands of raw materials in chemicals. output is thousands of medicines. Each tablet they are selling for different price. Then the pricing per unit of tablet, how complicated it is. Are you getting it? Cement manufacturing industry. Cement per bag they are selling at 250. They are saying cost is 200. How did you arrive at cost per unit? Cost sheet, group 2 costing. You're all experts. Hello. Cost sheet ஞாபகம் those who studied. If not, you will study. Don't worry. Paper is waiting. Okay. Now that cost sheet, we learn only basics. CA Institute and CMA Institute fought, and CMA Institute told, why are you keeping costing paper in CA final? That is one of the reasons why costing paper and law paper, CS Institute and CMA Institute fought, saying you can't keep our subjects in your final. Some issue, whatever. So those two papers, your law and costing, that's why in CA final have become what self-paced online modules, whatever. Okay, leave that issue. So basically a cost accountant will be in-house in a company. His work is to maintain that cost sheet. Are you getting it? And the cost sheet accurate track பண்றது. Imagine a huge manufacturing entity, lace chips, how many chips? That's the work of cost accountant. So basically you understood what is what cost audit does. Cost audit does is the cost sheet, everything tracked properly. Now what is there in syllabus? Cost audit is applicable for two types of companies. We have to add this, which is not there in the book here. Domestic plus foreign company cost audit is applicable. Are you following, guys? What cost audit will do? What I just told you. They will maintain cost records. Cost records is nothing but what, guys? Cost sheet. Look at this. Material, labor, items of cost, other specified services. That cost sheet breakup. Are you following? Who has to maintain cost sheet? Cost records. Domestic and foreign company also. Applicable for everybody? No. Like how audit is applicable for everybody, here cost audit is mandatory only if your company's turnover, only if the company's turnover of all products and services in the preceding financial year crosses how much, guys? 35 crores or more. Earlier we had some limits like regulated, non-regulated sector. We used to have something. We used to have something like individual limit, aggregate limit, everything removed. Now simple. You can be a regulated sector. Good. That concept is still there. You can be a non-regulated sector. Whichever sector company you are. If you are a domestic or foreign company, if your turnover, overall turnover of all products and all services in preceding financial year exceeds or equal to or more than how much, guys? 35 crores. What is applicable for you? Cost audit. That's it. Are you following, guys? That's all. That's all you have to remember for exam. What remember? Cost audit is applicable for me if I am a domestic or foreign company, if turnover of last year exceeds 35 crores or more. Whole company. That's it. Are you following, guys? Rest everything else in this page is removed. Okay. Next to what they are saying, who will conduct cost audit? Very simple. Like how a CA conducts statutory audit. Cost audit is done by cost accountant in practice, and he has to follow cost accounting standards. Of course, statutory auditor cannot be cost auditor. This dabba is still there in the book. Okay. Are you following, guys? Clear? Next. When he shall be appointed is removed in the study mat, but I will just read it once. Just like government company. Easy. Government company auditor is appointed 180 days from the start of financial year. Here, appointed within 180 days from the close of financial year. Then for appointment, we earlier had some concept of audit committee approval. No audit committee, who will approve? All that is removed. Who will fix remuneration? Who will appoint audit committee? All that removed. Are you following, guys? Okay. So then what is still left, sir? Very simple. Once the cost audit report is made, the company have to give it to the board within 180 days from the close of the relevant. Sorry, this is there. Not read. This is there, guys. The cost auditor will give the report to the company within 180 days from end of the financial year, and that report the board will give the central government within 30 days. This point is there. Are you following, guys? That's it. That means effectively for exam, I want you to remember only these 2 points I have highlighted in green. leave the background. For exam, remember only two things. Cost audit is applicable for a domestic and foreign company if limit is crossing 35 crores in preceding financial year. Next, cost audit report company will forward to central government within how many days? 30 days. When the cost audit will give to company within 180 days from the end of the relevant financial year. In fact, and the 180 days point also is removed actually. In the book it's not there. If you search you will not find it. But I have just kept it for comparative learning. So what will happen if you look at the timeline and the 180 is not there in the book guys. It's removed as far as what I have seen, but still end of financial year within 180 days cost audit will give the report to whom guys? Board of director will give it to central government within. That's it. This 30 days is there in the book. 180 is not there. But on the to get that connect, it's there in act, not there in your syllabus. Are you following guys? Understanding? That's it. That's all. Cost audit is done. Before itself they never used to ask this in exam. Now also after removing will they ask? I don't know guys. But remember 30 days. Remember that. 35 crores. That's it. Sir, what about all other provisions? Qualification, disqualification of cost auditor. Pari passu, mutandis, whatever is applicable for statutory auditor is applicable for cost auditor. Powers, rights, duties, all of that. Qualification, the 4 disqualification dabbas, all those are applicable even for a cost auditor. Are you following guys? Clear? Then they would have given one penalty if you don't follow a penalty. That's it. Clear guys? Done. Cost audit simple. Are you all understanding? So quickly to summarize, for exam you will remember domestic and foreign company limit is 35 crores overall, regulated or non-regulated, no differentiation, and cost audit report will be given to central government by company within 30 days. Cost audit will give company report within 180 days. Thank you. Bye bye. Cost audit done. Following guys, clear? Yeah. So there's a separate video for recording students. Fine. Yeah. That's about it. With this cost audit is done.
Let's start off the expected question marathon for dividend chapter. In my view, this chapter is very important for September 25 exams because if you look at the past trend guys, every attempt one question from dividend comes for 5 marks. But only in May 25 exams, not even one question came in the exam. That means in September 25, the chances of skipping is very, very low and examiner will ask at least one question. So again, for this chapter, basically whole chapter is important. It's a small one, but let me cover what I have mentioned here in expected questions. Interim dividend concepts. Let's run through the entire concepts of interim dividend guys. Now if you take interim dividend, all the provisions applicable to final dividend are applicable to interim dividend. That means unpaid dividend account, when I will transfer there, IEPF, abeyance, all those are applicable except what is given over here. So first we need to understand any dividend declared in the AGM is generally final dividend. So interim dividend is declared as, interim dividend is the dividend declared and paid between 2 AGMs. So during the year, anytime let's say December, Jan, that's called interim dividend. The actual definition is interim dividend may be declared by the board and anytime during the year from closure of financial year till they hold AGM guys. Now what is the source of interim dividend? Very similar to your final dividend. I will be using the current year profits, surplus in profit and loss account or profits of the financial year in which such dividend is sought to be declared. So I will either use the current year profits of that particular quarter or I will use the profits of the previous quarter. Or they are saying, this is what they are saying, profits generated in the financial year till the quarter preceding the date of declaring the interim dividend. All this is simple. Only 2 points are most important. This I already told you. All provisions applicable for final dividend are applicable for interim dividend. Sir, what are those 2 points relevant for exam? We want to know. 1. Final dividend once declared and approved by shareholders cannot be revoked. Once you commit, you have to make the promise. But for interim dividend can be revoked with the consent of all shareholders if they pass a unanimous resolution. Then interim dividend can be revoked. This they haven't tested, chances very less. But the most important one is this one with regarding computation for interim dividend guys. I will quickly explain this because I have noticed a lot of students struggling in this particular area. So I'm taking 4 quarters of the year. I hope you all know what each quarter is. This is your April, May, June, and the last quarter is going to be Jan, Feb, and March. And here your July, whatever all that comes, guys. Now let's say the company wants to declare a dividend in Q3. All I have to do is I have to check cumulatively what I should do. Q1 plus Q2. Let's say Q1 has a profit of 20, Q2 has a loss of 7. Cumulatively, what is the collective profit? Plus 13. So current year before Q3 until the previous quarters, if the company has a profit, they can proceed and declare any amount of dividend, guys. Any amount of dividend. Sir, what if first quarter 25 is profit and second quarter 30 is loss, then cumulatively I have a loss of 5. If there is a loss of 5 in the current year preceding the quarter where dividend is going to be declared, profit of preceding quarters cumulatively, since there is a loss, now the rules will come into place. What is the rule? I will take only one rule, the average rule. The rate will be less than or equal to average of last 3 years. Are you following, guys? That's what we have over here. If the in simple, what we are saying in simple, look at this. If company has incurred loss during the current financial year up to the quarter ending preceding financial year, then in rate shall not be declared at a rate higher than the rate declared during the immediately preceding 3 financial years. Now the next question is, sir, in the last 3 years, dividend is not declared for 1 year. That means I have declared dividend only for 2 years. In that case, what to do if this situation comes? So only 2 out of 3 years I declared. This standard, the act is saying take the 2 years average. So for example, if my 3 years are 2024, 2025 and 2026, if these are my 3 years, let's say in 2025 dividend is not declared, then I will take average of 2024 and 2026, average of these 2 years only. So this is interim dividend, guys. I spend some time because a lot of them gets confused. Don't expect me to spend same time for everything. Next is dividend in abeyance. Dividend in abeyance is very simple. What is section 126 saying? When dividend is, when shares are being transferred, and this transfer is on hold, this transfer is pending. This transfer is pending for whatever reason. So let's say A is transferring his shares to B, and this transfer is pending because of delay from the company or any case or whatever purpose. Now during this pending transfer period, if at all company is giving any benefit to the shareholder like dividend or rights or bonus. So for example, I'm transferring shares on 1st October. Only on 7th October, the transfer is being completed. In this gap of 1 week, what if my company declares dividend, rights or bonus? Then those kind of benefits to whom I should give, it will be kept on abeyance until the transfer is completed. Or even if there is a dispute regarding the transfer, therefore transfer is pending, all the benefits in this will be kept on abeyance. Abeyance means hold, guys. We will keep it on hold. The next one, 127, penalty for non-compliance of paying dividend. So what is 127 saying? Simple. Once dividend is declared, we have to pay within 30 days. Correct? If you don't pay in 30 days, it is not about not claiming. Shareholders didn't claim, I can't do anything. Company mistake. Company did not pay in 30 days. Then that company will pay interest of 18%. From which day, sir? From the 31st day, they will start paying interest at 18%. That alone is enough? No. Our friends, directors and officers who are the culprits, for them, what is the penalty? Up to 2 years imprisonment, free accommodation for them, and 1,000 rupees per day. 1,000 rupees per day of what, guys? Default will continue per day penalty until the offense is there. This is for director and officer. Now, in certain cases, you all know there is an exception. Exception when this section 127 will not operate. That means no penalty in certain cases. Sir, what are those certain cases where there is no penalty? Operation of law. For example, COVID came. Because of this, I am not able to transfer the dividend. I can't do anything. Government declared emergency. Fine. 126. Abeyance. The transfer is pending. That only is 126. If transfer is pending or dispute is there, I have to keep the dividend in abeyance. I can't transfer. So 126 becomes an exception for 127. Next, lawfully adjusted. I have to pay the shareholder 10 rupees. He has to pay me 1 rupee call money. I am adjusting with this. I am adjusting with this and only paying the balance case. So if the shareholder has to pay me any money in the capacity of a shareholder, then I will lawfully adjust with that. Next, directions given and communicated and not followed. For example, if a shareholder is giving me a direction saying, hey, don't give me dividend in cash, no. Instead, you give me dividend in Bitcoin. I'm saying, ayo, I can't follow all these things. If you want, you take in cash. He never responded. So he gave directions to give in Bitcoin. I responded saying, not possible to give you in Bitcoin. So he gave a direction. I didn't follow that. And the same is communicated to the other party. But if you give direction, if the shareholder is giving direction, after I get the direction, I am not following it, but I did not communicate that back to the shareholder, then I will be liable. This is how questions will come. The instructions which am I following? Good. If I am not following, I have to communicate it back. Others, any other reason which is just and equitable, guys. Same thing will be there in section 127 over here. Operation of law. Shareholder has given directions and cannot be complied. Same is communicated. Dispute regarding right of dividend 126. Lawfully adjusted. Just now we saw lawfully adjusted. Any other reason. This also can be a separate case study question. Next is going to be my unpaid dividend account and the timelines around unpaid dividend account. It's right here. Let me explain because it's very simple. From the time when the dividend is declared, first is the 5 days. Within 5 days, the dividend has to be transferred to separate bank account. Within 5 days, it has to be transferred to separate bank account. Once dividend is declared, it has to be paid within 30 days. It has to be paid within 30 days, guys. After this, it has to be paid within 30 days. So again, once dividend is declared, you have to transfer to separate bank account within 5 days. Next, it has to be paid within 30 days. If it is not paid or not claimed within 30 days, not paid na company's fault, not claimed na shareholder's fault. Whosoever fault, after 30 days, within the next 7 days, I will be transferring this balance to our account called unpaid dividend account. To the account called which one, guys? Unpaid dividend account. Now, in this unpaid dividend account, the balance will stay for 90 days. It will stay in this account for 90 days. No, that's how we should not learn it, guys. Many people make mistake here. In this unpaid dividend account, from the time of transferring, balance will stay for 7 years. Balance will stay for 7 years. That means I transfer to unpaid dividend account on the 3rd day. I have to transfer within 7 days. But let's say I transferred on the 3rd day itself. From 3rd day, it will be, I'll start counting the 7 years. Money will be in this account for 7 years. Let's say I transferred on 3rd day. From the day on which the money is coming and falling in the unpaid dividend account, within the next 90 days, the company has to prepare a report. And this report will be published on the website of the company and any website authorized by central government to publish details of unpaid dividend account. So what happens after 7 years? This balance will be transferred to IEPF. If you don't transfer to unpaid dividend account within the limit of 7 days, if it crosses 7 days, here also an interest is there, but not that much higher percentage. 12% of interest, company is liable. Let's quickly one more time revise section 124. You will repeat with me from wherever you are watching, guys. Once dividend is declared, transfer to separate bank account within 5 days. It has to be paid within 30 days. And after this, it has to be transferred to unpaid dividend account within 7 days if the dividend is not paid or not claimed. If you don't transfer within 7 days, interest will be how much, guys? 12%. Money will stay in this account for 7 years. Once money comes into this account within the first 90 days, we will prepare a report and that report will be published in website of the company and website authorized by central government. For 7 years also, nobody is coming and claiming, sir. What to do? Transfer the balance to IEPF. Dividend should be paid only in cash, through banking channels. When I say paid in cash, it has to be paid through banking channels. I cannot give dividend in kind. Remember this, take it straight into your system, guys. Then the next one, last one, section 123, inadequate profits and 3 rules for declaring our dividend, guys. The most common question which every examiner likes asking. So very simple, what they will tell, dividend will be paid for equity and preference shares. First I will pay for whom, guys? Preference shares, and then only I will pay for equity shareholders. It's payable to cash to the registered shareholder in the form of banking mode. Now what is the source of dividend? First I will use profits of current year after providing for depreciation and losses. Next I will use previous year profits. Then I can use combination of both if that is not enough. Then lastly, money guaranteed by central or state government. This is simple. Now let's say the current year profit. So follow carefully, guys. Let's say the current year profit is 90 in my P&L, and in balance sheet my reserves and surplus is 100. Now I want to declare a dividend of 120. Now this is a case where the current year profit of 90 is not adequate. If it is not adequate, then the remaining 30 you can take from the reserves. If you are going to touch the reserves, that is when you will apply the concept company is not having adequate profits. Follow very carefully over here, guys. These 3 rules are not applicable when company has loss. It will be applicable when loss and I want to take from reserves, or profit is not adequate. So this is the scenario of when profit is not adequate. So if my profit is not adequate, what are the 3 rules? The first rule is what I just showed you in interim dividend. Rate rule. The rate of dividend shall not exceed the average of the last 3 years. Average of last 3 years. Now, sir, in the last 3 years, dividend itself is not declared. Okay, then I will proceed and apply the remaining rules, and this rule I will not apply. That's what the act says here. This condition is not applicable if company has not declared dividend in each of the preceding 3 years. Many students make a mistake here. What they will do, okay, company didn't declare dividend in last 3 years. That means rules are not applicable. No, rules are not applicable to the extent of this first rule, because average of last 3 years is not possible. But remaining rules you can apply. Which is my usage rule, balance rule, and loss set off rule. Very simple. First is saying what, guys? The amount you can withdraw from your savings, or known as your paid up share capital and free reserves. Amounts I can withdraw from my paid up share capital and free reserves is maximum 10%. So how much I can withdraw from my, so again, first rule, average of last 3 years. Second, usage, I can withdraw 10% of paid up share capital and free reserves. And next we have a sub rule for this. Once you withdraw the amount so withdrawn, since here we have a provision that it has to be set off with losses or unabsorbed depreciation, the amount should be first set off with losses of the current financial year. For example, guys, let's say current year I have a loss of 20. Now this is my P&L. In my balance sheet, let's say reserves and surplus is 100, share capital is 200. Okay, share capital is 200. Therefore, in this total is how much, guys? 300. In this I can withdraw how much? 10%. So I can withdraw 30. So once I can withdraw 30, I can't use this full 30. In this 30, I will set off the current year loss of 20, and I'm left with this 10, and this 10 can be used for declaring dividend. And that's what this rule is saying. The amount so withdrawn shall be first used for setting off the loss of the current financial year. And lastly, the balance in reserves. So after I use 30 from reserves, what is the balance, guys? So for example, in this case, 300 was my reserves, 300 was my total, guys. So I have to take only reserves, correct? So my reserve is 100. Reserve is 100 minus 30 if I use, I am left with 70, correct? So now what is the rule saying? The balance of reserves after such withdrawal, what is the balance? This 70 is the balance after withdrawing. From 100 I withdrew 30. This balance of 70 shall not fall below 15% of paid up share capital as of its latest balance sheet. What is 15% of paid up share capital, guys? So here if you see, my share capital is 200. So in this 200, my 15% will be how much, guys? It will be 30, correct? It will be 30. So I need to have at least the balance of 30 in my reserves, but I have 70. Are you following, guys? So this rule simply says from the reserves, after you take off current year, you withdraw, 70 is left. This balance should be at least 15% of paid up share capital. So what are the 4 rules again, guys? The average of the rate should be not more than average of last 3 years. In last 3 years, if dividend is not declared, this rule only is not applicable, not all the other rules. Second, usage. I can withdraw only 10% of paid up share capital and free reserves. Keep repeating with me. And the amount so withdrawn shall be first used for setting off losses in the current financial year. And last one is the balance rule. The balance in the reserve after withdrawing should not fall below 15% of paid up share capital. With this, we are done with the inadequate profits and 3 rules for dividend. And with this, we are finally done with the dividend chapter. If you actually look at it, I have revised the entire chapter except for section 125, which is my IEPF, guys, because they tested this recently. I have not included this in our expected questions, but please, if you have the time, if you know this chapter, please revise your IEPF, especially go through the constitution of members of IEPF. Who all are there in the IEPF, that constitution of members? That point is newly added in study mat, but not yet tested. This part is not yet tested, guys. So that's about it. With this, I will close expected questions for dividend chapter. Let's move on to the next chapter, guys. Let's start off with the expected question marathon for accounts of company, guys. If you actually look at this list, what I have done, I have only eliminated 2 sections from the entire chapter. 128, which is accounts of company, and section 132, which is NFRA. Only these 2 concepts, 128 and 132, I have excluded because both these came in the latest attempt and the chance of that being repeated is little less. If it gets repeated, don't ask me, guys. Rest of the chapter, I have put everything over here. So I will revise the entire chapter now, including what? 128, including 132, because anyway it's part of syllabus. But when I'm revising that, maybe you can relax and give more focus. I'll tell you, give more focus to which ones over here. Since I've covered the entire chapter, the most important one where I will be giving my focus is for CSR. In my view, this is mandatory, going to be there in your September 25 exams. CSR is the one of the, if you have to pick 3 options, CSR is one. Second is going to be signing of financial statement or director's responsibility statement. This is the second important question for me. And third one, what I will do, which is important for me, is this XBRL 137, XBRL including section 137, filing of financial statements to ROC, and in what all cases XBRL will be coming, guys. In what all cases XBRL will be coming. So in my view, these 3 are, I am putting everything as expected question except these 2, like I said, but I want to give more focus to CSR 134 DRS or section 137 is where I will be giving more focus, and the remaining I will quickly run through and revise for you guys. So let's start off with the expected question marathon, 15 to 20 minutes for accounts of companies, guys.
Okay, back to our Gen Z notes. This time we are going to revise accounts of company. Let's target to do as soon as possible. Okay, what are the important points for exam? You might have spent 2 hours, 5 hours, 7 hours for studying this chapter. For exam, what to remember? Quickly we will revise together. Loudly, guys, I want you all to be very loud. Section 128 talks about accounts of company should be maintained in accrual basis, double entry. Can shareholders inspect? No. And it should be true and fair view for every year. Where will the books of accounts be kept? Only at ROC. Can I keep it anywhere else in India? Yes, by passing a board resolution, intimate ROC in 7 days and file form AOC 5. What, can I keep books of accounts at foreign branch? Yes, if I have a foreign branch, books of accounts will be in the foreign location. Then you have to send summary returns on a quarterly basis to the registered office. Sometimes the director will ask for written request that should be given within 15 days. Who is responsible for maintaining books of accounts? We saw managing director, CFO, and whole-time director in charge of finance. Then within books of accounts we saw, can the director inspect books of holding? Yes. Can the director appoint agent to inspect books of accounts of holding? Yes. Now same thing but with subsidiary. Can director inspect books of subsidiary? Yes, but company has to pass a board resolution. Can director appoint agent to inspect books of subsidiary? Yes, company has to pass a. Of course, inspection is only in business hours, so you can't expect night inspection. Okay. Next, within 128, we have some rule 3, which talks about electronic mode books are maintained. Now, what are the key points? Audit trail should be there. For that, backup should be there. Good backup, storage, legible form, printable and accessible. There should be some good security and firewall. It should be complete and unaltered. Okay. If you are altering, we should know who is altering, how they are altering. Very important. Server should always be in India, and for that you have to intimate ROC proof, IP address and name of service provider, address of service provider. If you are using any cloud service like Google Cloud, etc., details and address of the service provider. With this, we are done with section 128. Then 129, if you look at section 129, which talks about preparation of financial statement. What is financial statements including? P&L, balance sheet, notes to accounts, cash flow statements, statement of changes in equity. This financial statement should be in true and fair view. 133, if there is any deviation from accounting standards, you have to disclose that deviation. Next, we also saw for cash flow statement, for some companies it's exempt. They don't have to prepare cash flow, which is 1% company, small company, dormant and startup, exempted to prepare cash flow statement. Next, if financial year is incorporated on 1st Jan or later of any year, then the financial year can end on the same financial year or next financial year. Mostly if this happens, you will choose the next financial year, you will save cost. Next, 129, okay, foreign subsidiary. If I have a foreign subsidiary for the purpose of consolidation, if you are doing consolidation, dollar will be converted to rupees. Language should be in English. Financial year is different now. You will try to convert, if not get central government approval and do consolidation with different financial years. Okay. Next, we have a new concept called periodical FS in 129A. What to remember here? This is called limited review audit for any period which is not yet notified. Once you do this audit, inform ROC within 30 days. This is applicable for which company? Unlisted companies, not listed companies. Consolidation is mandatory, but some exceptions. Unlisted companies, one exception. Then ultimate holding, if they are doing consolidation. If H is doing consolidation, then S1 need not do consolidation unless H is in foreign country. You have intimated subsidiary in writing and they have not given any objection, then don't have to do consolidation. Next, 138 talks about internal audit. In internal audit, who can do it, guys? I want you to be loud. Who can do it? Anyone. Then that report will be given to management, appointed also by management. Applicability for listed companies. Then unlisted public company limit is 200, 100, 50, 25. 200 is turnover, 100 is borrowings, 50 is paid up share capital, 25 deposits. For borrowings and deposits, it's not previous year, it's any time in the previous year. For private companies, same limits, but they have only 200 and 100. Are you following, guys? Then 133 is nothing, accounting standards. Then 130 talks about very simple, any person or statutory authority, SEBI, central government, RBI, if they feel something is wrong in a company, they will intimate tribunal. If tribunal feels company is operated by fraud or mismanagement, then they will reopen books for the last 8 years. Okay. Next, 131 is similar, voluntary reopening of books of accounts. Here, if the company wants to reopen board's report or financial statements, then they will pass a board resolution and apply to tribunal NCLT within 14 days. Tribunal will take its own time, get representation from 3 main people, central government, income tax department and original auditor, and they will pass one order. Once they pass the order, within 30 days you will intimate ROC by filing the revised financial statements and board's report. Can you keep revising whenever you want? No, only once in a year, and maximum you can do for last 3 financial years. 3 years over now you can't do revision, you have to apply to central government, different procedure, not in syllabus. 134 talks about signing off financial statements and board's report. Who will sign financial statement? Chairperson or 2 directors, one of them shall be a managing director, and CEO, CFO and CS if applicable, if they are appointed, that means applicable. Next, board's report, we saw other contents has lot of points like dividend declaration, related party transaction, loans, holding subsidiary details, CSR details, dividend details, risk, environment details, all of that. In that, key point was, if you are a listed or a public company with a paid up share capital of more than 25 crores, you have to do a self evaluation, how I performed. And one more key point in that is DSR, DRS, director's responsibility statement. Points are very key here. In that, first, accounting standards should be followed. If there is a deviation, disclose. Accounting policies should be followed consistently. There should be sufficient care for safeguarding of assets, then safeguarding of accounting records and detection of fraud. Going concern should be taken care. Laws and regulations should be followed. If you are a listed company, additionally, internal financial controls. Are you able to tell without seeing, or at least by seeing I will recollect, guys? For exam, what are the points? Beyond this, they can't ask. Next, 132, NFRA, quickly. NFRA head office is in Delhi. What they will do? They will prepare accounting standards, auditing standards and oversee quality of professionals. They will report to 2 House of Parliament. The committee includes 3 full-time and 9 part-time members. In that full-time, there is 1 chairman also. If any disciplinary action is taken, what is the penalty? For individual, 1 lakh or 5 times the fees, whichever is higher. For firm, 5 lakhs or 10 times or fees, whichever is higher. If a professional misconduct is noticed, they will be debarred from being a member for 6 months to 10 years. Name will be debarred. Then we saw 136, 137. 136 is before AGM, 137 is after AGM. 136 before AGM. 21 days before AGM, you have to circulate copies of FS and audit report to the members. If you want less than 21 days, yes, 95% of members have to agree. Same as section 101 notice. Electronic mode. This circulation should not happen physically. In electronic mode, mandatory for listed companies and public companies whose net worth is more than 1 crore and turnover is more than 10 crores. Why they use and here, where everywhere they use or? Because it's a mandatory condition. If you satisfy both, you have to circulate in electronic mode. Okay. 137. Once AGM is completed, you will file FS to ROC within 30 days in form AOC 4. If it's a 1% company, then they will file within 180 days from closure of financial year. Then in this, for some companies, they have an XBRL reporting, very important, which company listed and all their subsidiaries, paid up share capital of other companies more than 5 crores here, or turnover more than 100 crores, or companies following Ind AS. For some companies, XBRL not applicable. Bank, NBFC, insurance, housing finance. Once you follow XBRL, you have to follow for a lifetime, even if next year limits are not met. Then some more cases here. Sir, what? We have to file 137 to ROC within 30 days from AGM. AGM held, normal scenario. AGM held, FS adopted, then file within 30 days. AGM held, FS not adopted, then you will file within 30 days something called provisional FS. Whenever you adopt it later, that time you file the final FS. Sir, AGM itself I didn't keep, sir. Could not keep AGM for whatever reason. No problem. File in 30 days from the date on which AGM should have been held and file with ROC as provisional FS. Whenever you keep the AGM and adopt the FS, that time you file final FS. This with section 137. Perfect. Then all sections are done. Then we went to CSR. Okay. Yeah, we went to CSR, guys. Okay. Are you following, guys? Last section 135, which is CSR. Follow. In CSR, let's revise one more time. CSR 135 is applicable for whom? It's applicable for whom? It's applicable for any company whose turnover is more than or equal to 1000 crores, net worth more than or equal to 500 crores, net profit more than or equal to 5 crores. How you have to spend, or how much you have to spend? 2% of average net profit of last 3 years should be spent. If I am loss making company, will I spend? No. even if turnover is crossing limits. In this net profit, I will not include two things. One, income from an overseas branch or subsidiary, and dividend from a company already paying CSR. Now this 2% can be three extreme scenarios. One, I spent exact 2%, good. I spend more than 2%. So if you spend more than 2%, I will carry it forward to next 3 years. If you spend less than 2%, they are deciding ongoing project or not ongoing project. Simple. Ongoing project, they are saying very easy way, spend within 3 years. In the 3 years, in the first 30 days, you will transfer to separate bank account. In the 3 years, if you don't spend, then in the next 30 days, you will transfer to fund under Schedule 7. Not ongoing, project is not yet started, you are not capable. Within 6 months of end of financial year, again you transfer to fund under Schedule 7. For all the spending, we need to have a committee called CSR committee, which is mandatory if the spend is more than 50 lakhs. For this committee, public company should have 3 directors if independent director is required for that company. Otherwise, 2 are enough. Private company, anyway we will have only 2 minimum, then I will have 2 directors. Independent director concept is not there for private company. Foreign company means you should have the person authorized representative under section 380. Next, a few other small amendments which are important. During CSR activity, if you created a capital asset like hospital or you purchased the hospital, that should be registered either under a name of Section 8 company or a public authority or a trust. Public authority means corporation, etc. or registered trust. Or the beneficiaries for whom we are building the hospital or school. Next, which profit you have to take? PAT or PBT? PBT. Can multiple companies come together and do a project? Yes. If holding company is following CSR, should subsidiary follow? No. Apply limits for them separately. For other activities, administrative work, CSR expense can be maximum 5% of the CSR expense can be admin expense. Sir, where to spend? First, where you should not spend is important. Employee and their family. You can't spend outside India. You can't give donation to political parties, one-off events, marathons or awards or charity or any employee statutory contribution is not possible. But if you are doing charity, you want to donate. Donate to whom? Section 8 company who has a track record of 3 years of doing similar objects. Schedule 7, we have our story, but remember some key points: malnutrition, poverty, education, art, culture, then sports, Olympic sports, recognized sports, public library, then research for contribution for research, natural disaster, Har Ghar Tiranga, COVID, rehabilitation center, all these we can say, or let's say restoration of sites, all of that you can spend. Okay. Next, last 3 points in CSR. First time when CSR is applicable for the company, they have to register in CSR 1 for CSR registration. Second, CSR 2, you have to file AOC 4. Along with AOC 4, you have to file CSR 2 on yearly basis, giving details of all updates that happens. So while doing CSR, I didn't plan, sir, but I earned some profits. Those profits you also spend for CSR. If you are not spending for CSR objects, then within 6 months you will transfer to fund under Schedule 7. Lastly, impact assessment. For whom it is eligible, if the CSR spend is more than or equal to 10 crores in the last 3 years, then I have to do an impact assessment. Then assessment is for whom? Not for all the projects. If there is any project in the past which is more than or equal to 1 crore, which should also be completed, and that completion should have been 1 year over. I will again repeat, project over, completed, it should have been 1 year since the date of completion, and project is 1 crore or more. Then only I will do impact assessment, then only I can see the impact. For that, one professional is doing a independent agency, can be CA, can be not CA also. For him, the limit that they have given is 2% of CSR or 50 lakhs, whichever is higher. In that 5%, I will include 2%. That's it. Revision about CSR and a whole chapter following, guys. Okay. Perfect. Let's revise section numbers of this chapter. 128, books of accounts. 129, preparation of financial statements. 2 subsection 40, loudly. 129A, periodical FS. 130, reopening of books. 131, voluntary reopening. 132, NFRA. 133, accounting standards. 134, signing off board's report. 135, CSR. 136, circulation of FS2 members before AGM. 137, circulation to members after AGM. 138, internal audit. That's about it, guys. Those who are watching recording, for remembering section numbers, write it 3 times now itself. At least half of those you'll remember. That's it, guys. Thank you.
Let's start off with the expected question marathon revision for foreign company, guys. Foreign company has lately become important because it's a new addition in our syllabus. And in the initial few attempts, the examiner will have the curiosity to test more from this. And that's why you're seeing in recent attempts, there is a lot of marks being tested in this. But my prediction or the trend that you will be seeing is in the future, going forward from now, the weightage for this will slowly keep reducing, and you should not be surprised to see where in some attempts they will even completely skip this chapter itself, like how they skip preliminary or prospectus in some attempts. So that will also happen very soon. We don't know which attempt. So what are the key important areas in this chapter? First, section 379, what is a deemed Indian company? For that we should know first what is a foreign company in 2 subsection 42. This definition, please memorize and keep it with you, guys. Foreign company means a company or body corporate incorporated outside India, maybe incorporated in US, Germany, wherever, and has a place of business in India. The most important thing is this place of business. Now this place of business can be in any way. How it will be there? This place of business can be there by itself or through an agent, and it can be physically or through electronic mode. So if I have to explain this, very simple, they are saying a foreign company is a company which has a place of business in India either by itself or through an agent, and by itself it can be physical or it can be electronic mode. By agent also it can be physical or through electronic mode. This is what they are covering as what is a foreign company. For example, foreign company, place of business by itself physical, KFC own branch. Foreign company, place of business by itself through electronic mode, Uber through its app. Foreign company, place of business through an agent in physical location, KFC but through a franchise KFC. Foreign company, place of business through an agent electronically. Some US seller is selling in India through Amazon, through an agent which is an electronic mode. Are you following, guys? Now what we are discussing over here, if it is a foreign company which is there in this definition of 2 subsection 42, that's what I've given examples over here, guys. If it's a foreign company in 2 subsection 42, then only this chapter 11, companies incorporated outside India, is applicable for that company. Now they are saying, so look at this applicability of this chapter to foreign companies. I have written it down over here. Look at this. Sir, no place of business, no, nothing is going to be applicable. If it's a foreign company, for example, Tesla has no place of business in India, then Companies Act is not applicable to Tesla. Foreign company has place of business in India, then only this chapter is applicable. That's what they're saying in 379. This particular chapter is applicable if you satisfy the definition 2 subsection 42. Now they are saying additionally, guys, if it's a foreign company and 50% or more, the words they use is not less than 50% of equity paid up share capital or preference share capital or both is held by people in India. This is held by whom, guys? This is held by people in India. Then it becomes a deemed Indian company, and such a company should follow all the provisions from 1 to 470 of the Companies Act. That's what we have here, guys. Very, very important. This is the most important provision, and that's why I'm spending time. Few foreign companies have to follow this chapter and other chapters as if it is a company incorporated in India. If not less than 50% of the paid up share capital, both equity and preference, of a company incorporated outside India is held by people in India. Whose people in India? Citizens of India, or by one or more companies which are incorporated in India, or combination of Indian citizens or Indian companies. Are you following, guys? This is deemed Indian company. This is the first point that we have here. What do you mean by deemed Indian company? Remaining portions are very quick, guys. What do you mean by name board of foreign company provision or prospectus attachments can come in MCQ? Name board is very simple. If I come down, the name board provisions is there over here, guys, which is there in section number 382, display of name of a foreign company. If a foreign company is having a place of business in India, then the name of that company and the country where it is originating should be mentioned in all documents of the company, like bill heads, letter papers, notice, official publication, and in every place where business is carried on, and in every branch it should be in English and in vernacular language, the name of the company and which country it is from. For example, Uber, if it's having an office in Bangalore, outside the Bangalore office it should have Uber is from US. Are you following, guys? And also, if company is issuing a prospectus, in that prospectus and advertisement also this name should be there in English and vernacular language, guys. This is the next point, name of foreign company provision. Sir, what do you mean by attachments in prospectus? Attachments in prospectus is simple. If a company, foreign company is issuing prospectus, okay, if they're issuing prospectus, the following should be annexed to the prospectus. The following are the important attachments that I have to annex, guys. First is expert consent should be there. Just 5 points. No other option apart from memorizing. I will quickly try to cover some concept over here. You have to mention expert consent. Then appointment of copy of managing director or manager. If such appointment is oral, then full particulars of the contract. Full particulars of the contract, guys. So appointment copy of the managing director or manager, and oral means full particulars. So appointment of the managing director and manager. Then details of any material contracts entered in last 2 years. Very, very important. This foreign company in India, any material contracts in last 2 years, and copy of underwriting and copy of power of attorney. Any power of attorney if prospectus is signed, duly authorized through the agents of directors. So simple. Prospectus means you're getting money from public. Let's look at the logic. Since it's money from public, get expert consent. Somebody has to be responsible. That's why managing director or manager, if appointment is there, otherwise oral details. Since public money is there, what the transactions company entered in the past 2 years I want to know. So material contracts. Getting money from public, if public is not subscribing, we go to underwriter. So I want to know what type of underwriter you have kept over here. And lastly, since the foreign company head is sitting in US, Germany or some other country, a copy of power of attorney, the person who is responsible in India, who is the agent of the foreign directors, who are they responsible? All these parties' name should be there, guys. That is what is contents in prospectus. Of course, ignore the spelling here, guys, but contents in prospectus. Are you following, guys? Let's go to the next one. Next, let's go to something very important. Circular clarification on what is meant by electronic mode. So if you see, I told you a foreign company is a company which has a place of business in India by itself or through an agent, which can be physical or electronic mode. Now, because the internet is so wide today, we had to have some definitions clarifying what is electronic mode. And a lot of times questions have come from this particular notification where you have to be very aware. What is electronic mode? How can business happen in electronic mode? Is WhatsApp email included? Answer is yes. They are trying to say, they're trying to cover almost everything possible, guys. Look at this. Electronic mode means, the definition used, this means. So in interpretation of statutes, I will be saying, or I would have told you guys, that means its logical definition. Electronic, carrying out electronically activities, whether main server is in India or not. Where the server is located doesn't matter. Is the transaction happening electronically? B2B and B2C. For example, you're buying a t-shirt from a brand in US. Okay. Data interchange. Emails are being sent. Okay. B2B, for example, for the employees in your company, you purchased car from Tesla, okay, it's a B2B transaction, or any other digital supply. You know what is supply in GST? This is digital supply transactions. For example, PO raising, claim for insurance, payment remittances. Let's say you're doing money exchange, all those things will be covered over here. Then offering to accept deposits or inviting deposits or accepting deposits from securities in India or from citizens of India. Basically, foreign companies raising deposits from citizens of India or through securities in India. It's again online transaction. Any financial settlement, bank loans, all those settling, web-based marketing, Meta ads, Google ads, advisory or transactional services. Let's say you're taking some doctor consultation or any transactional mergers and acquisition. Deloitte from US is giving advice to some transaction in India. Database service like cloud, Amazon, etc., Azure, all of that. Products, supply chain management, all this logistics, ship transport, all of that. Some examples I have given over here. Online service such as telemarketing, guys, online marketing, influencer marketing, you're getting some US influencer, or telecommuting or telemedicine, online consultation, online therapy sessions for your mental health. Then education, if you're taking online AI courses or any information research. Then all data communication like email, mobile device, social media, whether through email, mobile device, social media, cloud computing, document management, voice or data transmission, or otherwise. Why is this important, sir? That's why I read the whole thing, because keeping this dabba as base, they can ask a lot of questions. I hope some examples I gave you gave some clarity. So this is that circular notification for electronic mode. Last two questions. Next, penalty 392 and 393 consequences not yet tested in new syllabus. They can ask if a company has not followed the provisions of foreign company, then there is all the penalty is there, guys. What is very interesting over here is usually they will tell penalties 100 rupees per day, 500 rupees per day, 5000 rupees per day, etc. Here they are saying it is 50,000 rupees per day, during which the default continues. Are you following, guys? The penalty is 50k per day, during which the default continues. Foreign companies, I'm asking in dollars. Rest you see, any fine for defaulting in this provisions, the key point here is 50,000 rupees per day. Remaining for company is not less than 1 lakh but up to 3 lakhs. That's a one time. For continuing offense only 50k per day, and punishment for officer minimum 25,000 but can go up to 5 lakh rupees. Now 393 is a very interesting provision. If I am setting the paper, I am going to ask you in 393 only, guys. What is 393 saying? Imagine there is a foreign company, let's call it Uber, and let's say here there is Mr. X, that's you, okay, that's you, or let me say Mr. CA, okay, future CA, correct? Now this foreign company has not registered as a foreign company under the Indian Companies Act, even though it has a place of business in India, and still they are continuing to do business. Now tomorrow, if there's any contract between this foreign company Uber and Mr. CA, and if there is any non-compliance of any promise or commitment not done, the CA here, he can sue the company. Yes, he can sue the company, but the foreign company cannot sue the entity or individual in India. Why? Because this foreign company did not get itself registered. They do not have the benefit under law to sue parties in India, but parties in India can sue the foreign company. If your memory is good, you would have studied this in consequence of partnership not getting registered. So when a foreign company fails to comply with the provisions, it will not affect the rights of third party against the company. However, it will affect the right of company to sue the third party, guys. Sorry, it will affect the right of company, so company cannot sue the third party. Are you following, guys? And same way, it will not affect the validity of any contract entered into by a company or its liability when sued by third party, but company cannot counter sue the third party. It cannot claim set off. What do you mean by claim set off? Set off is not possible means, for example, Uber has to pay Mr. CA 100 rupees, Mr. CA has to pay Uber 50 rupees. I can set off and only ask balance 100, balance 50. This 100 will not be there. So this 50 only will be there. Are you following, guys? That means if both of them are debtors and creditors for each other, that set off is not possible because you are not there under Indian law. Are you following? So benefit will only be given to the third party or creditor. I'm just going very fast, guys. I'm hoping you're able to catch the speed. Last point, in foreign company. Where is this foreign company? Yeah, in foreign company, we are done with this 392 and 393. Last one we have is 381 and 384. Filing of accounts and annual return for a foreign company. Very, very important. And in 381, amendment in RTP May 25. FC1 to be filed along with RBI approval. This also has not been tested yet, guys. So first let me go to filing of financial statements and annual return, guys. Look at this. Annual return has to be filed within 60 days from the end of financial year. So if I have the financial year ending, from this within 60 days you have to file the annual return, and within 6 months you have to file financial statements. That's it, guys. That's it. Look at this. Annual return has to be filed within 60 days from the end of financial year in form FC4. So I will file in form FC4, and then if I come above, within 6 months from the end of financial year, you have to file FC3. FC3 has to be filed, guys. So I'll be filing FC3. Okay, within 6 months from end of financial year. So just to summarize, annual return will be filed within 60 days from end of financial year, and financial statements will be filed within 6 months from end of financial year, and not AGM and all here, guys. The key base date is financial year. And are you following what I'm saying? Again, let me repeat. Annual return 60 days, financial statements 6 months. What is important over here? Very, very important. Again, not tested. Very important for our exam. This FC3 should be filed for all place of business established by the foreign company in India as on the balance sheet date, along with some attachments. And can I grant for extension? Yes. If you are not able to file within 6 months, you can request the registrar and extend for maximum not more than 3 months. Not more than 3 months. And its books in India will be audited by a CA or CA in practice. So now what are these attachments? 3 important attachments you have to memorize, guys. File within 6 months in form FC3. FC3, therefore 3 attachments. Extension, maximum 3 months. So what are these 3 attachments, guys? Statement of related party transaction. Hey, are you doing any money laundering? Are you doing any hawala transaction? Then statement of repatriation of profit. Hey, you came to India and did business. How much money you are taking back to the home country? And statement of transfer of funds. Hey, you came and invested funds. How much money you are taking back to the home country? Got the logic? So what are the 3 points? Related party transaction, repatriation of profit, and transfer of funds. These 3 things should be remembered, attached along with the FC3. Now last one is in section 380. In 380, we have this. I'll explain what is this amendment in RTP May 25. So here what they are saying and what the amendment is, let me change it, guys. The FC1, when you file that FC1, basically when a foreign company comes into India, some documents have to be delivered to registrar by the foreign companies. What are all those documents? Within 30 days of establishing a place of business in India, within 30 days of entering into India, they have to file a form FC1 within the following attachments. If any information changes, then FC2, the changes alteration will be given within again 30 days of alteration. Sir, what information? Basic. Who are the directors of the company? What business they are doing? The MOA AOA details, certified copy. Then the charter document of the MOA AOA in the real country, like in UK or Australia, it's called charter document. The address of the company. Then directors, all their KYC details, DIN, SIN, date of birth, the passport details, all of that. Then declaration that none of the directors have been convicted from forming a company in India, and if they had business in the past, date of opening and closing such business in the past, and the office address. These are some basic details, and again they have to tell who is the responsible person for this foreign company in India. The name and address and the name of the person who are in India, who are authorized to represent the foreign company in India to whom I can send legal documents. All these documents have to be filed. Now coming to the amendment, this FC1 shall be attested from RBI under the FEMA Act, and it should be filed to the registrar of jurisdiction of New Delhi. It is not jurisdiction of New Delhi. This is replaced. This is replaced. You can file it under Central Registration Center. So before you had to go to Delhi and file, now you can just go to the Central Registration Center and make the filing online, guys. So this is the amendment in section 380, which is not yet tested. With this, we are done with the expected questions for our favorite foreign company, which is done. Let's move on to the next topic, guys. Now let's quickly start the expected question marathon for General Clause Act. I don't know why students don't like this particular chapter, guys, but one of my favorite chapters is this only. In the regular class, I spend so much time in this, and it's a very fun loving chapter. If you remove the myth around this chapter, again guaranteed 6 marks in exam. I will be discussing only the expected questions that I have marked here, since this is an expected questions marathon. However, in our detailed other laws concept marathon plus workout, which I have uploaded, which you know where to find, in that entire General Clause Act is discussed for 1 hour quickly, guys. If you want the whole chapter, go there. Not just for this this particular chapter. Any chapter, you can go to the detailed marathons. Let's quickly start off, guys. First one, section 19, official chiefs. Now, what do you mean by official chiefs? It comes under the subheading powers and functionaries. What is powers and functionaries? Quickly, let me finish some key points. Power to appoint includes power to suspend or dismiss. That means if a commissioner can appoint assistant commissioner, he can also suspend or dismiss him. Next, only key points I'm discussing over here. Power conferred to be exercised from time to time. Let's say a police constable has a power to arrest somebody on the road if they're doing some nuisance. Every day I don't have to give him that power. He always has that power. Like this, there are some powers over here. Powers and functionaries. Under that, official chiefs and subordinates, I have marked it because we have RTP and MTP questions in this, but not tested in the main exams. A law related to chief or superior of an office shall apply to the subordinates also who are performing the same duty in place of the superior. Simple. Let's say a work is given to manager. Okay. Now manager is not doing that. He is delegating that work to the assistant manager. Now whatever rules that the manager has to follow, the law that the manager has to follow, even the assistant manager has to follow. That's what they are saying over here. Same concept over here, successor. For example, today if I'm a CFO, I resign from my job and the next CFO is coming. Whatever I followed, the next CFO also should follow. That is perpetual succession, and it is my duty, the one retiring, to share all the knowledge of law and compliance, etc. to the subsequent CFO. That's what is given here. In fact, I'm discussing more than the expected question. Here, the expected question, what I'm supposed to discuss is just this dabba. Since we are in powers and functionaries, I'm discussing the other dabbas also. Let me discuss the last two also. Substitution of functionaries means what they are saying. Let's say if a superior in an office knows something, it means the subordinate also should be knowing that. So if, for example, if Commissioner of Income Tax knows something, all the officers working there should also know that. So it's enough if I indicate to the superior, no need to indicate to everybody. Power to appoint or to include power to office ex officio. This one says, for certain people, I don't have to address them by name. It is equal to address them by name if I address them by their official position. For example, Prime Minister of India. I don't have to say Narendra Modi ji every time. I can just tell Prime Minister is coming. He is the chief guest for our next event in CA classroom. Something of that sort is enough, guys. Now let me go. The next one, service by post. Actually one concept only, but I took many concepts for you guys now. Now let me go to service by post. A service by post comes under section 27 of this act. Examiner loves this, guys. Examiner has 143 on this particular concept. He has asked this so many number of times, even I don't remember. He will keep asking. We just have to know whether it's going to be your September exam or it's going to be little later? That I don't know, guys. Start off. What they are saying, if in any act, for example, they are saying in dividend, you have to send dividend by registered post, or they are saying notice for AGM should be sent by registered post. Wherever the word the post is used, where the word post is used, it is deemed that the post has been sent correctly. It is deemed that the post has been sent correctly if the following three are there. Properly addressed. To address is correct, not a wrong address. Prepaying, sticking the stamp, and posting by registered post. So if these three are done, that means the post is properly served in the ordinary course of business. Sir, what if income tax has sent a notice by following proper address, prepaying, and by registered post? The person who's receiving the notice returned it back, then I can't do anything, guys. This act is saying if the above three is done, then the notice is properly sent. Based on this, there have been some case laws. What is that? Look at this. Where notice is sent to landlord and the tenant is returning it, still notice is properly sent. Still notice is properly sent. Sometimes in some places you will see notice has to be sent by registered post. In some place you will see registered post acknowledgement due. Wherever they used registered post acknowledgement due, you have to send as per that. Wherever they have used registered post, you have to send as per that only. Are you getting it, guys? What is the difference, sir? Registered post acknowledgement due means sometimes in your house when you get the courier, you will get a signed note. That is registered post acknowledgement due. And last one, look at this. This is what I already explained. Now, it is held that where notice is sent by registered post to person concerned at proper address, it is deemed to be served upon him unless the contrary is proved. That means if the following three are followed, it is deemed that notice is correctly sent. That's it. After this, the sender's liability comes to an end. This is meaning of service by post, guys. The first one is done. Next is definitions. Definition of financial year, government, commencement or official gazette. Many definitions are there. Some they will ask in exam. Financial year, if it comes in the exam, financial year is what you and me know. 1st April, commencing on 1st April, ending on March. What is calendar year? As per British calendar, it is calendar year is what we know, our Jan to December. Are you following, guys? A similar point to this, let me cover. When they say month, month is reckoned as per the British calendar. What is month as per British calendar? Jan to December. That means Jan has 31 days, Feb has 28, 29, whatever the year it is. That means you should not apply the income tax provision where an income tax every month is taken as 30 days. That is not applicable in GCA. Take it as per what, guys? I will take it as per the British calendar. So this is the first definition that we are seeing. Financial year. Let me go and see definition of government, guys. Government definition you all studied. Even if you didn't study this act, I will guarantee you all studied government definition. When, sir? In school days, in class 8, in social studies, one subject is there. One social paper is there. Correct? You remember, guys, getting the deja vu. That paper you studied for CA Inter, GCA, way back 10 years or 15 years back. There they are saying government includes central and state government. Hey, this I know, sir. What else is there? Do you saw the Singham movie? Singham in Hindi or Tamil or Telugu. That lion, okay. That movie basically represents the emblem of India. That 4 lions are there. Forget the movie for the time being, guys. If you have not watched, means maybe you escaped also. Fine, leave that, guys. It's a good movie or bad movie. Not the time to discuss now. In that, you will see 4 emblems. In whichever angle you see the 4 emblems, you can only see 3 lions. The 4th lion will be hiding. Like that, government here includes 3 wings. You can always see only 3 wings. The 4th lion is hiding. One wing is legislature. Other is judiciary, court and executive operational. This I am sure whichever school you studied, they will have covered it. If they didn't cover, means you studied in the wrong school, guys. No offense. So the 3 things is legislature, law, executive, operations and judiciary, which is court. Are you all with me? Following, guys? Hello. Okay. I will keep going, guys. I'll keep going. This is the next one. Very sorry. Yeah. So we are done with government. What is commencement or official gazette? Very simple. Follow. Commencement is nothing but when an act is coming into force. When an act is coming into force, generally it is the date on which President is signing. So commencement is the date on which an act comes into force. Okay, what is that date? Generally they are saying an act comes into force if a date is mentioned for that. That means when an act is published, it is published in the official gazette. In the official gazette, they will mention any specified date. If no date is mentioned in the official gazette, then an act is coming into force on the date on which President has given his assent. On the date on which President has given his assent, guys. Are you all with me? I hope you're all following, guys. Let me go to the next definition. We are done with this. We have to go to official gazette. Yeah. So how today government gives updates on Twitter, etc. Those days, or even now, updates come in official gazette. Those days it used to be a print medium. Now it is a website where if you just type Government of India official gazette, you will find a website where all the publications, official news from government comes. But since the law is made back then, I will apply principles of doctrine of contemporaneo exposito. And here I will tell you, it is a public journal authorized legal document. What is important for me for MCQ? This published document is published on a weekly basis by the government. Today it's published on a minute basis, guys. But as per act on a weekly basis. And the gazette prints official notice, any official update, like how we all give Instagram story update, official update from government comes in this. And therefore, this is basically this is printed by the Government of India Press. Government of India Press will do it. And which department it is? Department of Publication, Ministry of Housing and Urban Affairs. These are the key words what I covered, you should remember, guys. It is an authorized legal document published on a weekly basis. It is an official notice from government published by Government of India Press. Which department? Department of Publication, Ministry of Housing and Urban Affairs. That's it. These are the key points in definition of official gazette. Are you following, guys? With this, we are done with the definitions, guys. There are still some more definitions which I have not given in the expected questions. But if you want me to highlight them, if you want to revise at your end, revise even these definitions. Good faith has been repeated multiple times. And this definition of immovable property. Immovable property. If you want to learn more definitions, I'll give you 4 more definitions if you want to learn by yourself. 1. Affidavit, learn. 2. Immovable property shall include learn. Good faith, number 3. And number 4 is document. But document is tested in one of the latest attempts. So the chances for this is a little less compared to the other definitions, guys. I know it's not there in expected questions, but if you want me to highlight what is important, I can highlight the whole chapter itself. Expected questions is based on patterns, what I think may come in the exam, guys. Again, I'm telling you, this will only give you about 60 marks coverage in the exam. Please, for the time that you have, revise the whole syllabus. Here we are revising all the expected questions. Next, this yellow is all the important areas. This what I have done in our book. What I have done, I have kept something called key provisions from the entire act, section 8, 9, 10. It's just 2 pages. Let me finish all these 2 pages quickly. First is section 9, which talks about commencement and termination of time. What is this, sir? Whenever they use the word from, for example, dividend has to be declared. Okay, dividend is declared and it has to be paid within 30 days. Sometimes they use the word. It has to be paid within 30 days from the date of declaration. Correct? From the date of declaration. So if date of declaration is 1st October, if date of declaration is 1st October, guys, then for counting those 30 days for paying dividend, I will not count 1st October. I will start counting only from 2nd October. So my date will end. If I start counting from 2nd October, it will end on 31st of October, guys. Are you following? So whenever they use the word from, dividend has to be paid from the date of declaration. You have to file to ROC from the date of passing resolution. Then that date you exclude and start counting from the next date. That's what they're saying for from, guys. Then next one is basically to. If I use the word to, sometimes in act if I use the word to, then to is the end date. It will not go beyond that particular date, guys. Next we have this gender and number. Generally words importing masculine gender shall include even feminine. See, many times in act they will tell he should file, he will come. So they are saying here he includes she. Masculine gender includes even feminine. Okay, but this has an exception. Exception, what is exception? Where law is specific, you cannot take that exception. For example, Karta of a HUF. Earlier it used to be eldest male member, correct? It used to be, not now. Earlier Karta means they used to say eldest male member of the family. That means, can I assume male includes even female member? Therefore, Karta includes even female member. Before the amendment, I cannot apply this provision. But now, Karta, there is an amendment in HUF. It is not eldest male member or female member. They use the word eldest member of the family. The eldest member of the family is known as Karta. So here I can't apply this provision. But to give you the conceptual thing again, basically where law is silent, masculine includes feminine. But law is specifically saying here include only masculine or include only feminine. Then I cannot do the opposite. Next they are saying words in singular shall include plural and vice versa. However, this depends on the case where it is used. Generally, singular will include plural and it includes vice versa also. But where act is specific, previous year in income tax means previous year. You cannot take previous years. Are you following? There are a lot more examples, but I'm sticking exam oriented over here. Next, computation of time. This is very simple, guys. This part you will read by yourself if you want, but I will give you the concept over here. Computation of time means, for example, deadline is falling on a emergency holiday. What will happen? I have to file on the next day. Suppose deadline is falling on a planned holiday, Sunday, or let's say Diwali. Usually you will all tell I will file on the previous day or no. This act is saying if an obligation, look at this, or a deadline is falling on a day which is a leave, whether it is an emergency leave or whether it is a planned leave, they are saying where due date as per law falls on a holiday, any type of holiday, it shall be deemed to be extended by 1 day, not the next day. It is the next day on which the authority is open. For example, Diwali came on Saturday. You cannot tell now deadline has become Sunday because Sunday also is leave. So next working day for authority is Monday. So next working day. So next 2 months of authority is closed. Then it will be extended for every day until which authority is open, guys. Next, measurement of distance. If you want to measure distance between two places, this you will be experts in income tax where you have to measure distance between two places. They are saying you will measure using a straight line on a horizontal plane. Unless some other act is saying you measure using Google Maps or you measure using flight or you measure using train route, you can measure using that. But if act is silent, if I am measuring distance between two places for any regulation, then unless a different intention appears, I will measure them on a straight line on a horizontal plane. Next is duty to be taken on pro rata in enactment. Here what they are saying in simple words, for example, they are saying, I will give you 1 bonus share for every 3 shares that you have. Sir, now I have 10 shares, sir. So if I have 10 shares, how it will work now? For 9 shares, I can give you 3 bonus shares. For remaining 1 share, I can give you only 0.3 bonus share. But 0.3 is not possible. So for 3 shares, I will give you bonus. For 0.3, company will compensate in some other way. So what they are saying in simple words, company will tell I will declare dividend on 10% on face value. But let's say face value fully is not paid. Only 7 rupees is paid up by the company. Then company will proportionately calculate the dividend and paid on paid up value as per section 51 of Companies Act. So where the whole amount is not payable, then pay proportionately. Simple, guys. How many times you have used proportionate calculation? Are you following, guys? They'll say for every 10 shares that you have, I will pay you 5 rupees dividend. I have only 1 share. How much to pay? Proportionate. That's it. So they are saying wherever duty to be taken pro rata, where any payment is made on percentage or amount, if the whole amount cannot be paid, they are saying you will measure by weight or quantity or any other way and you compute it proportionately, guys. That's what is there in this page. Key provisions. We are covering all the key provisions over here. Come down, provisions as to offense punishable under 2 or more enactments. Let's say, for example, you have done a robbery. Okay, for that police has arrested you and put you in station for 2 days, gave you nice beating and they sent you out. Okay, well, you enjoyed. Now, one more police station from a different city is coming and again arresting you and saying, hey, you only did that crime, no? Come, let me give you some drums for you. Again, after 1 more month, one more police station from one more city is coming. Will you agree, guys? You will tell, sir, first you stop, sir, not the marathon, this example. So, if I have done an offense, For example, insider trading. Okay, I am liable for 25 crores in SEBI. I am also liable for 10 crores in Companies Act and imprisonment in both the years. Here, let's say 10 years is there. Here, let's say 5 years is there. Can I give combined 15 years? No. So they are saying where if a person, if what they're saying over here, look at this. A person shall not be punished twice for the same offense. That is the first point to note. What is the first point to note over here? Punishment under 2 or more enactments. You will not be punished twice for the same offense case. But however, they are saying this provision will not apply. If the offense under the 2 are distinct and not identical, then none of these provisions will apply. What they are saying, if you have committed 2 offenses which are different, one I have done pickpocket, second I have done kidnap, you can't tell both are same. For kidnap, separate punishment, for pickpocket, separate punishment. So first they are saying for the same offense you will not be punished twice. But if the offense is 2 different offenses, then this provision will not apply. And lastly, one more third thing they are saying, let's say I have been arrested for kidnap and pickpocket. Okay, where there are 2 alternate charges, kidnap and pickpocket. In one thing I am accused, in one thing I am acquitted, does not mean I become accused of the other, for convicted of other. That means it is proved that I did the kidnap. It is proved that I did the kidnap. Now does not mean I did the pickpocket also. That should be proved separately. Or if it is proved that I did not do the pickpocket, does not mean you didn't do kidnap also. Both should be treated separately. So in 2 alternate charges, what they are saying, in the same trial, if they are saying if you are acquitted, if you are released for one, you does not mean you are released for the other also. Are you following, guys? But the words to be used is if you are acquitted of one, it does not mean you are convicted, you will not be convicted for the other one. These are the key provisions that we have. What I have done over here is I have covered all these points over here. So now if you look at this, I have also covered provision as to offense under 2 or more enactments. We just have 2 more concepts. Section 23, provision for making rules or bylaws and effect of repeal. Now provision for making rules or bylaws, if you see what they're saying here, section 23, provision for making rules or bylaws, guys. Here what they're saying, if anybody wants to make an act, how an act is made, any act, tomorrow income tax act or new accounting standards for inter, first you have to publish a draft. That draft will be made by the government, and that will be published by the government to the entire public as a study circle for public to give their feedback and all. I'll tell you the story, guys, then you can read this fully. The government will first make a draft and publish that to concerned parties, not publicly, but to stakeholders like departments, CS, etc. We will read this entire act and give them a feedback. We will give them a feedback. After they take a feedback from this, they will again make a new draft, and again they will make a final draft, and they will again republish it. If there is no objection for this, if Parliament approves, this will be published in the official gazette. That's all. Run through these points. Keywords I have put in bold. This is the story, guys. That's all. See, look at this. For example, in a manner in which government concern prescribes, there should be no objection should be received from other people. Okay, all those will be there over here. We just have one more concept, effect of repeal. But apart from that, I also want to cover one more concept. Yeah, this one. Okay. This dabba must be there here. Yeah, section 8, especially section 8. Look at this. Especially section 8 is very, very important for case study. I don't know if you can see here, guys. Section 8, very, very important. So we have last 2 sections. First, let me finish effect of repeal. Again, this is a direct theory question. You have to mug up the side headings. Let me give an example. Let's say GST has come and removed VAT. So GST has now replaced the VAT. So when this happens, what happens? Whatever is there in VAT, previous inquiry, litigation or remedy will still continue. Any penalty in VAT will still continue. Just because GST came, penalty is not waived. It will not affect any rights under previous act. I have some input tax credits, sir, in previous VAT. That will also be continued. It will not affect the previous operation. Registration in VAT will continue unless the current tax says that will not continue. Are you following? GST says it will not continue, so it will not continue. Then revive anything not enforced. For example, if I cancel GST, okay, effect of repeal. Repeal means removing an act. Tomorrow, if I cancel GST, it does not mean VAT is back. Are you getting it, guys? For VAT to go, GST came. Tomorrow, if I cancel GST, it does not mean VAT is back. So, when VAT went, all your previous inquiry, litigation, remedy stays, your penalty stays, your rights will stay, previous operation will stay. And tomorrow, if GST goes, if if a new act goes, does not mean old act is back. Okay. Now, this is the last important one. If I have to pick one question which I think may come in the exam, it is this one. Construction of references to repealed enactments. Let me explain this a little bit more in detail so you will understand. Okay. We have Companies Act 1956. We have Income Tax Act 1961 and we have Companies Act 2013. Now, in the Income Tax Act 1961, they will say compute net profit as per Companies Act 1956, because when this act was made, the only Companies Act we have is this. So, for example, that time they would have told compute net profit as per section 197 of Companies Act 1956, for example. Now, what has happened? This act is closed and new act, Companies Act 2013 has come up. Correct? So, now what happens? In Income Tax Act, they are still referring to the net profit definition 197 in the old act. But the old act is removed, no. So now in Income Tax Act 1961, how will I compute net profit? So what they are saying, in such a case where the old act is repealed and replaced with a new act, the relevant provision, net profit, will be referred to in the new act. It is deemed that now Income Tax Act is not referring to net profit in old act. Even though it's not amended here, it is directly referring to the net profit definition in the new Companies Act. Are you following, guys? That is what I have explained over here in detail. Construction of reference to repealed enactments. I gave another example over here. I gave a math example in this book over here. And for you guys, I have given basically normal net profit example. I hope you guys are following, guys. Clear? With this, we are done with General Clauses Act. All the key provisions in this particular act. In less than 30 minutes, we have finished it, guys. Let's move on to the next act. Hey guys, now let's start off with the expected question marathon for our favorite chapter, Interpretation of Statutes. Whether you're going to skip this or learn this, examiner has decided to give 6 marks from this, guaranteed 2 questions in the exam. If you have decided to learn the whole chapter, great, do that. But if you have decided to skip this, at least learn these 8 questions that I have marked here, which covers significant part of the chapter. The first one is Doctrine of Contemporano Exposito. But before I go there, let me give you a simple overview of this chapter. In this chapter, it is broken down into 3 parts. Rules of interpretation, and rules are classified into primary or secondary rules. Within that, we have some rules. Aids of interpretation, which is classified into internal aids and external aids, where we have some points. And lastly, we have interpretation of deeds and documents. The first 2 are basically guides that we have to interpret an act. The third one, interpretation of deeds, is mainly to interpret documents which is not within the law, like not approved by Parliament. For example, rental agreement, Parliament is not involved. Let's say you enter into a contract with PVR Cinema Theatre. The Parliament is not involved over here. It's only between the 2 parties. In Indian Contract Act, you will see agreement with consideration becomes a valid contract. Those kind of agreements. Let me start off with the first rule that we saw, Doctrine of Contemporano Exposito. Very simple. Many times when you were studying law in foundation or inter, you would have seen, sir, why is penalty so small? In Indian Contract Act, you will see for race horse, 500 rupees more or less wager. Like this small amounts of penalty we will see. In Price and Competition Act and foundation, you will see just 1000 rupees. We'll get sometimes thinking, no, why it's so small amount? Sometimes very old provisions will still be there in the act. So, for that only under secondary rules, we have Doctrine of Contemporano Exposito. What this doctrine basically says is, if you want to understand a law, then understand it from the time when it was passed. So this means law should be understood at the time when it was actually passed. Remember that the maximum is applied for constructing ancient statutes, old statutes, but not for acts which are comparatively modern. For example, in the Companies Act 1956 and even in 2013 Act, Section 56 talks about physical transfer of shares. Today we are doing demat, no sir. Why still physical transfer provision is there? Because of this doctrine. So in this simple words, maxim states give importance to the economic situation and environment condition that existed when the time when the law was passed while interpreting any provision in the act. I hope this provision is clear for you guys. Next one, elements of a document, interpretation of deeds and document. Very, very, very important for your September 25 exams. I've been saying this for a few attempts and I will keep telling this actually until it comes. Reason being, in new syllabus, the only untested area is this dabba, interpretation of deeds and documents, which I am going to explain. Like I already told you, what do you mean by interpretation of deeds and documents? These are agreements between two parties. Let's say you and me enter into a contract for purchase of class. You came and purchased my class. That's a valid contract. That's a deed. That's a document. Correct? How do we interpret that? For that, they are saying there are three rules. Golden rule, elementary rule, and there is something called conflict resolution. Three rules are there. Again, golden rule, elementary rule, conflict resolution. Let's say you purchased a class from the CA classroom. Okay. So what are these rules saying, guys? Golden rule, after you purchase, let's say a class from CA classroom, in the class I would have mentioned, for example, validity is 6 months. What if I mention by mistake, validity is 6 years? It's a typing mistake. Now, you cannot claim for 6 years because it's a mistake in email. So what they are saying, when you are trying to interpret deeds and documents, okay, they are saying, read the document as a whole. This is class for, let's say, September 25 or Jan 26 attempt. Then how can it be valid for 6 years? The circumstance in which words are used is to be considered. Okay, the word is used in email. And last importantly, who drafted that email? It's not me. It's not some legal advocate. It's some intern who is working. So you have to look at two important things. The status and training of the parties who have used the words in their consideration, basically their experience. So the golden rule of interpretation of documents, they are saying, first you read the document as a whole. Whenever there is some issues in it, read the document as a whole. Then see in which circumstances the document is being used and the training of the parties who have documented the same. When this will come, let's say in rental agreement. In rental agreement, for example, I have put 50,000 in words, but in numbers I put 5 lakhs. Now I'll take 5 lakhs of 50k. They are saying you read it as a whole, use the circumstance where it is used, and take the training of the parties where it is taken, guys. Next, elementary rule of construction. They are saying elementary rule. Elementary means what? LKG, correct? So in elementary rule, when I'm talking about elementary, sorry guys. So in this class, entire time I have my son also around me. He's little unwell. So he is sticking around me. And when I'm recording this entire marathon, not for the whole time, but close to half an hour to 40 minutes, he's just sitting here because he wants to be around me. And he's very silent, but now he's just little bit, disturbing. Of course, he's here. So just tell hi to everybody, Dheera. All the best. So elementary means when you were in LKG, when you were learning ABCD, he's not in LKG also, guys. Much younger. Let me just pause and again get back to elementary rule. Okay. Bye, Sul.
Bye.
Yeah, sorry for the small distraction, guys. Let's get back to elementary rule in interpretation of deeds. What they are saying, a particular word cannot have different meanings in the same document. For example, if I use the word plant, guys, okay. Now plant means plant and machinery or the plant that with rose plant, all of that, which is the plant over here. So elementary rule says the same word will have the same meaning, no. For example, your girlfriend is saying, don't talk to me. Today it means don't talk to you. Tomorrow it means talk to you. No confusion like that. In documents, when one word is used, it should have the same meaning. unless the context compels adoption of a course. Unless the context says you have to use a different meaning. That means if I say plant, it is only plant. But if I say plant and machinery, then it becomes a completely different meaning. That's what is elementary rule, going back to our basics. So we are done with golden rule, we are done with elementary rule. Now let's go for conflict resolution. Very simple. In a document, if there is a conflict, for example, rental agreement, first page is saying pets are not allowed. Second page is saying pets are allowed. What to do, sir? I am confused, sir. I am a pet lover. No, document is like this. So simple. If there are more than two clauses, you have to take effort to resolve the conflict. What do we do in life if there is problem? We try to fix it. Correct, sir? If you are not able to fix it, then the earlier clause will override the later clause. What is the earlier clause? First clause, let's say first page is saying pets are not allowed. Then pets are not allowed. Whatever is there in second page, pets are allowed, that will not be valid. So earlier part will override the later part. This is what is the interpretation of deeds and documents, guys. Let's proceed to the next one, which is in internal aids, we have a few things like marginal notes, preamble or explanation or definition. Any of these 4 points can come as a simple 3-mark question. So let's get to these internal aids that we are discussing, guys. First is the preamble that we marked. What is preamble? Preamble is in the start of the act, which basically expresses the scope, object and purpose of the act. It is little more comprehensive than the long title. Now, the question is, can I use preamble to understand the act? Yes. But can preamble override the provisions of the act? No. So, preamble is part of the statute and can be used for constructing it. But the preamble does not override the plain provisions of the act, guys. In this chapter, whatever square dabbas that you see is a text which I have copy pasted from ICA study mat. All these circles that you have seen is what I have written in our own words, guys. The next one is marginal notes. Now, what is marginal note? Generally in your notebook or textbook, in the side you keep some summary notes. No, that's called marginal notes. So marginal notes are summaries and side notes found in the side of the section. Usually these are added after the president signs the act. Therefore, since it is added after it goes through the houses of parliament and president signs, these are not part of the enactment and hence it cannot be used for the purpose of interpretation or construction, guys. The next one that we have in our expected question list, what we have is explanation and definitions, correct? So if I go to explanations and definition, explanation, for example, I'll give you an example here. Examples are very good. In section 42, private placement, they will tell maximum number of people you can give private placement in a financial year is 200. But a question arises, sir, this 200 is for equity shareholders, preference, debenture holders, all put together. Correct? There is an explanation in section 42 which says it is 200 for each individual security holder. That means 200 for equity, 200 for preference and 200 for debenture holder. Therefore, explanation gives more clarity to a particular section. Therefore, it is explaining the words used in the section. It may be added to include something within the section or to exclude something within it. Therefore, it is very clear and it's part of the main section and can be used for the purpose of construction of any provision, guys. Lastly, let me go to definition sections. In definition sections, we have two types of definition. What are the two types of definition? First, they are also saying what is the purpose of definition for a proper interpretation and to avoid repetition. For example, if I say financial year means April to March, every time I don't have to repeat within the act April to March, April to March. If I just say financial year, it means April to March. What are the two types of definition that we have? First, we have this means, then we have includes, then we have means and includes. The most powerful definition is means and includes. The next most powerful is includes and then comes means. But logic is reverse. The most logical definition is when means is used. To give an example, if I say vegetarian food is or vegan food is plant-based food, that's where I used means. When will I use includes? Veg food includes fish. Doesn't make sense, huh? Correct. But if I use the word includes, and if I say veg food includes fish, fish becomes veg as per this definition. So whenever includes is used, logic is not there, guys. Now within and all the definitions we have will either have means, includes, or means and includes. So go through that points. Now the two types of definitions are ambiguous and definition subject to a contrary context. Sir, what is this? Ambiguous definitions are something we find definition may itself be ambiguous, means confusing. So it may be interpreted in lights of the other provisions of the act. So not to be read in isolation. Sometimes when you are confused in life, sitting alone in the room, what they will tell, don't be isolated, don't be idle, go mingle with the world. Same way when a definition is read in isolation individually, they are saying don't read that separately, read it with the whole act, then it will make some meaning, guys. Sir, what is definition subject to a contrary context? When a word is defined to bear number of inclusive meanings, the sense in which the word is used in a particular provision must be ascertained from the context of the scheme of the act. I'll again use the same example, plant or plant and machinery. The word may have multiple meanings, but in the context where it is used, the meaning itself will change. So we have multiple words where in context where you're using, the meaning itself will completely change. Let me give an example. If I say come here, that means you're going to come here. Hey, come here. That means I'm telling you more arrogantly and rudely to come here. So the same word, but context where it is used, the meaning itself is completely changing. I hope you got some clarity for this, guys. So with this, we are done with the next point over here. Now I'm going to rule of harmonious construction or reasonable construction or beneficial construction, guys. Sir, what is this rule of harmonious construction, beneficial construction, harmonious construction, and reasonable construction? First, what is reasonable construction, or also known as golden rule of construction? Golden rule of interpretation of deeds and documents is different. Golden rule of construction is different. Where one provision is capable of two or more constructions. For example, gift on occasion of marriage is exempt. Correct, sir. What if I get married 3 times? What if I get married 3 times? Or what if I get a gift of 500 crores on my day of marriage day? Is it exempt from tax? So capable of multiple meanings are when that happens, when the grammatical interpretation leads to certain absurdity, because gift on marriage is exempt, but what about three marriages? Then they are saying, in that case, when you have multiple interpretations possible, then it's permissible to deviate from the literal interpretation to avoid this absurdity, and the courts will deviate and do what, guys? They will give a solution, or they will interpret in such a way as to what the lawmaker thought. In such a way, what will be preferred? They're saying then the interpretation which furthers the object will be preferred more than what is going to defeat the object. What is the intention of the gift provision? You get married once, celebrate your marriage, so exempt, not for 3-4 times. So we will go towards the object of the act if there is multiple constructions. So basically reasonable construction for exam oriented, what it's saying, you can deviate from literal construction if there is multiple meanings, and court will go and give a meaning which is more closer to the object of the act. Sir, what is harmonious construction? Very simple. We will try to read the law together. However, where it is not possible to give effect to all the provisions harmoniously, then the collision may be avoided. What they're trying to say, if two different provisions are saying two different things, try to follow both. Mother is saying come home by 9 p.m. Father is saying come home by 10 p.m. What to do? You will come home by 9 p.m. to follow both. But in a situation where you can't follow both, a specific rule will override a general rule. Are you following, guys? So generally try to follow everything. Otherwise, specific provision for that thing will override. For example, MGT 14 should be filed to ROC within 30 days. That is generally said in section 117. But when you read section 128 of Companies Act, when books of accounts are kept in some other place, MGT that should be filed to ROC after board resolution, here they say you have to file to them within 7 days. So usually you file within 30 days, but section 128 says 7 days. So you have to file within 7 days, guys. Here in harmonious construction, there are 3 terms. Subject to, notwithstanding, without prejudice or without affecting is the meaning. Subject to means when the act is using the word subject to, I will follow this. You are going to watch this marathon subject to your preparation being done. If I say notwithstanding, hey, you have to watch this marathon of expected question. Whatever happens, even if you're not prepared, you have to watch. Without prejudice, without affecting, hey, watch this marathon if it's not prejudice, not affecting your other preparation. Are you understanding? That's it. That is the term of all this. So non-obstante clause, whatever I've given over here, the keywords you will go and read. I'm explaining the concept to you quickly, guys. Okay. Now let me go to the next one in our expected question. So we are done with harmonious or reasonable construction or beneficial construction. Sir, what is beneficial construction? Same as reasonable construction, but beneficial construction is a term that is added, meaning, for example, government is saying farmers have to get 1,000 rupees each to their bank account. Farmer is saying, I don't have bank account. You can't tell I won't pay. For the benefit of underprivileged section of the community, if any benefit is granted to them, we can deviate from the law and ensure the benefit reaches them. In simple words, where two or more ways of interpreting a provision, choose the one that gives relief and protects the benefit which are intended by the law. So basically they are saying, generally for improving conditions of certain class of people who are underprivileged or who have not been treated fairly in the past, if any benefit is given to them now, ensure it reaches them properly, guys. Next, the rule of exceptional construction, and within exceptional construction we are going for when may is treated as shall and when shall is treated as may, guys. Let me go to that. Yeah, in rule of exceptional construction, guys, normally when the words and is used, it means you have to satisfy both. When the word or is used, you satisfy this or that. That you guys know. Same way in may and shall, when the word shall is used, it is mandatory to follow. When you use the word may, it is only optional or directive to follow. But the 3-mark question that can come in exam is not this, but what I'm going to discuss now. There are some cases where may shall be treated as shall. That means even though the word used is may, you will treat it as shall. And these are cases, even though the word shall is used, you will treat it as may. Sir, what are these cases, sir? 3 points in each. 3-mark question, 3 points in each. 3-mark question. The third point in both is the same. The word may is used as a conventional courtesy. By giving shall interpretation would result in absurd results. So third point is similar. Now first point here, when may is treated as shall, the subject involves a discretion coupled with an obligation. The auditor may sign the audit report. No, he has to sign. So the word may has an obligation, then it becomes a shall. Are you following, guys? Second, the third one, using this might defeat the object or cause damage to the public. Oh, this third point only is the same, guys. Sorry. This one. Here third point and here third point are similar. Using it as may or using it as shall will defeat the provisions of the act or will give absurd results. First point has obligation. Second, they have used may as a courtesy, conventional courtesy, then you have to treat as shall. Here when shall is read as may, shall means mandatorily you have to do. You cannot tell government to do certain things mandatorily. So when shall is used against the government, shall cannot be used as shall. Are you following, guys? And next, when shall is read as may, in certain cases shall is read as may where the intention of the legislature so demands so. When intention of legislature demands you to do that, then you don't have any choice, but you have to follow that, guys. So this is the next concept of when shall is read as may and may is read as shall. Next, let me go to Hayden's rule and adjustum generis quickly. So what they are saying in Hayden's rule, guys, and adjustum generis. In Hayden's rule, very simple. Whenever there is any loophole in the act, that loophole is called mischief, and that mischief is tried to cover by using a Hayden's rule. So what they are saying, whenever there is any loophole, the law will try to cover that loophole with an amendment. And once an amendment is coming, the court will check, is the amendment covering that loophole? Loophole is called mischief. Look at this. Points to be considered by court while using this rule. What was the law before making the act? Loophole. What was the defect, mischief caused by earlier law? Some loophole is there, people took advantage. How does the parliament seek to resolve or cure the mischief? By passing an amendment or changing the law. And what are the reasons for this remedy? If these points are there, court will tell, okay, amendment stands valid. There is a need. Intention of this rule is to make sure that construction shall suppress the mischief. Loophole will go away and advance the remedy to those who have to get the remedy, guys. Are you following, guys? So here, when court is doing interpretation, they will suppress the mischief and advance the remedy. These are the key points in Hayden's rule. Next is adjustum generis. What is adjustum generis saying? Very simple. I will give an example so you can understand. If I use the word lion, tiger, cheetah and other animals, the rule says follow where look at this, where specific words lion, tiger and cheetah are followed by a general word other animals, then this general word other animals will take the same meaning of that of the specific words. Are you following, guys? Clear? So if I say in the house, in the kitchen, microwave, stove, chimney and other appliances, means what? Other appliances maybe can be water purifier or refrigerator. It cannot be a camera in kitchen. Are you understanding, guys? So when I will apply this rule, the statute contains enumeration of specific words. That means examples of specific words. The subject of enumeration consists the class or category. All fall here within wild animals or kitchen appliances. The class of category is not exhausted by the enumeration. That means I wrote only 3 wild animals. I didn't write all the wild animals name. I didn't exhaust the list over here. General term is following. Yes, general term other animals is following the specific term. There is no intention of a different legislative intent. If these points are there, then this rule is applicable. There are some exceptions when this rule cannot be applied. Ayo sir, then I have to remember these 5 points and another 4 points are no, guys. These 4 points, these 5 points are there means I will follow this rule. That means if these 5 points are not there, that is the exception. So these 4 points are reverse of the above 5 points. For example, preceding term is general as well as succeeding is general. Animals and other animals. Nothing is specific. So I can't apply this rule. Where the particular word exhausts the whole genus. Look at this. Here they are saying the enumeration consists, the subject of enumeration is not exhausted. Here they are using the word not exhausted. Here what they are saying, it is exhausted. That means I am writing down all the wild animals name in the world and writing other animals. What is other animals? Already all names are written. Then next one, when the specific objects enumerated are essentially diverse in character, I am writing fish, cheetah, bird and other animals. You are not covering one set of type of animals. You are covering everything. So it's very diverse. And last one, law itself is saying don't follow this rule. We have spent a little more time in this chapter. It's okay, guys. We are almost done now. We have to go to dictionary definition, foreign definition, earlier or later law, foreign decisions and usage in external aids, guys. Let me quickly go and finish that for you, guys. Now, what is the first thing we saw? Dictionary and foreign decisions, correct? Dictionary definition. So, in exam, can I use general dictionary to understand certain terms in the law? First, they are saying in this paragraph what they are saying. Please go and read section 2 in the act. Is that term defined? Yes, follow that. If it's not defined, then you can go to dictionary to understand the general meaning of that particular word, guys. Next, foreign decision. Can I follow foreign decision? Very simple. If you want to use foreign decision, first you check if the country and if that country and our country, for example, you want to take a UK case law, London and Indian system, is it the same jurisprudence? Then you can follow. But check if a similar case is already there in India. Indian decision is there. If it's there, follow Indian decision. Otherwise, you can go to referencing foreign decision. For example, Solomon versus Solomon. We all follow that. Next, guys. Earlier or later laws and usage. That's it. With these two, it will get over. Usage is very simple. Law is saying X, but we are following Y. Then what we are following will override the law in certain cases of usage where public has been following this for decades together. Even though law is something else, if public is following something else, then what the public has been following for over many years will have more impact than what the law itself says. That is called usage. The court should be unwilling to change the interpretation of the general usage of public against the law. Last one, earlier and later laws. Okay, here if there are two laws, okay, for example, one act in 1930, another act in 1950. Now these two acts are conflicting with each other. Which one I should follow? Here they are saying follow the later act, don't follow the earlier act. Look at the difference. In interpretation of deeds and document, in conflict resolution, earlier clause will override the later clause. So when it comes to deeds and documents, within the same document, what comes first will override what comes second. But when it comes to act, it is opposite. The later act will override the earlier act. Are you following, guys? Of course, there's logic for all of this. Logic in regular class, guys. Here, remember for exam, in law, later law will override, but in deeds and document, what provision you have first will override the subsequent provision, guys. With this, all points of interpretation of statutes we have finished in less than 30 minutes, guys. Let's move on quickly to the next chapter. Now let's get to the expected question marathon for LLP Act, guys. This act is important for every attempt because easily 8 to 12 marks from this will come. Suggestible recommendation is to learn the entire act, but if you're not able to do that, at least let's cover these questions. First is contribution section 32 and 33. Like how in a company, shareholders will contribute capital, and in a partnership firm, partners will contribute capital. In LLP, contribution by partner is called contribution. What all is going to contribute? Mostly any monetary or non-monetary benefits like tangible, movable, immovable, money, promissory note, whatever assets he is giving to the LLP, guys. Next, he will also give an obligation that in the future, like how in a guarantee company, shareholders will guarantee at the time of liquidation or winding up of the company. Over here, the partner will give an obligation to contribute, and that will depend on the agreement. Account all contributions of partner in LLP. He is going to contribute at a later point of time. Now, looking at this contribution, the third party or creditor will enter into a transaction with the LLP. He will extend his credit. Okay, bank is saying take 1 crore loan. Creditor is saying pay me after 3 months based on the contribution which has been given by the partner LLP. So based on the above contribution, third party or creditor can have, LLP will take obligation and they can be using this as a guarantee. This will be used as a guarantee. Are you following, guys? So the first concept is third party or creditor can enforce guarantee and give credit based on this contribution of partner, guys. Second concept, section 15 to 17, provisions related to name clause of LLP. Now what I have done here, I have summarized all the provisions from section 15 to 17 related to the name clause of LLP. First, what is important over here, LLP should of course use the name LLP, like how private limited company uses the word PVT LTD, here LLP or limited liability partnership. Then the name that the LLP is choosing should not be anti-India, it should not be anti any political party. So no name should be undesirable, or it should not be identical or resembles. It should not resemble any other existing company or any other existing LLP or any other existing registered trademark. Important to note here, in amendment what they removed is now LLP's name can resemble an existing registered partnership. So if registered partnership is XYZ and Co, LLP can be XYZ LLP, both can be same, because this act removes that defense given for identical name of LLP and registered partnership. Idea is to promote the partnership to get converted to an LLP. Next, when you are starting an LLP, you will apply to ROC for name reservation. That name will be reserved for 3 months, guys. Once you make name reservation, within 3 months, you have to complete the remaining incorporation procedure. And lastly, rectification of name. This is very similar to, not similar, same as what is there in Companies Act, rectification of name of company. So basically what happens, whenever the regional director feels that a company's name is identical to some other name of company, whenever the regional director feels the LLP's name is identical to some other LLP or it's undesirable, then they will pass an order for the LLP to change the name. Such LLP should change the name within 3 months. Change in 3 months from date of RD order. Once I change the name, within 15 days, I have to intimate ROC, but this is my new name. And once ROC gets the intimation, within the next 30 days, ROC will give a new certificate of incorporation. So simple, 3 months, 15 days, 30 days. Once I get RD order, change within 3 months, intimate ROC in 15 days, ROC will give you new certificate of incorporation 30 days. So this applies when the RD by itself is ordering you to change. But sometimes if I am an LLP or another person, if I see some other LLP copying my name, somebody copying my name, then I can complain to the RD. That complaint is called application to be RD should be made within 3 years of incorporation of a company. For example, let's say today some LLP has been incorporated using my name. Now I can apply to RD asking this LLP which is incorporated today to change its name within 3 years from now. If I don't make this application now, later that name change is not possible. Are you following, guys? This is all the name clause related provisions, guys. Next, the liability of partner and LLP, section 25 to 27, guys. Over here, let's go. Extent and limitation of liability of partner and LLP. The first key point is, unlike partnership, where partner is agent of other partners and LLP, here the partner is agent of LLP only, but not of the other partners. I will repeat, partner is agent of LLP only, but is not the agent of other partners. So mutual agency concept is not there. Keeping this in mind, first liability of LLP. We are seeing two cases. One where LLP is liable, second where LLP is not liable. LLP is liable when LLP is liable for act of a partner within his authority. For example, partner has the authority to take a bank loan. Partner took a bank loan, he is not able to repay, LLP will repay that. Or any wrongful act or omission by the partner in ordinary course of business. Partner has the authority to drive a car. He drove a car, met with accident, LLP is liable for this loss. This is when the LLP is liable. When LLP is not liable, LLP is not liable when partner is doing an act where he is not having the authority. Partner is not having authority to take the loan, but he took the loan. I am not liable. And the person knows he has no authority. The bank from whom the partner took the loan, bank knows he has no authority, or the bank does not know. Here, whether the third party knows whether the partner has knowledge or not is irrelevant. The key point is whether the partner has authority. Partner has authority, LLP is liable. Partner not having authority, LLP is not liable. Whether he believes him to be a partner or not, all that secondary. So conclusion of this, LLP is liable when partner has authority. Partner is not having authority, LLP is not liable, guys. Come down, liability of partners. When is partner not liable and when is partner liable? First, let me finish when is partner liable. Apply some common sense. Any wrongful act or omission of himself. Now, partner had authority to drive the car, but he made a mistake and crashed by himself, so he is liable to compensate the LLP. So, partner is liable for any wrongful act that he has done. When he is not liable, where the obligation is of the LLP. Partner took loan for the purpose of LLP. Now LLP has to pay. I will not pay. Or it's obligation of other partner. When some other partner does fraud, some other partner is liable, I am not liable. For example, if there are 3 partners A, B, C, if wrongful act is done by C, then C is only liable. A is not liable for the act of C, guys. This is liability of partners. So to summarize, LLP is liable when LLP is liable for partner when partner does with an authority. LLP not liable when partner does without authority. Over here, partner is liable for any wrongful act of him. Partner is not liable when it's obligation of LLP or obligation of some other partner, guys. Let's go to the next one. Unlimited liability in case of fraud. Now, fraud is everybody's favorite, guys. Very simple. Limited liability partnership. Limited liability partnership has an exception. Partner is having unlimited liability in case of fraud. When partner does with an intention act carried out by LLP or partners. With what intention they have carried out? With the intention to defraud the creditors or any other person for fraudulent person. Act is carried out to defraud creditors or any other person for fraudulent person. Then the liability of LLP and partners who had the intention to defraud. Who had that criminal intention to defraud? Only those partners in and the LLP will have unlimited liability for all or any of the deaths. And LLP and partners will have to compensate the loss suffered by the affected parties. Affected parties should also be compensated, guys. And lastly, what they're saying, where an act of fraud was carried out by the partner, the LLP is liable to the same extent of the partner unless it is proved the act was carried out without the authority of LLP. Meaning, partner is representing the LLP. So to what extent partner is liable, LLP is also liable. And here they're also giving them what to say, free accommodation, imprisonment up to 5 years along with fine, guys. So basically section 30 talks about unlimited liability. I have summarized the key points over here. Next, filing of annual return and declaration of solvency. So now in the financial disclosures, guys, 3 important things. First one is pretty easy. Maintain proper books of accounts. So what is important to remember over here? Normally we will tell only accrual basis, but for LLP alone they allow cash or accrual basis, and the rest are same. Double entry should be kept at registered office. In some cases, central government may exempt the accounts, guys, but the key point here is we can maintain in cash basis. Next, 2 important filings: statement of account and solvency and annual return under section 35. Both these have to be filed to the ROC, guys, but statement of account and solvency means we need time to prepare the FSR, so that will be filed within 6 months from end of financial year, signed by the designated partner. Statement of account and solvency is like the financial statements along with the solvency report stating that the company is solvent. This will be filed within 6 months to ROC. The other one, annual return, will be filed within 60 days from the end of financial year. So for both, financial year end is the key, guys. This one will be filed within 6 months from end of financial year, and this one will be filed in 60 days from end of financial year. Are you following, guys? If you don't file, for both, penalty is the same. For LLP, it is 100 per day, maximum 1 lakh. For DP also 100 per day, maximum 50k. Why I'm insisting penalty in this chapter? They have asked this quite a few times. This is with respect to financial disclosures, guys. Next one, let me go. Time limits in different cases of filing to ROC, new partner joining, name or LLP address changed, former partner leaving and intimating ROC. Let me go to all of that. Cessation of partnership interest. Basically, when a partner leaves a firm, why will a partner leave the firm? It can be for retirement, or it can be for death or dissolution of the firm, or unsound mind or insolvent. Now, in case of retirement, see, only retirement is my option, correct? Death is God's option. Dissolution of firm is collective decision, sometimes voluntary. Unsound mind is not my option. Insolvent also is not my option. I have become insolvent. So only my option is what? Retirement. So in retirement, you have to give a 30 days notice to the other partners. Give a 30 days notice to other partners. In this, you will be known as a former partner, like former cricketer, ex-player. Here, former partner. And this partner, former person, will still be treated as a partner of the company unless notice is given to the other partners and LLP within 30 days, and same way the notice is also delivered to the registrar within 30 days. Are you following, guys? So from my date of resignation, I have to give a double notice, one to other partners and LLP within 30 days, one to ROC within 30 days. And if you don't do that, if you don't do that, you will be treated as a partner. And once you do that, your pending obligations against other LLP and partner will continue. That means, for example, if you are giving your notice at this point, after this you are not liable, but up to this particular period, pending obligations will continue, guys. What are rights of the former partner, or known as the ex-partner? His share of capital he can claim, his share of capital in this period, and his share of accumulated profits in this period can be claimed. But most important, he cannot interfere in the management decisions, because you are now a former partner. You can only watch to get your capital and profits. Next, again, intimations to ROC. We're mainly discussing only time limits, guys. If the partner is changing his name or address, again, if partner is changing his name or address, I'm changing my name or address, intimate LLP within 15 days. Same way, in LLP, if there is an inflow or outflow of partners, admission or retirement, or change in partner name, the LLP has to intimate to ROC within 30 days. So generally intimation to ROC is within 30 days. Follow guys, this 15 days is intimation to LLP. If you change name or address, you will intimate LLP in 15 days, but all the intimations to ROC for change of name, address or partner in or out, you have to intimate ROC within 30 days, and this will be signed by the designated partner guys. Are you following? These are the key timelines that we have. In this chapter, if you don't remember the time limits, mostly it is 30 days guys. In some cases it is 15 days. Next, let's go to small LLP and go through those limits. Now next in small LLP, just like how you have a small company, small LLP is yet to be tested. So it's important guys. Contribution I told you is like capital and turnover. You have to satisfy both the limits. They are saying, like you already know, just like small company, contribution up to 25 lakhs is allowed and turnover up to 40 lakhs is allowed. If you meet both the limits, contribution up to 25 lakhs and turnover up to 40 lakhs, then you will be treated as a small LLP. And in future, this 25 lakhs can go up to 5 crores and this 40 lakhs can go up to 50 crores guys. Are you following? In small company, this 25 lakhs and this 40 lakhs will be 4 crores and 40 crores. This will be 10 crores and 100 crores guys. Same thing over here. LLP is 25 lakhs contribution, 40 lakhs is turnover, upper limit is 5 and 50. You have to remember this. So if you look at the limits for a company, paid up share capital will be 4 crores and turnover will be 40 crores, and upper limit paid up share capital will be 10 crores and turnover will be 100 crores. What I wrote in green is for company, what is in red is for an LLP guys. Next to what we have left, we are done with small LLP. Just two more concepts relating to designated partner and amalgamation and compromise of LLP. I have given my notes. We will quickly run through this before we close LLP guys. So now if we go to designated partner guys, we know every LLP should have minimum 2 partners. And every LLP should also have minimum 2 designated partners. That means if my LLP has only 2 partners, both of them will become designated partners. And in those 2 designated partners, at least one of them must be a resident. Now, who is the resident? This act defines resident as a person who has stayed in India for 120 days or more in the preceding financial year. So, for the current financial year, I will check in the previous financial year if you stayed for 120 days or more. This year, if I am not staying also, it's okay. Last year, if I am staying, then this year I can be a designated partner. If this year I am not staying, then I have to be replaced because for next year I cannot be a designated partner. Leave the confusion simple. Here first, what is the point given? 2 DPs, one must be resident. Resident should have stayed in India for 120 days or more in the preceding financial year. Now, who can be the designated partner? LLP can have partners as individual or body corporate. So, designated partner also can be individual or body corporate. But if it is a body corporate, the body corporate cannot be put behind jail, no. So the body corporate will be represented by a nominee, and such a nominee should be an individual. So who should be DP? It can be individual or body corporate. Body corporate means nominee should be representing. The nominee should be an individual. Next, few key points in the DP sections. The DP should give a prior consent. I can't simply tell, okay, for example, Rahul is going to be the DP. I need to get prior consent. If the DP leaves, I need to replace with a new designated partner within 30 days. I told you guys, in this act, everything is 30 days. If you don't remember also, replace in 30 days. If no DP is appointed, then I have only 2 partners, guys. I didn't appoint any DP. Then whichever partner is available will be deemed to be the designated partner, and the LLP should also intimate ROC. Now, designated partner terms and agreement. It will be defined in the LLP agreement. Sir, who is this designated partner? If something goes wrong, he will be held liable. Basically, he's the one responsible for what top level management and more legal compliance. Designated partner only is responsible. So since he's responsible for legal compliance, I have to identify him. He has to get a number called designated partner identification number, DPIN, like how Companies Act, director has a DIN. The responsibility is for doing all activities done by LLP, like filing of returns, solvency report, all that he will file, he will sign. And if any penalties is imposed on LLP, he is also liable for the punishments. Now for designated partner, in the entire act, we have only 3 punishments, and all those I have here. 1, if he is not a resident or if the DP is less than 2, not a resident or less than 2, then the designated partner and LLP is liable for up to 10,000 rupees and 10,000 rupees flat plus 100 rupees per day, and the maximum for LLP is 1 lakh and maximum for partner is 50,000. So this is a case where we can't avoid. Usually I don't discuss penalties, but this chapter, the financial disclosures plus these 3 penalties you learn and keep, guys, for MCQ. Failure to file consent of DP or change of to ROC within 30 days, DP plus LLP 5,000 rupees and 100 per day. In all cases 100 per day, guys. Here LLP maximum 50,000 and designated partner maximum 25,000. Now the first case and third case, if you notice carefully, penalty is the same. So let me highlight in the same color, this blue dabba. Both penalties are the same. So what is the situation here? DP less than 2 or DP is not resident, or vacancy of designated partner is not filled, or designated partner is not eligible to be a DP. For example, let's say unsound mind, he is not eligible, or the vacancy is not filled, or these cases penalty is the same. Only the middle case penalty is different. You can pause, learn this because it's just mugging up of these limits. Next, regarding designated partner, that's it. So whatever I've told so far is only the concepts related to designated partner. Let me also quickly complete incorporation of LLP, because they have asked incorporation of partnership a long back. Before they used to ask incorporation of company is recently tested. LLP is not tested. Even though it's not there in expected questions, let me quickly revise. It's basically a 6-step process. Sir, what is a 6-step process? First, you should find 2 or more DPs. These 2 or more DPs should obtain 2 things: designated partner identification number and DSC. Once they get that, they have to check for name. Once the name is allotted for how many days, guys? 3 months. 3 months it will be reserved. Now within this 3 months, you have to do electronic filing of documents. What are the electronic filing of documents? 2 things. One is a statement, one is an incorporation document in e-form. Philip is the name, like Philip's e-form Philip. Basic details: name, address of partners and LLP. See, name and address of partners and LLP and other information of LLP and what business I'm doing. Basic points, no need to mug up. And a statement of declaration by advocate or CA or CS or CMA and any other subscribers of LLP that all information is true and fair. Once you file this, it will be signed by registrar and official seal of company will be given by them. They will be issuing a certificate of incorporation called as incorporation certificate. This will be given within 14 days of filing. Within 14 days of filing, the ROC will sign and put official seal of ROC and give you LLP payment. And then once you get certificate of incorporation, within the next 30 days, the LLP has to draft an LLP agreement in e-form 3, which is mandatory. Mandatory to draft an LLP agreement, guys. If any wrong information is given, imprisonment is up to 2 years and fine is 10,000 to 5 lakhs, guys. This is incorporation of LLP. Yes, not there in the expected question of LLP, but I told you this chapter is important. This area also is not tested, so I have quickly discussed. Lastly, new things added in new syllabus: amalgamation and compromise of LLP. Law heavily complicated in the study mat. I will quickly summarize using our notes. Compromise, arrangement or reconstruction of LLP. Now this compromise and arrangement can happen with LLP with its partners or creditors, guys. The LLP can come for some settlement arrangement with its existing partners or its creditors, or with its creditors it can do it. Now for this, the LLP should apply first to the tribunal to get permission with some attachments: latest FS, any pending case is there or any investigation is there, and material facts of LLP. You have to give all of this, and this should also be given along with 3/4 in value consent. 3/4 in value consent. Who has to give this consent, guys? 3/4 in value consent should be given by the partners or creditors. If I'm doing compromise with partner 3/4 in consent should be given. If I'm doing compromise with creditors, they have to give 3/4 in consent, along with attachment latest FS, details of pending investigation, and material facts of LLP. Once you file this, you file the order of tribunal to registrar within 30 days. Meaning, once you file to the tribunal will give you the order, and this order of tribunal will be filed to the ROC within 30 days. I hope this is clear, guys. Simple. Apply to tribunal with all these attachments and 3/4 consent of creditors or partners, then they will give an order that you have to give to ROC in 30 days. If there is any default, the penalty is given over here, guys. You will go through that. And lastly, what they're saying, the tribunal can supervise the compromise and arrangement. Even after order, they will supervise this entire thing, make modifications to order if resolution provided cannot be worked on satisfactorily. I can even make some modifications. Next, provision for facilitating reconstruction or amalgamation of LLP. Separate section. Now, amalgamation is just like the Companies Act, but look at the difference over here. This is not LLP and company amalgamation. Look at this, guys. LLP and company not allowed. LLP and LLP is allowed. Now, for any compromise under section 60 above, whatever compromise we saw above, the tribunal can also order by saying, okay, do the compromise by amalgamating with some other LLP. If such amalgamation order is given by the tribunal, then you have to intimate ROC within 30 days. Same thing over here, intimating ROC within 30 days. Here, this section also is saying, if the compromise order is for amalgamation, intimate ROC in 30 days. Now, what is the effect of order or effect of amalgamation? Just like what you studied in accounts for amalgamation, same thing, guys. All the assets and liabilities will be transferred from the transferor LLP to the transferee LLP, or selling LLP to the buying LLP. Any pending legal cases, legal proceedings in old LLP will continue in new LLP. This leads to dissolution of the selling LLP, or the transferor LLP will be dissolved. Same as Companies Act, guys. Exit opportunity for dissenting parties. Some of them are not happy, we will give exit opportunity. And lastly, any other order that is needed for smooth execution will be given. Remember, tribunal shall not pass any order unless it has received a statement from ROC stating that LLP is compliant. Only if LLP is compliant and tribunal has given a confirmation, then only order will be passed. Tribunal should receive an order that from ROC. ROC should tell, yeah, everything is pakka in this company. So this section, only this compromise arrangement has a lot of provisions like 3/4 not to remember. Over here, remember the 5 points of effect of order, which is very, very important. And lastly, default. If there is a default, 10,000 rupees and maximum is 1 lakh and rupees 100 per day for continuing offense. For designated partner, 50,000, guys. This penalty you would have seen somewhere over here. Just now above for DP you would have seen. Similar penalty is there over here, guys. With this, we will close LLP. And one more question which has come many times, winding up and dissolution of LLP, guys. I am not discussing this much because it has come multiple times. But you guys would have known this because this you will study. LLP can be wound up voluntarily or by tribunal. If tribunal decides to wound up by order of tribunal, it can be in following cases. When LLP decides to wound up by tribunal, then if it's reducing below 6, LLP should have minimum 2 members. If the number of 2 partners falls below 2 for more than 6 months, a tribunal will order for winding up. Or LLP is acting against the sovereignty of India, you are going against the country, then LLP will be wound up. Or we saw in financial disclosures, you have to file statement of accounts or annual return should be filed every year, 6 months and 60 days. If that is not done for any consecutive 5 financial years, they can order for winding up, or any other reason which is just an equitable, then LLP will be asked to wind up. This they generally ask a lot of times. That's why for this time I have not kept in the expected questions, guys, but I have discussed it even though it's not there in this list, guys. With this, we are done with LLP expected question discussion. Thank you. So if you watched the marathon till here, guys, first salute to you. out of 15 chapters that we have in CA Interlaw, at this point 12 are done, guys. 12 chapters, and all these 12 chapters I have freshly recorded now. When you may be watching this on 5th, 6th or 7th of September for your September exams, or whenever you're watching it. I am recording this when you wrote your accounts exam, during your accounts exam, before that, after that. I have been recording these 12 chapters in bits and pieces based on my energy levels also, of course, guys, because I don't want to take it for 7-8 hours continuously and give you lower quality content. Rather, I will take it at my convenience and then give you the best output for what is there. Okay, now these 12 chapters are done. We are left with remaining 3 chapters only, but 3 mammoth chapters, 3 very, very important chapters: meetings, share capital and debentures, and FEMA. Okay, now these are chapters where, even though we have expected questions, which I can quickly finish expected questions for all these 3 chapters in 1 hour, but I just thought for these 3 chapters, it's good that you revise the whole chapter along with expected question. So from now, for the rest of the part until this marathon concludes, meetings, I will be revising in close to about 30 minutes, full meetings chapter, guys, full meetings chapter. Share capital and debentures, full share capital and debentures chapter. And FEMA also, I will be revising the whole chapters, but that will be happening in a quick speed. So for this, what you have to do, okay, what you have to do for this, guys, okay, I will just show you quickly over here. Let's go to the meetings chapter, and in the meetings chapter, yeah, okay, for example, if you take FEMA, you guys already have this expected question list. After the revision is done for all these chapters, quickly give more importance to what I have mentioned over here. Specifically find them and give importance to that. Same way for meetings chapter, you will find the meetings one. Okay, yeah, and give importance to what I have over here, which I feel is little more important once you have done the whole revision. And same way for share capital and debentures, give a little more importance to what is there over here. I don't want to read what is there over here because you have this list. In my view, this time share capital chapter or meetings chapter, one of this is going to be very, very important for the exam. So I don't want you to skip this by just learning little. Why I'm saying, in the previous attempt in your May exam, both these chapters, share capital and meetings, came only in MCQ. That's a very rare occasion. If it repeats like that, ICA is playing with you guys. But in a normal scenario, at least one question from both will come. So it's worth studying both. And FEMA, guaranteed you will get 8 marks in exam. So for FEMA also, I don't want to take that chance, learn the whole thing. So you can continue to watch this marathon, or for all these 3 chapters, guys, don't worry. I have also uploaded the detailed marathons where meetings I will be revising for close to 3 hours. Share capital and debentures also I will be revising close to 2 hours. And FEMA also I will be revising close to 2 hours. This, you know where to find the link in our concept marathon playlist on the channel. If you really need support for these 3 chapters fully, go watch those marathons where I am not only covering concept, guys, concept also is covered, and workout where we will be solving 30 questions per chapter. That is also there. Since you have 2.5 days for law, depends on when you are watching. If you need them, you can go watch them in detail. But now over to the expected question marathon, or I will say not expected question, but a rocket revision or a Gen Z marathon, more like a Gen Z marathon for these 3 chapters, where I will quickly cover 100% of these 3 topics, including what you have in these expected questions. I hope the context is fine. If it's fine, let me know, guys. Okay, and you watch it, and that's about it. That's about it, guys. Once these 3 chapters gets over, the expected question marathon will come to an end, and I hope it will add a lot of value to your preparation, guys. Over to the chapters in the same order. First is going to be meeting. Sorry, it will be in the same order of our act. So first it will be share capital will come first, and then next you will be seeing meeting, and then next you will see in the end FEMA. If you want to fast forward and find what you want. Over to the marathon. That's it.
Hi guys, let's do the Gen Z revision of the big monster chapter, share capital and debentures. Gen Z notes itself will run to about 7 or 8 pages. We will try to close this in less than 30 minutes for the whole chapter. Okay. First, it is from section 43 to 72. There are two types of shares. You all know, equity and preference. Equity has what advantage? Voting rights. And equity also, there is equity with differential voting rights. In preference, preference for what? Preference for dividend and preference in repayment of capital and preference in surplus after distribution of all liabilities and capital. After paying capital, if I still have surplus, they will take it. This is section 43, kinds of share capital. 44, 45, not there in syllabus. Because I go in section number, I will just keep taking that way. Next to 43, 43 rule 4 talks about conditions for differential voting rights. Differential voting rights, today practically company can't do it, but it's still there in our syllabus. Simple. Always you start off any procedure with the approval that is needed. Approval, default in the company, approval that you need from members, from company articles and ordinary resolution in general meeting. Such a resolution you should pass in postal ballot method. Postal ballot method, are you following, guys? After passing resolution, the post issue maximum DVRs in a company can be 74% of post issue capital. Are you following, guys? So AOA, ordinary resolution, maximum is 74% post issue, pass in postal ballot. Postal ballot will come if it's a listed company. Listed company, I have to do in postal ballot over here, but others also postal ballot only actually. Next, they are checking about some defaults. You should not have defaulted and not been penalized. Last 3 years, let me finish off, sir. I will split this into 3 years and 5 years. In last 3 years, no default in filing financial statement and annual return. And again in last 3 years, no default in RBI's, SEBI's, CRA and FEMA. Are you following, guys? So these are Gen Z notes that we actually give in class, guys. Okay, I make students do it. And last 5 years, only 1 point, no default in all types of debt and equity. Look at this. What is debt? Deposits, equity, preference, dividend, no default, interest on deposits and debentures, repayment of loan, no default in basically principal and interest or repayment of preference and dividend or buyback. Okay, next, IEPF transfer should have been done correctly. If there's any IEPF transfer, they didn't transfer to IEPF also, this provision will come. Are you following? Next, other points what they're saying, these are base points. So approvals 3 years and 5 years. After that, what they're saying, DVRs, if next, existing shares cannot be converted to DVRs. Only fresh issue you should make. You can't do any conversion. And then you should maintain details of DVRs in a separate register called register of members. You have to maintain it. Are you following, guys? Then some more points I will add here. Company should also give an explanatory statement, section 1 or 2. Company should give what, guys? Explanatory statement as to why they are doing that. And also company should disclose in the board's report. Company should disclose what, guys? In board's report as to why we are doing DVRs. Are you following it? So 1 or 2 is explanatory statement, 134 is board's report. All other rights about getting bonus, rights issue, all those other rights are pari passu. So there are 3 more points I will add over here. So separately, these are the points, guys. Are you following, guys? So these are the points for DVRs. Can you recollect, guys? 1 or 2, 134 explanatory, board's report, and all other rights should be pari passu. Next, to proceed, section 46, share certificate. Share certificate is mandatory. It can be signed using person authorized or with common seal. Who has to sign this? Just like what we saw in section 22, authentication of negotiable instrument. If company has common seal, I will sign using common seal. If common seal is not there, CS plus director, CSA ilana 2 directors. Are you following, guys? 1% company, if 1% signs, it's enough. This is section 46, share certificate. 47, voting rights. You tell me, equity shares, 1 share is 1 vote. DVRs can be different. Preference shares, can they vote? No. But they can vote in case of, if it's going to affect their rights. If it's going to affect their rights, they can vote. Or, if dividend is not declared for 2 years, 2 years I didn't give dividend. If it's a cumulative preference share, then they can vote on all resolutions. But even if dividend is declared, dividend na correct kudutna sir, okay, they can still vote on winding up and reduction of capital because that's going to affect their rights. So basically they can vote for anything affecting their rights. What's going to affect their rights? Winding up and reducing capital, so they can vote there. Dividend not paid for 2 years, they can vote on all resolutions. This is section 47. Are you all with me, guys? 43 to 47 done. Next is 48, variation of shareholders right. If you want to vary any shareholders right, first I told you always source. MOA and AOA should provide for the same. If it is not provided in MOA OA, at least the terms of issue should not prohibit the same. Are you following, guys? So MOA OA or terms of issue should provide for the same. Now that approval is there, sir, source of power is there. How to do variation? Very simple. They are saying for doing the variation, first you have to check if it's affecting only one class or if it's affecting more than one class. If it's affecting only one class, yeah, okay. So they are saying, sorry, affecting other class. This other class affecting only that one class. If it's affecting only my class, then consent of 3/4 of members of that class or by passing a special resolution. So if it's affecting only my class of shareholders, 3/4 of consent or by passing a special resolution. If it's affecting other class, sir, then additionally apart from this, consent of 3/4 of members of such other class should be obtained. So my class now it's going to be 3/4 in special resolution. If it's affecting some other class, then I have to get the permission of other class also. In book it will be used as 75% both in value. Are you following, guys? Now if somebody is having dissenting shareholders, they are not happy with this. Rights of dissenting shareholders. One shareholder, I can't do anything. You need at least 10% of dissenting shareholders. Such 10% of dissenting shareholders can apply to tribunal within 21 days and tribunal will pass an order. That order you have to file to ROC within 30 days. Are you following, guys? Very simple. So dissenting shareholders 10%. They have to appeal within 21 days. Once the order is passed, you have to intimate ROC within 30 days. Whatever tribunal is passing, that is final. This is section 48. Are you following, guys? Next, 49 came for 5 marks once. Very small section. Calls to be made on uniform basis. Section itself gives the answer. Meaning, if I'm making a call to a particular class, I have to call everyone to make the call money payment. I can't ask specifically only Vishnupriya you pay or only other person pay. Everyone should make the payment. Otherwise, don't call itself. Next, calls in advance, you know. It's optional. If company wants, a shareholder wants, he can pay. Now, for the excess, will he get voting rights? No. For the excess, will he get interest, sir? Interest can be maximum. Not max. Interest can be 12% as per articles. But I can remove this. I can make it 0 also. It's only optional as per company's choice. This is section 50. What is section number 51? Payment of dividend. Sir, I have shares of rupees 10 each. Face value. Paid up value is 8. Dividend will be paid on face value or paid up value? At the option of the company. So you can pay in face value here, I mean as nominal value. So dividend can be paid on nominal value or paid up value if articles authorize. That means company's option. So default nominal value, but I can also pay on paid up value if articles is going to authorize. This is section 49, 50, 51 related to your calls in advance and calls in arrears and dividend over there. Next is section 52, guys. Exam porthodukku 52 is simple. If they ask you, they will ask you straightforward question. What is the usage of securities premium? 5 points, 5 marks. You will be lucky if that comes. They can use for buyback and bonus, and you can do write-off of 3 things. Writing off preliminary expense, writing of commission or discount allowed at the time of issue of shares, or premium on redemption of preference shares and debentures. How to remember? Buyback bonus. Then one is preliminary expense. Then at the time of issue of securities, there is discount and commission at the time of issue. At the time of redemption, preference. At the time of redemption, premium. Are you getting it? At the time of issue of securities, at the time of redemption, whatever cost comes, preliminary expense, buyback and bonus. Are you following, guys? This is section number 52. 53 next says, can I issue shares at discount, guys? No. It is issuing at discount is void. But beyond that, I like to do only void things, sir. I am issuing at discount. Then you have to pay interest at 12% for the entire period in which you collected the shares. There is no grace period. From the entire period you have to pay. Exception is what, sir? 53 or exception is 54. Sweat equity shares can be given for discount, or if it's for a scheme with creditors, debt reconstruction scheme under statutory resolution plan. Basically your internal reconstruction chapter, but don't try internal reconstruction here. Debt reconstruction scheme under statutory resolution plan with court approval. Then I can go issue at discount. Sweat equity shares, again we have procedure, guys. Follow. Sweat equity shares, always I start off with approval, guys. That's make it a habit. What resolution? Special resolution should be passed. That is valid for 1 year. Why, sir, it's valid for 1 year? In that 1 year, I can give to any employee. To whom I can give, sir? Employee or directors. Now I don't want to give restriction. Anybody can be smart. I can't tell only people in Chennai are smart, people in Bangalore are smart. So they can be located in India or outside India. Such employee or director can be holding companies or subsidiary. I can give the ESOP to my holding company's director also, because he only was the brain. Are you following, guys? Clear? So you know approval. Special resolution valid for 1 year. Keep repeating with me. What are you all looking at me repeating? I can give it for employees in India or outside India, holding or subsidiary. Once you give, lock-in is for how many years? 3 years. Percentage. I can maximum give for 15% in one financial year or 5 crores, whichever is higher. But overall, lifetime should not cross 25%. So in a year, 15%, lifetime 25%, startup company now, 50% of paid up share capital can be given. Are you following, guys? Clear? Again, here some points we have. Company has to have, give explanation, 1 or 2, why we are doing this, 134, and also I have to maintain section 88 register. These 3 points will repeat 43 rule 4 and here. Points are going to repeat. What are the points that's going to repeat, guys? Explanatory statement is 1. 88. Register of members details should be given and both reports should be given. Are you following, guys? Then additionally we have one more point. Again, this point also is repeat from previous. Rank pari passu with other shares. That means all other rights for employees like bonus, dividend will be same as other shareholders. Are you all with me, guys? Hello. Then additional 2 more points. There should be valuation report given by a registered valuer for giving a discount. And they are also saying company has to follow guidance note on ESOP. Here and there 1-2 points missed. I remember now, I'm writing it. Are you following, guys? Okay. Company has to follow what, guys? Guidance note on ESOP. So look at this. ESOP law, what are the new common points from DVRs? 88, register of members. 1 or 2, explanatory statement. Board's report, disclosure, and pari passu. These 4 points are coming in 43 rule 4 DVRs and it's coming here. Additionally, what are the new points beyond limits, sir? Valuation report by registered valuer and guidance note on ESOP should be followed by company. This is section 54, sweaty equity shares. Are you following, guys? Next 55 is issue and redemption of what, guys? Preference shares. So we talk about issue, we talk about redemption. Repeat with me, guys. For again, we start off with power. For issue, articles should authorize. You should additionally pass special resolution and no default should be there. In what? Previously paying any repayment. Previous dividend, there is no default. Previous redemption, there is no default. Are you following, guys? And section 88 means register. Company has to maintain register when they're issuing. Period of preference shares is 20 years. Infrastructure now 30 years. Are you following, guys? This is for issue, guys. Sir, what about redemption? Redemption can be done out of free reserves, fully paid up, and sources, fully paid up shares, free reserves, fresh issue or CRR can be used. Are you following, guys? For redemption, they are trying to say I can use my existing reserves, free reserves, or I can do a fresh issue and pay. And they are also saying whenever you are doing redemption, the face value of amount redeemed should be transferred to CRR, but this will come only if you are using my reserves. If I am doing redemption from reserves, I will transfer to CRR. Sir, if I am doing redemption using fresh issue, then no need to transfer CRR. The idea is, if paid up share capital is decreasing, to the extent of decrease, I will transfer to CRR. If there is no decrease, it will remain as it is. Are you following, guys? Clear? Next, premium on redemption. Premium on redemption is there, correct? 100 rupees share, I am repaying at 120. That extra 20 premium, can I adjust with securities premium? Answer is no. You can't use securities premium. You should use only free reserves. Here it does not include securities premium. Are you following this? These are accounts points, not law. So what is the sources? Sources, free reserves or fresh issue. Then if you are using reserves, you will transfer to CRR. Premium on redemption, you cannot use securities premium. All of you with me, guys? Sometimes if company is not able to redeem, then I will pass an entry, old preference shares to new preference shares. That's called deemed redemption. I am not paying money. It's a book entry. For doing that deemed redemption, I need to get permission of 3/4 of the preference shareholders in writing. I need to get 3/4 consent in how, guys? Writing I have to get, and I should get approval of tribunal. Double approval, guys. Sir, what is deemed redemption? Very important. Irukra preference shares come again giving preference shares to preference shares, 3/4 in writing, and tribunal should pass an order. If there are dissenting shareholders, throw them out, give them exit opportunity. Are you following, guys? This is transfer and transmission. Issue and redemption. This is the biggest chapter. This will take a lot of time because procedures will keep coming over here, guys. Next, transfer and transmission. Little less important for exam, but we will quickly run through, guys. If you want to transfer shares, the transferor of the company who wants to transfer to transferee, he has to submit to the company a transfer deed within how many days of execution, guys? Within 60 days of execution. Sir, can I go beyond 60 days? Yes. If you want to go beyond 60 days, you have to give an indemnity form. This transfer deed will be signed by both the parties and duly attached with a letter of allotment or share certificate. Share certificate proof or letter of allotment with the share transfer deed, we will sign and give within 60 days of signing. That's called execution. Beyond 60 days, now you will give something called indemnity form. Are you following, guys? Clear? Once you send it to company will cross check with you if I have to do allotment. When company will do cross check, company will send notice to check, can I do the allotment and transfer? Only if the shares are partly paid up, because I'm going to create a liability for somebody else. If it's fully paid up, the company will not cross check. They will go ahead and do the allotment. This is section number 56. Next to 57. Sir, I am not the shareholder, sir, but I am acting as if I am the shareholder because my name is same. I put some makeup and I'm going and saying I am only that person, creating fake ID. That's called personalization, or trying to behave as if you are not, trying to impersonate somebody else. For that, enjoy the penalty, go to jail. Okay. Next, 58, guys. 58 talks about you want to transfer the shares, but the company is not letting you transfer for whatever reason. Refusal for registration and appeal against refusal. So, we have to file to company within 60 days above. We have to file within 60 days. After you give to company should intimate to you within 30 days if they are going to do transfer or not. Are you following, guys? So company has to intimate within 30 days. If not within the next 30 days, you can go ahead and do the appeal. Are you all with me, guys? So let me explain that here. See, company has to tell you within 30 days. Within 30 days, they have to tell you, am I going to register or I am not going to register? If they are not registering within 30 days, then within the next 30 days, you can appeal. That means totally you have 60 days, correct? So if I have to put the timeline, simple timeline, look at this. From the date of transfer deed, you have to file within 60 days. After this, company should tell you within 30 days. If not, within the next 30 days, you can go and do the appeal. First 30 days, they should tell you why they are doing refusal. That's why both read together, you have 60 days from the date of submitting the transfer deed. Are you following, guys? From your submitting transfer deed. Same thing if it's for a private company, guys. If it's for a public company, it will be 60 and 90 days. 90 days. That means what they are saying, if it's a public company, this 30 will become 60. Therefore, this 60 will become 90 days. Are you following, guys? So company should reply within 30 days, but I have time for appealing. 60 days to appeal and overall 90 days from the date of filing it. Are you following, guys? All of you with me? Hello? Clear? Okay. Next. If at all, then tribunal will pass an order. Once you pass appeal to tribunal, they will pass an order, and that order, they will tell to do something. The company has to do it within 10 days. Within 10 days, company has to do it. Are you following, guys? Next is section 59. Rectification of name of in register. My name is Karthik, but in register they put Karthik with some wrong spelling, 2K, whatever. Or intentionally company is not putting my name. Whatever the reason, if the name is delay in entering, omission, wrong name, you can apply to ROC for company for rectification. If company is not changing, now your aggrieved party, the aggrieved party can appeal to tribunal. This talks about rectification of name and appeal. And then you can appeal, and then tribunal will pass an order. That order you have to follow. Are you all with me, guys? Clear? 60, not in syllabus. 61 is alteration of share capital. What are the alterations I can do? Increasing authorized share capital, or stock split, or subdivide. 1 lakh shares of 10 is going to become 10 lakh shares of 1. Next, consolidation of shares. 1 lakh shares of, let's say 1 is going to become 10,000 shares into, 10. Are you following, guys? Consolidation, conversion of share into stock, and cancellation of unsubscribed shares. This is alteration of share capital. For doing all of this, you have to pass ordinary. But if you want to do authorized capital increase alone, you have to pass special resolution, because this leads to alteration of MOA. It leads to alteration of MOA, so special resolution. Are you following, guys? Whenever you do increase of authorized share capital, MOA is changing. If you do redemption of preference shares, again MOA is decreasing. In these cases, within 30 days, you have to intimate ROC, that is section number 64. So whenever I increase authorized capital or do redemption of preference shares, I have to intimate ROC, add-on points. Following, guys. Now remaining all are big procedures. I will quickly run through, guys. Section 62 talks about rights issue. What are the key points for rights, sir? First, always approval. Board resolution and special resolution. You have to pass board and special for rights. Then once you give the offer, once I give a letter of offer, the other party can accept or reject. Correct? For him to accept or reject, I should give minimum 7 days, maximum 30 days. Within this time limit, I can choose. It's not 7 to 30 days. I will tell 10 days, 12 days. Time to reply should range in 7 to 30 days. In that time, he can accept, reject or renounce. That renunciation can be done either to existing shareholder or it can be done to other shareholder also. Renunciation not mandatory to be done to existing shareholder, can be done to any person. Then, if there are any unsubscribed shares, sir, everybody rejected, nobody bought the shares, that should be disposed of by the company in a way which is not disadvantageous to shareholders. Meaning, I gave you rights offer for 60 rupees, sir. Since all of you are not buying, only some of you bought, and now I will give to somebody else for 40 rupees. That's disadvantage for you. Are you following, guys? That's all about rights. Now you want to give the same rights further issue to employees, means you can do that if the company is only in existence for 1 year. All the other points, just like 54, you have to follow section number 54. Okay, are you following, guys? Yeah, so 54 points will again come over here. Look at this, board and special resolution. Then company will have the same, what is the registration of ESOP, then explanatory statement. These are pretty simple points, guys. Like, see, for giving to employees, additional points on death. Basically, I'm giving employees option. So if employee dies, then the option will be vested immediately. This is not that important, guys. Come back. 62 subsection 3. We are still in 62. If company takes loan or debentures, if the same is not repaid, then the same will be converted into shares. Will be converted to what, guys? Shares. But for that, company at the time of issuing debentures or issuing the loan, they should have passed the special resolution to get permission of members for such conversion in the future if there is going to be a default. Are you following, guys? Same section 62 subsection 456 is saying what? If I take loan or debentures from the central government, and if I did not repay, the central government can convert such loan into what, guys? Equity. Are you following, guys? Now here the very important point is they can convert this loan into shares, not just in case of default, even if company is paying, but if company is acting against public interest. Company is acting against public interest, against the public, then central government can still order, no need to pass any special resolution. Look at the difference above. For debentures and loans, you need to pass SR before issue, then only you can convert. When I can convert? Only if there is default. Here, nothing like that. If I have taken loan debentures from central government, no resolution passed, it's okay. You are going against public interest, I can convert to shares. Not fair, no. That's why the aggrieved party, they can appeal to the tribunal. They can appeal to tribunal, guys. Within how many days they can appeal? Sure, I just check 60. Booklet 60 only is given. Sure, I just have small note. Yeah. So appeal within 60 days. See, wherever I am not convinced, I will check, guys. 60 days you will appeal. If they are not satisfied, they can appeal to tribunal within how many days, guys? 60. Sure, Reshma, 60 only is there. Fine. Then Pakka, you can appeal within 60 days. Clear, guys? This section 62. Next section 63 talks about what, guys? Bonus issue. Very simple. Again, approval. You need authorized by articles and recommended by board. What resolution, sir? Ordinary resolution. Now this bonus will be given from what source? Basically, what is bonus? Conversion of reserves into share capital, capitalization of profits. So which reserve I can convert, sir? I can convert, free reserve, securities premium or CRR. Which to use first? First CRR, then SP, then free reserves. Are you following, guys? Sir, but I cannot do bonus, sir. I cannot do bonus if there is default in payment of deposits. Deposits, there is default, or statutory dues of employees like PF bonus is not paid, then you cannot make a bonus issue. So what are some other points, sir? Once you committed, once you made the resolution, once you make a promise, honor that promise, try your best to honor, guys. So once issued, it cannot be withdrawn. Then last two important points, I can't tell the shareholder, hey, I will give you dividend. Instead of dividend, I can't give you bonus. So bonus cannot be given in lieu of dividend. Dividend sonna give dividend. Bonus sonna give bonus. I can't interchange both of them. Last very, very important point, bonus shares should be issued only for fully paid up shares. If I have partly paid up shares, I have to convert them to fully paid up shares. There's an amazing logic for this, why I should make the conversion, but that's about it. Are you understanding till here, guys? So partly will be converted to fully paid up. Fully paid up shares only I should give bonus. Otherwise, if it's partly paid up, your partly paid up will double into two partly paid up. Liability also will double. That's the logic, why they are not allowing for partly paid up shares. This is section 63. Now coming to 64. 64 is basically in 3 cases within 30 days you have to intimate ROC for change in share capital. 2 I already told you. Alteration of share capital 61 subsection 1. Authorized share capital has changed. Or central government loan. Just now we saw 62 subsection 4, 5, 6. Central government is converting loan debentures to equity, increasing the authorized capital, or redemption of preference shares, you have to intimate to ROC, because all these 3 leads to change in MOA. Sir, how sir central government conversion leads to change in MOA? Even if company is not having authorized capital, such conversion is deemed to convert authorized capital. Sir, company is having loan of 100, share capital is 100, authorized share capital is only 150. Okay, only 150. Now if I convert loan to capital, capital becomes 200, but authorized is only 150. Such conversion is deemed to increase the authorized share capital because central government is doing it. Are you following, guys? This is section 64. 65, not in syllabus. Next we will proceed. Let me do a small section 69 just to quickly close this. 69, what they are saying, in 2 cases you have to transfer to CRR. 1 in case of buyback of equity shares or redemption of preference shares. In both cases capital is decreasing. How much I will transfer? I will transfer only a amount equal to nominal value, face value, if it is done out of free reserves or securities premium. SP allowed only for buyback. Sir, if I am doing from fresh issue, no need to transfer to CRR. Are you following, guys? In this sums are there in accounts itself. Now before I go to reduction, let me go to buyback. Buyback, let me go, guys. 68. Now we have only 2 concepts. Buyback and related provisions and reduction of capital. Both are separate. Both are separate. In both, company's capital is decreasing. But in buyback, company is voluntarily giving it back because I'm a profitable company. In reduction, company is a loss-making company. Company kita kaase illa. I'm begging you to sacrifice. There's a huge difference. Profit to loss. First we'll do buyback. Now look at buyback. We'll start off, guys. Now if I come to buyback, first I've just given it, this one alone I've given in terms of timeline. See if you're understanding, guys. First always I tell you, start off with power, resolution. Onnu pandradhukku you need power in life. So here, if for doing buyback, if I do board resolution, you can buy back how much, guys? 10% of paid up share capital and free reserves. If I do special resolution, you can do buyback of 25% of free paid up share capital and free reserves. Very, very important to note. Only for this section, I repeat, only for this section, free reserves includes securities premium. In this section, I will treat SP as free reserves. That means redemption of preference shares, you can't use SP. Here, I can use SP. Why, sir? Logic, we see in regular class. But what is the logic? Who gave SP? Equity shareholders gave us the SP. Are you following, guys? Clear? All of you with me? Hello? Okay. Next, once I pass resolution, now follow, guys. Once I pass the resolution, the buyback should be completed within 1 year. That means from the start of end to end, look at this. From the start to end, completion of buyback from the date of resolution, it should all get over within 1 year. 1 year time limit. In this 1 year time limit, what they are saying, I can give the offer anytime, guys. I can give the offer anytime. In rights, for members to accept the offer, they have minimum 7 days, maximum 30 days. Minimum 7, maximum 30. Here minimum is 15, maximum is 30. Sir, I want to reduce below 15, sir. rights mattu 7 you are allowing. Here I want to reduce below that. Okay, you can reduce by passing a unanimous resolution. You can reduce it less than 15. Are you following? In the oru point keppa exam la 5 mark 15 days how to reduce unanimous resolution. With this, buyback is done. Within how many in this 15 to 30 days gap, you have to reply for offer. Buyback should be completed within how long, guys? 1 year from resolution. After completion, there are 4 timelines. After completion, I have a 3 days timeline, I have a 7 days timeline, I have a 6 months, and I have a 1 year timeline. What is that? After buyback is done, within the next 3 days, you have to file return of buyback to ROC. Whose shares I bought back? What are the details? Within next 7 days, destroy the share certificates and put it in the dustbin. Are you following? Is destroy? You will properly destroy it. Today, demat sir, computer those days I will destroy it. Within next 6 months, you should not make an issue. They are saying, are you a fool? Just now you did buyback. Now you want to make fresh issue. Buyback you repaid. Again you want to make fresh issue. Have some sense. So next 6 months you should not make fresh issue. For this, what is the exception, sir? Fresh issues allowed for ESOP, bonus, convertible shares or convertible debentures. Why, sir? Logic. In these fresh issue, I am not getting money. ESOP is for employees, different purpose. Bonus is giving for free. Convertible, I already committed long back. Allow me to do my old commitments. Are you following? Another 6 months. Sir, next to 1 year, no new buyback. Just now I finished buyback, no buyback again. Just now you got married, no. Wait for some time. That's what they're trying to say. Are you understanding, guys? So next to 1 year, you can't do any buyback. So let me just summarize the time limits of buyback because it's one of the biggest procedures that we have, guys. Very quickly, you will participate with me. Resolution, 10%, board for 10%, special for 25%, off, paid up share capital and free resource, including securities premium. Recording, tell with me. Once you pass resolution, buyback should be done within 1 year. In that 1 year, I will give offer. You have to accept within 15 or 30 days. Less than 15. Unanimous resolution. Excellent. Once buyback is completed, you have deadlines. 3 days. Return of buyback. 7 days. Destroy share certificate. 6 months. No new issue except ESOP. Bonus. Convertibles. Next to 1 year, no buyback should be done. Are you following, guys? Then, so that means in 1 year, we have 3 1-year points in the same provision. One question, 3 1-year points. So I summarized all the 1 years. Complete within 1 year of resolution. And next 1 year, no buyback. And in case of a listed company, they have to file something called declaration of solvency. Declaration of solvency signed by a CA that for next 1 year, company will remain solvent. Are you following? This company will remain solvent in case of a listed company. These are what we have in law. Now, what are the famous accounts points? Accounts points is this 25% and 10 points, 10% will come over there. Additional points. How many shares I can buy back, sir? 25% of number of shares outstanding and debt equity ratio post buyback should not exceed 2:1. These 3 points anyway you learn in advanced accounting. So by the time you come for law exam, you participate accounts la. Accounts you particular, sir. Accounts 8 marks gone. Law also I didn't study, sir. 5 marks gone. See you in the next attempt. Okay. Now, are you following, guys? Clear? What are the 3 conditions? The resource test la 25% I will take or 10% depending on resolution. Number of shares, 25% of number of shares outstanding and debt equity should not exceed 2:1. Are you able to recollect fully, guys? Hello? Understanding? Clear? Next, with this we are done with buyback. Now there are 2 protection of section 68. Okay, what they are trying to say, you section 70 after 68 70 says you still cannot do buyback indirectly or directly. Company cannot do buyback. How, sir? I am not doing buyback, sir. My company shares my subsidiary is buying. I am not doing buyback, sir. My holding is doing my buyback. I am not doing buyback, sir. My investment company is doing my buyback. Like that they are saying directly or indirectly you cannot do buyback with your own subsidiary or through an investment company you use money you cannot do buyback. Then if company has the following defaults, you are not able to repay deposit interest, redemption of preference shares, repayment of dividend, repayment of loan. All these if you are not able to do, then don't do buyback. If you have these defaults, then for the next 3 years, how many years, guys? Next 3 years, buyback cannot be done. You have to rectify that. Are you following, guys? And if you have default in section 92, filing annual return, 123, dividend declared, not paid, 127, penalty, dividend not paid in 30 days, 129, FS is not prepared, 137, filing of FS. If these things are also not complied, sorry, buyback cannot be done. Additional conditions in buyback. Next is section 67. Another, what to say, extension of buyback. No company, private or public, can give loan to somebody to buy back. So look at this. ITC wants to do buyback. They are giving loan to SBI. ITC is giving loan to SBI to buy back. SBI is buying shares of ITC. Now, later to get the loan back, instead of getting, now SBI should repay the loan. Instead of repaying loan, they are repaying. Instead of repaying loan, they are repaying the shares of ITC. So I gave loan, but when I'm getting the money back, I'm not getting loan. I'm getting my own shares. Are you following, guys? Got the scammer? Like this, they are trying to say, no company, public or private, should not give loan or guarantee or security or any other financial assistance to anybody for buying my own shares. Are you following, guys? Because if I give loan or security or guarantee, when I get it back, what you will tell? Give my shares. It becomes buyback. So asset side, when I get my loan back, I'm getting my own shares. Liability asset. Are you getting it, guys? Not allowed. They are saying restriction. You cannot give loan or guarantee or security to anybody else for you to buy back your own shares. But this has two very, very important exceptions, guys. You can't tell a bank not to give loan. Bank or work is to give loan. I can take loan from SBI and buy SBI shares. How can bank control? So for a bank, in the ordinary course of business, they can give what, guys? Loan can be given. And employees, very important for exam, a company can give loan to employees. Employee can do whatever he wants. He can even buy shares of the company. But they are saying such loan can be given for other than KMP or directors. Other than KMP or directors. And that loan shall not exceed the salary of last 6 months salary. And when employee is buying back the shares of company, he can buy back, but he should only buy back fully paid up shares. Beautifully drafted provision, guys. Why not partly paid up shares here? Employee will buy partly paid up. I will give him loan. I will take it back in terms of call. Partly paid up shares, I will give him loan. He will buy partly paid up shares. Then I will make call. He will give the money back to me. Look at the route. So to avoid all this, whoever drafted told, I can give loan to employees, but not allowed for KMP and directors. Why they need loan? They are already very rich. Don't give loan to them. And for buying back, and they can purchase only fully paid up shares, and maximum loan you can give them is how much, guys? 6 months order salary. Are you following, guys? This is section number 67 and 70, prohibition and restriction on buyback. For doing this, for giving loan to employees, you have to pass special resolution in general meeting, and employees can buy in terms of ESOP also, they can buy. For this, again, company should not have defaulted in repaying deposits. Okay. Next, last one, 66, reduction of share capital. Sir, what do you mean by reduction of share capital? 10,000 shares of 10 is now becoming 10,000 shares of 5, fully paid up. I am reducing the face value itself fully. So when you are doing reduction of share capital, what they are saying, very simple. What this reduction is explained over there. Okay, that is fine. Basically, or they will adjust, for example, company in balance sheet. Look at the balance sheet. They will have 10,000, 1 lakh shares. Okay, or 1,000 shares. Reserves loss is 100. I will set off both and tell my new capital is 900. Instead of showing 100 loss, I will set off my reserves loss with my share capital. Instead of showing 1,000 positive, 100 negative, I will show 900. For all these comes under reduction, sir. Sir, what is the procedure for reduction? Very simple. You have to apply to the tribunal. Once you apply to the tribunal, again what resolution? I do start off with resolution, sorry. Board and special, and then tribunal vandale pass special, go to tribunal. Tribunal will forward the application to other concerned stakeholders, guys. Who are the concerned stakeholders here? Central government, SEBI, ROC and creditors. It will go to all these people to send their representation. Within 3 months, I will wait for 3 months if they have any objection. So to whom I am sending for objection? Guys, I am sending for central government, SEBI, ROC and creditors. And they have to wait for objection for 3 months. Now this creditors should be a latest list. Should be a latest list of creditors of last how many days? 15 days. The list of creditors to whom I'm sending should be latest creditors in last 15 days, and I will wait for 3 months. If there is no objection, I will proceed and go ahead with what, guys? Reduction in 3 months. If there is objection, every time objection comes, company should try and rectify within 7 days or longer period. That's about it. Are you following, guys? Once the reduction order is coming, you have to publish in newspaper also and website, all of that. Are you following, guys? Clear? Effect on members and creditors. What is this? Look at this. Effect on members. Now they have new liability. 10,000 shares of, let's say, 10 each is now becoming 10,000 shares of 5 each or 3 each. Now new liability comes. Effect on creditors. Creditors, main point over here. If some creditor's name is missed out in this list of last 15 days, then they can still come and claim. They can still come and claim from the company. Company is closed down, sir. I will claim as if the company is still open from those shareholders who were supposed to pay. Are you following, guys? Clear? This is section 66, which talks about reduction of share capital. With this, we are done with full share capital provision, guys, from section 43 to section 70 is fully done. What is left is debentures, which is 71, which we'll be seeing next. Okay, let's get into the Gen Z revision of debentures chapter, guys. We just now finished share capital. Quickly, I'll ask like questions, you will tell like answers. Can debentures have voting rights? No, debentures will not have voting rights. If I'm going to issue convertible debentures, converted to shares in the future, you can issue them. But additionally, you have to pass special resolution at the time of issue itself. Why, sir, I should do that? Because they are going to become shareholders in the future. Apart from that, if you want to issue any other debentures, including secured debentures, you have to follow the following points, guys. Secured debentures, first you have to create a charge on the asset. But if it's a government company issuing debentures where it's guaranteed by central or state government, no need to create a charge because government guarantee itself is the security, guys. Next, the redemption period. The debenture should be repaid maximum within 10 years. But if it's infrastructure company, you can go up to 30 years, you can go. Same like preference, anga 20, 30, here 10 and 30. Are you following, guys? How to create the charge? The creation of charge can be on charge of the company holding subsidiary in favor of the debenture trustee. Now, who is this debenture trustee? Company has to appoint debenture trustee before issue of prospectus or letter of offer. Are you following, guys? Before issue or letter of prospectus and letter of offer within 3 months from the date of allotment of debenture trustee. So basically, debenture trustee will be appointed, but the debenture trust deed will be made within 3 months from the closure of allotment. Once allotment is done, the debenture trust deed will be made within 3 months. Is this clear, guys? Now getting into few more points. Sir, who is this debenture trustee? What is his work? But before that, who is this debenture trustee and what is his work, guys? Now, debenture trustee is the intermediary between the company and the debenture holders to solve all the issues. Debenture trustee is needed if you are going for a public issue and if you are going for issuing prospectus and number of members are exceeding 500. Sir, number of debenture holders are only up to 500, sir. Up to 500. No need debenture trustee. Because only 500 people, they can directly deal with the company. If it's crossing 500, then we need to have a debenture trustee. Are you following, guys? Now, who is this debenture trustee? Very important. These points are very similar to deposits. Who cannot be? So, who cannot be? Because independence is very important. We have some points. Basically, over here, any stakeholder with the company related in any manner cannot be a debenture trustee. For example, shareholder cannot be debenture trustee. Promoter, director and their, relative. And promoter, director and relative of the company, company's associate, company's subsidiary and company's holding. That only in mnemonic I wrote here like cash. Company or associate, subsidiary and holding. I can't be promoter, director and KMP of this full group. Then you can't be relative of above also. You can't be relative of the cash group also. So you can't be promoter, director of cash and you can't be their relatives as well. Are you following, guys? Any person who's indebted to the company, I have borrowings with the company, sir, then I can't be a debenture trustee. Or even if you are given guarantee, you cannot be a debenture trustee. Lastly, if you have any pecuniary relationship with the company, any pecuniary relationship with the company for 2% or more of its turnover or total income or 50 lakhs, whichever is less. So what they're trying to say, 2% or more of the turnover or 2% of total income or 50 lakhs, whichever is less in the preceding 2 financial years or current financial year. If you have a pecuniary relationship, you cannot be a debenture trustee. These are points you have to be aware, but don't mug up any kind of relationship. Sir, why this pecuniary is coming over here? This is mainly for business relationships. It's not allowed. Are you following, guys? Sir, what about casual vacancy? Now this debenture trustee, what is his work? His work is to take care of the problems. If he is very lethargic, then he will be sued for damages if there's any loss. Casual vacancy, if he is leaving by himself, then board will fill the vacancy. Are you following, guys? If it's coming because of resignation, just like auditors, casual vacancy because of resignation, then written consent of majority of the debenture holders, written consent of majority of debenture holders, they will fill the casual vacancy. Removal, now coming to removal, there are 3/4 points in this chapter. 3/4 of value of debenture holders will vote. How many percentage, guys? 3/4 of value will vote for 2 cases. One, if you want to remove the debenture trustee, 3/4 should vote. Or if debenture trustee is having some liability on him, to exempt him from damages. To exempt from where, guys? To exempt from damages. So 3/4 comes in 2 cases. Here debenture voting, 3/4 comes in 2 cases. One is to remove that fellow from the post or to exempt him from damages. Sir, similarly 1/10 also will come. 1/10 will come where, guys? 1/10 will come, very simple, if you want to, what to say, conduct a meeting. Like how EGM, members can call for an EGM. How members will call for an EGM? Members will pass a resolution. They will, 1/10 will make a request for EGM. Like that here, debentures also 1/10 in value call, they can call for a meeting. So we have learned 3 limits, guys. We have learned 1/10, we have learned 3/4, and we have also learned majority in writing. What are these 3 things over here? Very simple. If it is 1/10, it is for calling meeting of debenture holders. If it is for 3/4, it's 2 things: to remove the debenture trustee or to exempt him from damages. If it's majority in writing, to fill casual vacancy. Are you following? Yes, casual vacancy will be filled. Are you understanding, guys? Clear? These are the points with respect to debenture trustee. When the debenture trust deed will be made? Within 3 months from closure of allotment. Are you all with me, guys? Hello? Next, debenture meeting. Either debenture trustee can call by himself or, like I said, 1/10 we will go ahead. Are you following, guys? Now whenever debenture trustee has a doubt against the company, that company may not pay the debentures, he can go and apply to the tribunal. Tribunal will pass the company, ordering the company not to incur any further liabilities. Not to incur any further liability. Are you all with me, guys? Clear? Okay. Next. Sir, what about debenture redemption reserve? Every company should create debenture redemption reserve where they have to transfer before the end of this year. How much? 15%. 15% should be transferred, and like whatever is going to mature next year, whatever is going to mature next year, other 15% should be transferred. At the same time, it should be deposited by 30th April of every year. Are you following it? So 15% of, simple sir, 15% of what is maturing this year and 15% of what is going to mature next year should be transferred to DRR before 30th April of each year. Are you following? I'm repeating. Whatever is going to mature this year and next year, 15% of that should be transferred. Are you following, guys? Clear? Then here they are saying next, it should be deposited where, sir? This money of DRR that I am saving, no, should be kept in safe funds. Should be kept in very safe funds. What are they? Scheduled bank or unencumbered securities of Indian Trust Act. Are you following, guys? Then you have some table. What is the percentage of DRR? Basically, if you see terms like All India Financial Institution or other or listed company, if you see now, it is fully exempt. Remaining listed company, it is exempt. All India Financial Institution, listed company, it is exempted. If it is NBFC, it is usually 15%. Again, for unlisted All India Financial Banks, PFI, it is no need to create. NBFC, here unlisted NBFC, no need to create. Listed NBFC, you have to create how much, guys? 15%. And remaining unlisted company, it is 10%. No other option. You have to go through this dabba, which is there in the book also. So far they have not tested, but if you don't know anything, default rate is, sir, simple. I don't know anything, sir. Default is 15%. Listed company, not there. NBFC or all this listed all India financial institution, not there. Remaining unlisted company, 10%. That's it. Are you following, guys? With this, we are done with debentures chapter, guys. I hope you have understood debentures quickly. Are you following, guys? Clear? Done with Gen Z of debentures. Okay, hi guys. Now we are going to revise full meetings chapter 88 to 122 using our Gen Z notes. Please refer to your Gen Z notes. We will start off in the same order. 88 talks about register of members. What are the key points here for exam? Update in register within 7 days after any transaction. Where will I keep the register? Registered office. Can I keep anywhere else? Yes, you can keep anywhere else in India if company passes a special resolution and if 1/10 of members reside in that location. That is which section? 94. Okay. Anywhere else in India, and this register will be kept for how many years? 8 years. Other points in this, in the register, if there is any charge, lien, or if any security is enforced, you have to update in the register of members. If there is any death, insolvency, or any transfer to IEPF, that also will update in register of members. Last one, if the number of members are less than 50, then no need to maintain index. I hope you are able to recollect the points. That is more important than being able to tell all the points. Next, 88 subsection 4 talks about foreign register, which is same as Indian register. Only difference is, once you establish a foreign register, you have to intimate ROC within 30 days and then backup that should be sent back to the principal location within every 15 days. Signing difference, the CS and director will sign for both 88 and 88 subsection 4, but the difference is he has to append on every entry. Foreign register, every entry you will sign there, page wise, it's enough. Next, 88 over, then we went to 94 also. Again related to this, we are going in the same order how we took the class. 91, closing off register of members. Can you close? Yes, maximum 45 days. At one stretch, 30 days. Before closing, notice of 7 days. Perfect. Then we saw two sections, 89 and 90. BO and SBO, beneficial owner and significant beneficial owner. BO, they are saying, registered, what they are trying to say, the registered owner will intimate the company within 30 days when he appoints a beneficial owner in form MGT 4. Same way, beneficial owner also will intimate company within 30 days when he is appointed MGT 5, and the company will inform ROC within 30 days in MGT 6. This concept of BO is not applicable for a government company or a mutual fund or venture capital fund. Are you able to recollect, guys? That's it. Next, 90 also same thing, but here what they are saying, an SBO will intimate company within 30 days in form Ben 1. Registered will intimate company within 30 days when he appoints an SBO. They have not given the form number. Company will intimate ROC within 30 days. Who is an SBO? He has 10% or more of voting power or paid up share capital or getting the dividend or has control or significant influence. Any of the one. Then exception. This SBO is again not applicable to a government company. Additionally, central or state government and your mutual fund, venture capital fund and REIT. Two new points added in our syllabus here is Ben 3 and Ben 4. What is Ben 3? Register of SBOs. So company has to maintain register of SBOs open for inspection for 2 hours. Ben 4 is very important. If somebody is not reporting to the company, if company has a doubt, I can send them a notice asking them if they are an SBO. So notice to doubtful individuals in the last 3 years, even if you are not shareholder in Ben 4, if they are not responding to the Ben 4 notice, then you can apply to tribunal within 15 days. Are you following us? This is section 90. Then this were the procedures. So we finished 88, 89, 90, 91, 92, 93, 94, 95, except 92. We will come back to that in some time. Then we went to meetings. First is 96, which talks about AGM. What are the key points here? No need to mug up all. Like I'll ask questions, you will answer. Where will be the AGM? Registered office. Same city, town or village. What time? 9 a.m. to 6 p.m. I can start anytime between 9 a.m. to 6 p.m. Where can I keep anywhere else in India? Yes, if company passes a unanimous resolution. Which day can I keep AGM? Any day except national holiday. If it's government company, central government can keep it anywhere in India. Next time, AGM will be held within 6 months from end of financial year and maximum 15 months time gap between 2 AGMs and one every calendar year. You have to satisfy all the points. But if it is first AGM, instead of 6 months from end of financial year, they are giving time of 9 months from end of financial year. Next, ROC can grant 3 months extension. So 6 months can become 9 months, but extension is not allowed for the first AGM because first AGM already has 9 months. Section 8 company time, place, date of the AGM is decided by the board of directors. One more thing for section 8 company, for AGM instead of 21 days notice, 14 days notice is sufficient. Next, 97, 98. 96 is again what guys? AGM. 100 is what? EGM. 97, 98 is tribunal to call for AGM. Tribunal to call for AGM. Even if one member attends, it becomes a valid meeting. Even if that one member is a proxy, we will consider as a valid meeting. Next, 99 is penalty for not holding AGM or EGM. Then EGM we will take in the last guys. We are going in the same order how it was taken for us in class. We can't go to EGM after 98, 99 because you should know about notice. So for every AGM, notice is mandatory. So 101 talks about notice. What are the key points here? No need to mug up all points. Notice should be 21 days before AGM. 21 clear days. That means date of AGM, date of sending notices not counted. If it's postal, additional 48 hours will be given. If it is less than 21 days, yes, you can give a notice less than 21 days. If 95% of members agree in writing or electronic mode, latest RTP question. Section 8 company we already saw 14 days notice. Such notice should be clear, explicit, unconditional. I can't give any conditions. Next, intentionally I didn't give the notice. Deliberate omission to give notice to any member makes it void or invalid. If it is not deliberate omission, genuine cases, then the meeting is valid. Company will prove with the postal challan. Then to whom the notice will be sent? Shareholders, legal representative of deceased, auditors, assignee of insolvent member, directors. Don't mug up, just think shareholders, directors, auditors. If shareholder dies, legal representative. Shareholder becomes insolvent, assignee of shareholder. Then the notice will of course have details of place, date and time. Otherwise it's not even a notice. Then we went to the important section for us, section 102, explanatory statement. Let me revise this point again. In AGM, 4 businesses: adoption of FS, declaration of dividend, appointment, reappointment of directors, appointment, reappointment, remuneration of auditors. These 4 business are what guys? Ordinary business. For ordinary business we have only ordinary resolution. All other business in the AGM is called special business, and special business can be ordinary resolution, special resolution or unanimous resolution. In EGM, all business including those 4 business are called special business. What this section says, learn what is special business. AGM other than those 4, in EGM all business. For every special business you need an explanatory statement is mandatory to be attached along with the notice. What is explanatory statement? Giving more details about the transaction, with whom I am entering the transaction, how much is the transaction, party, all those details. Okay. Next we jump to section 114 because it's related to resolutions. 114 talks about ordinary and special resolution. Whenever you pass a special resolution or board resolution, you will intimate ROC within 30 days in form MGT 14. That is given in which section? 117. So resolution, special, board, intimate ROC within 30 days in form MGT 14. This will come in every point wherever you write about special or board resolution. Be careful, not for ordinary resolution. Then we jumped again back to meetings chapter, main core meeting, section 103, which talks about quorum. What are the important points? Exam ku what to remember for quorum. Private company 2 or AOA, whichever is higher. Public company up to 1000, 5, 1001 to 5000, 15, more than 5000, 30. People are personally present. We do not count proxies, but you will count representatives. Representative under 112 and 113. 112 we have 2 people, President, Governor. 113 we have 3 people, central government, state government, company. This representative is counted for quorum. Are you following, guys? Now, if I am representative for 4 companies, I will be counted as 4. Next, this quorum should be present within the first 30 minutes. If not, meeting will be adjourned. Secretarial standard recommends that quorum is present at the time of passing every resolution, not the act. Standards recommends that. Okay, next, if there are joint owners, you will count as 1. Will I count preference shareholders for quorum? No, but I will count them if they can vote. So in a meeting of preference shareholders or dividend is not paid for 2 years for cumulative preference shares, I can count them. Next, if the meeting is adjourned, when it will be adjourned for? Board will decide when the meeting will be adjourned if the quorum is not there. If board is silent, it is adjourned to next week, same date, time and place. In the next meeting also quorum is not there, then the members present will be quorum. For example, for my company I need 30 members, only 20 are there, it becomes the quorum. Then for the adjourned meeting you have to give a 3 days notice to all the members or publish in 2 newspapers. What if it is an EGM which members called, and EGM is adjourned because there is no quorum? No, that concept is not there. EGM cannot be adjourned when members call for it. If quorum is not there, meeting is cancelled. So adjournment comes only for AGM, and even for EGM if it is called by the board of directors. Next we went to section 104. Simple, chairman. What is important? Chairman has the power of casting vote, second vote in case of a tie. Who will select the chairman? The board among themselves will select the chairman within 15 minutes as per articles. If everybody is okay, that chairman will continue. If somebody is contesting, no, I am not okay, then members can elect a chairman among themselves, but that members can protest only if they can demand for a poll. To demand for a poll, you need to have 1/10 of total paid up share capital, otherwise you can't demand for a poll. 105 again, big section. Proxy. What all we saw in proxy? Proxy can be proxy for maximum 50 shareholders, plus that 50 put together should be maximum 10% of voting power. If one person has more than 10% of voting power, then you can be proxy only for one person. What proxy can do? He can do only one thing: vote by poll. He is like a postman. Don't write that in exam. What he cannot do? He cannot talk. When I say he cannot talk, he can't ask questions to chairman. He can talk among themselves. Okay. He cannot vote by show of hands. 107 voting he can't do. He is not counted for quorum. And if member comes, then member will vote. Proxy cannot vote. For all of this we saw the logic. Here we are focusing exam points. What are the timelines for proxy? Before AGM, 3 timelines. 24 hours before, I can start inspecting who are the proxies. 48 hours before, you can appoint proxy. 72 hours before, you can request for inspection. That means I can request for inspection 72 hours before and start the inspection 24 hours before the AGM. Are you following, guys? Then if I appoint multiple proxies, who will be valid? Last one who is appointed 48 hours before AGM. After that I will not count. Next, proxy. Should he be member of company? Can be member, cannot be member. There is no mandatory rule over here. Is this clear, guys? Proxy important. 106. Who? It's not about who cannot vote. Somebody who is eligible to vote cannot vote if he has calls in arrears or there is a right of lien on shares. Are you able to recollect the points, guys? Otherwise revise and then watch this. Okay. Show of hands. Now section 107 talks about show of hands. For all resolutions you will do only by show of hands unless it is voted already under e-voting in section 108, or if somebody is demanding for a poll under section 109. That means already we saw you can demand for a poll in 104 for chairman, or you can demand for a poll in 107. So 109 has intros in 104 and 107 itself. Now coming to what is 109 poll. To call for a poll, you need to have 1/10 of total voting power or 5 lakhs paid up share capital face value, whichever is less. Any one irtha podu. Whichever is high means you should have higher. Any one, 1/10 of voting power or 5 lakhs face value. Then you can demand for a poll. Once you demand for a poll, when the poll will happen? It will happen that time itself. If you are asking for two things, electing chairman, if you want for adjournment, because that should happen that time. So electing chairman, adjournment happens that time. Other cases, it can happen within 48 hours of AGM. Once poll is done, that scrutinizer will show the dabba, all of that key points. Within 3 days you have to give result. Within 7 days you have to give report. Report says how many votes in favor, how many against, how many not counted, all of that. Then we went to section 110, which talks about postal ballot. In certain cases or in certain resolutions have to happen in postal ballot. A few of those what we saw, the whole list is alteration of object clause, 27 variation of objects unutilized money, 43 rule 4 DVRs, 48 variation of shareholder rights, 14 alteration of AOA. In that, conversion of public to private or private to public, both are considered. Then section 12, shifting of registered office outside the city. Section 68, buyback. So if any of this happens, then you have to vote only by postal ballot. Then they are also saying postal ballot is deemed to have been complied if you are voting under section 108 in electronic voting. So no need postal ballot. Additionally, if you are a one-person company or members are up to 200. Here they are not saying private company up to 200. Can be private, can be public. If members are up to 200, no need postal ballot. If postal ballot needed, you can vote under e-voting. What is the timeline for postal ballot? Once you get the ballot, you have to reply within 30 days. Once you reply, all the from cutoff date, the last postal ballot, company should give report within 7 days and advertise 5 days before voting period is starting. What do you mean by voting period? The time when company starts opening all the ballot papers. Next to 108. 108 comes when postal ballot section itself tells it is enough if you do in electronic voting. Here only key timelines are important for me. If this is the date of AGM, you need to give report after 3 days and voting should be open at least for 3 days before AGM. In such a way, it closes at 5 p.m. before the date of AGM. Cut-off date should be 7 days before AGM. That means if you are a shareholder up to 7 days before AGM, it's enough. On that day, if you are a shareholder, you can vote. Then 21 days before AGM, you are anyway giving notice. When you are giving that notice, you should also publish in 2 newspapers that we are going for electronic voting, so people are aware. Is this mandatory electronic voting? Not mandatory for all companies, but if you are a listed company, that's it. You have to follow electronic voting. Or if your company has 1,000 or more members, you have to go. That means public company having more than 1,000, private can't have. Next to section 100. Now you can understand section 100 better because we finished notice. Simple. EGM, who can call for it? 3 people. Tribunal can call under section 98. Board can call by passing a board resolution. Shareholders can call if 1/10 of paid up share capital if they are calling. That means that same provision of 110, not 110. 109, that 1/10 of paid up share capital if you have, you can call. That means you can call for a poll or you can call for EGM or you can call for chairman for poll. All the same is 1/10. Where I will have EGM? Anywhere in India, not the registered office. Of course, first try registered office, not possible. Anywhere in India, we have many case laws for that. Which day? Any day except national holiday, just like AGM. Next, once they make the request, people making the request are called requisitionist. The EGM should be held within 3 months. Within 3 months, EGM should be held. First 45 days is for board. If board fails, then members will try to collect the details of members and try to conduct within the next 45 days. Any expense for conducting EGM will be reimbursed by the company. Are you following, guys? I will wait for the first 21 days. If no notice comes, then I will start initiating the process. These are the next, all the big sections. Then we saw some small sections. 116, very small. If a resolution is passed at adjourned meeting, it is treated as if it's passed on that day and not any previous day. That's it to remember for exam. 120, all documents and inspection required in this chapter, not act, in meetings chapter, can happen in electronic mode. Applicable, same 108 applicability, listed or any company having 1,000 or more members. Next we saw 121, 122, 120, 121, 122. 121 important. For every listed company from date of AGM within 30 days in form MGT 15, you have to file a report of AGM to the ROC. This report will be signed by the same people who signed the FS in section 134. Chairman, if not chairman, 2 directors where one is managing director and CS will sign. CS is additionally will sign here. What will be reported? AGM actually took place. What is the proof? When was the note? Give attached copy of notice. Attach quorum details. What resolution is passed? If meeting got adjourned, details of adjournment. Who is the chairman? Photos, documents will be filed to ROC for proof that AGM actually took place. 122 small section. OPC chapter is not applicable for. AGM is not applicable for OPC. But how will I pass resolution? Ordinary, special or board? I will intimate company and company will just update in the minutes and they will sign. Are you following, guys? Then we saw 2 sections, 111 and 115. Both are similar. 111 is for circulation of members resolution. 115 is for special notice. Now 111, what they are saying, from the date of AGM, you can circulate a resolution if you give to the company at least 6 weeks before AGM. If you just want to give information about a business in the AGM, give it 2 weeks before. If you give it 6 weeks before, it gets added into the notice. Members can circulate resolution included as business. If you give 2 weeks before, only information. Again, for this circulation, you need to have 1/10 of paid up share capital. Same thing 115, special notice for 2 things. If you want the retiring auditor shall not be reappointed. I don't like existing auditor. I don't want him. First, or appointment of somebody else other than the retiring auditor. I have nothing against existing auditor. I want somebody new. For this, you can again send a notice, special notice, for which you should have 1% of voting power or 5 lakhs paid up value, face value, paid up value, whichever is first, 1% or 5 lakhs. Here you should send it between at least 14 days before you have to send, or 3 months before you should send. In this time gap you have to send. If I send before 3 months, it is deemed to be sent within 3 months. Once you send this 7 days before the AGM, the company has to circulate this to all the members. If they are not able to circulate, at least publish in newspaper and website. This is section 115. Are you actually able to recollect, guys? 3 months, 14 days, then above 6 weeks, 2 weeks, all of that. Okay. Next, 118, simple, minutes. What they're saying in minutes, I'll ask questions, you try to answer. Minutes are kept for how long? Permanently. Who has the custody? CS or director or any person authorized by the board. Where I will keep the minutes? Registered office. They have not given any provision to keep anywhere else, so I will keep it registered office. Separate register for each class of meetings, shareholder, debentures, all of that. Minutes will be numbered consecutively. Minutes should be signed within 30 days of conclusion of AGM or board meeting. Board meeting or AGM, within 30 days I will sign. Who will sign? Chairman only has to sign. If chairman is not able to sign, then board meeting means chairman of next meeting can sign. Reason? Because board meeting will happen soon. If it is general meeting, then director authorized by the board. If the chairman is not able to sign, death, then some other director authorized by the board will sign. This is 118. Here in 118, for section 8 company, minutes is optional for whatever reasons we discussed, confidentiality, all of that. Last section that we have, we've actually revised all the sections. 119 talks about inspection of minutes. Inspection of minutes. Who can inspect? Only members can inspect. That too, they can inspect only for general meeting. Members cannot inspect for board meeting. When you can inspect? Business hours. Any 2 business hours you can inspect. Inspection, how much to pay? Free. If you want copies, you should get the copy within 7 days. For copy, company can charge maximum 10 rupees. Are you following, guys? But now section 120 says you can keep in electronic mode. Therefore, if the minutes are in soft copy, how much you will pay? Nothing. It is completely free. But soft copy can be given only for last 3 years. If company defaults, of course there is a penalty, and tribunal you can apply to them and they will order the company to provide for the same. Are you following, guys? Let's revise the section numbers alone once from first. 88, register of members. 88, subsection 4, foreign register. 89, BO. 90, SBO. 91, closing register of members. 92, annual return. 93, not there. 94, place of keeping, register of members, that 1/10. 95, register as an evidence. Then we saw 96, AGM. 97, tribunal to call AGM. 98, tribunal to call EGM. 99, penalty. 100, EGM. This is one set. Then we saw 101, along with notice you send 102, explanatory statement. Once you send both of this, 103, quorum will come. Once quorum comes, chairman 104 will come. If the quorum is not able to come, you can appoint proxy. Why all of you are coming to vote? Who cannot vote? 106, who can't vote? 4 types of voting. 107, show of hands. 108, e-vote. 109, poll. 110, postal ballot. Then some other miscellaneous sections. Here, 111, circulation. 115, special notice. 112, representative of governor, all of that. 113, representative of company, central government. Next to 114, special or ordinary. 117, file to ROC within 30 days. So 2 sets. Then one leftover section. 116, what is 116? Adjourned meeting, that resolution will be passed. Then 118 and 119, minutes, inspection of minutes. Then 120, 121, 122, 120 is documents in electronic mode. 121, listed company, report on AGM. 122, OPC, not applicable. Whenever we tell a section, are you able to recollect the provision? 20 minutes we revised meetings, but if you are doing it by yourself, a little more detailed, 45 minutes or 1 hour with our Gen Z notes, you should be able to easily revise one of the biggest chapter. Are you feeling confident now, guys? Yes? No? Fine. Thank you. Yes. So follow, guys. In meetings chapter, we have so many timelines from 88 till 122. Within 7 days, 3 days, 30 days, this, that, where we get confused. So this is one timeline where everything is covered of the whole chapter. That means 10 minutes before exam, this is enough for me. Now I am going to scribble on this and explain. Sir, already it looks like scribbled only. Don't worry. That's why I have another copy, image, which you can copy, or image also I will send it to you. Therefore, don't have stress. Let me scribble on this. Okay. First, this is the date of AGM. Is it visible or should I zoom in a little more? Okay, when I will zoom in and I will move out wherever needed. Okay, fine. This is the date of AGM. What all timelines comes before and after AGM? Look at this. First, let me finish. After AGM. It's mix of all sections. So before this, you should be able to revise meetings chapter. From AGM, within 3 days, you should give that result in section 108 for e-voting and even for, look at this, and even for poll in section 109. Within 3 days, 108 and 109 result has to be given. Correct? Next, within the next 7 days, in 109, you have to give report of poll. We will give report of poll. If we miss anything, let me know, we will add. This is the summary what I did. Then within the next 30 days, there are so many things in next 30 days, guys. Lot of things in next 30 days. What are all of that? All those summary I have put over here. Within 30 days of AGM, 118 minutes has to be signed. 121, report of AGM for listed companies. 137, FS to ROC in section 137, and also related point 135, CSR 2 should be attached with this within 30 days of AGM. Within 60 days of AGM, annual return 92. Here we have those 3 things, MGT 7, MGT 7A and MGT 8. Whichever it is, wherever applicable, 60 days only time limit. Correct? This is after AGM. When should AGM be held? Within 6 months from end of financial year. First AGM na 9 months. One in every calendar year. Maximum 15 months between 2 AGMs. Are you able to recollect, guys? This is when AGM will be held. Then let me see what happens before the AGM. Before the AGM, 24 hours before, we will start inspection. I can also add here 5 PM before voting has to end. Voting has to end. Then 48 hours before submit proxy form, and 72 hours before request for inspection. All 3 proxy sections. Actually, I wrote the 5 p.m. It's on top. E-voting period is minimum 3 days, and section 108 closes 5 p.m. on previous day of AGM. I wrote on top. Are you able to follow, guys? Next, if I go a little more this side. Yeah. Next, if you see, we are going in same sequence order. So up to 72 days over. Next 2 weeks before AGM, 2 sections comes. Just now we saw 111 circular resolution, same 14 days. 115 special notice. Are you following, guys? 2 weeks. Both 2 weeks I wrote again as 14 days. Then if I come down to 21 days before AGM, lot of things have to happen. 21 clear days plus 48 hours if it is post for section 101. Then less than 21 days now members have to give consent in 95%. Also 21 days before in section 108 the details should be given in advertisement, correct? E-voting advertisement should be given in section 108, and in section 102 what is this? Explanatory statement should come for special business. And one more thing, 21 days before, 136 circulation of financial statement to members. Do you remember, guys? 21 days, all the related points we have put over here. Of course you won't understand, guys. You need to write it. When you write, you will write more points. I'm just telling you how we are summarizing. This is not Gen Z notes. This is Gen Z or Gen Z. Summary of full meetings in just one side, guys. Okay. 136 now what they are saying, 21 days before along with the notice you should also send a FS, circulation of FS to members. Then what else is there before the meeting? 6 weeks is that special notice, correct? 6 weeks is that circulation 1/10, and 3 months before only special notice. This is section 111 circular resolution, and 115 is 3 months before, which is 1% or 5 lakhs, whichever is lower, for special notice. That auditor, removing auditor. Are you following, guys? All sections, all timelines we wrote. Is there anything that we have missed out according to you? Anything you can quickly think of from 88 till here? I am not putting BO, SBO here because that is not to do with AGM. That is any time. Anything before and after AGM we have covered here. Who will take care of all this complaints? CS. Now don't think CS will put stamp, CS will sign. This and all who will do? CS. Are you following? Idalam correcta irukunu sir. Every year company secretary simply is not passing. I am also a CS, guys, so I'm saying fine. Okay, understood, guys. Are you following? Clear? That's about it. So ensure you have this in your notebook, guys. Make a copy. I will just alt tab to the better version of this. I hope you will be able to understand. That's why I read everything. Pause it. I will send the image to you guys also offline from the team. Make a note. See you after lunch. Recording. Thank you. Offline. Thank you. Bye bye. We are going to quickly revise all the limits that we have in FEMA. Gen Z notes of FEMA, guys. Basically, except for residential status in FEMA, we are going to revise the whole of FEMA in the next 10 to 15 minutes max. Basically, if you see, there are 7 dabbas that you have to remember, or 7 different types of limits. First is current account, which is schedule 3. Current account has totally 3 schedules. The third schedule talks about what you can do as an individual. For that, as an individual, limit is 2,50,000. If it crosses that, then you will go to RBI. This 2,50,000 is for what things? Like gifting, for donation, for any expense of medical, education, private tours, tourism, all of that if you want to go abroad. In that, they are not giving you 2,50,000 if you go to countries like Nepal and Bhutan, because you can use Indian currency itself. In this list, specifically they are saying for immigration, medical treatment and studies. For these 3 things, if it crosses 2,50,000, please get a confirmation letter from the respective institution also. Now, this 2,50,000 is for one individual. When I go with a group of friends or family, can I group it? Yes, friends, family. Same if you go together in the same visa or same visa, you can group it off, guys. Okay, that is about schedule 3. These are the key points. Other expense of schedule 3 could be, for example, you are buying mobile from US. Okay, you can buy mobile from US. It should be within the limit of 2,50,000. Are you following, guys? Clear? I'm not capitalizing mobile, keeping it in the expense side. Next, again within current account, schedule 1 is prohibited. That means current account has 3 schedules, guys. If you look at the 3 schedules of current account, should you remember these numbers? Yes, I will tell. Yes. Okay, easy to remember, nothing great. It's easier than section numbers. What is schedule 3 of current FEMA current account? Which you can do, allowed, permissible. Can do means permissible. Okay. Next, schedule 1 is cannot do, prohibited, no permission, nothing. You cannot do. Schedule 2 is you can do with the permission of central government. Schedule 3 is can do with the permission of RBI. Are you following? Within schedule 2 you have 2 types. One is for individual, one is for other than individual. What we finished so far is other than individual. So we are individuals. We are done with individuals for schedule 3. Next is current account schedule 1 prohibited. These things not allowed. Remittance out of lottery winnings. All lottery winnings in India you can't remit out. Race horse winnings. Riding horse from India, money can't go out of India. Money can't go out of India. Remittance for purchase of lottery ticket outside India. US lottery, no. For abroad, then banned and prescribed magazines you can't buy. Football pools and sweepstakes outside India you can't buy. Next, this same list has few other things. You have to search for these terms. Now I'm not focusing on logic in detail class. Here, callback service, dividend balancing, commission on export on equity investment of wholly owned subsidiary in India, special rupee scheme account. These are all in schedule number. Which schedule, guys? 1 which you cannot do, current account. So out of 4 dabbas that we have in current account, 2 we have revised. Are you able to follow, guys? Okay. Next, one more point we missed here. Commission on exports up to 10% of invoice value for tea and tobacco. Usually you can't pay commission on exports, but if it's for export of tea and tobacco, allowed up to 10% of invoice value. This also is what in cannot do, with one exception. You can do up to 10%. Clear, guys? Next, I'm going to current account schedule 2. Schedule 2 of current account, which is generally for the government departments, PSU, institutional level, usually for government departments or government things. Central government you have to get approval for all of this. Cultural tour. Is there any limit for cultural tour? No. Cultural tour you have to get limit approval. Cultural tour. Freight of vessel by PSU. Then that means renting of ship by PSU. Import by PSU through ocean if there are some expenses. Multi-model. Here again code word. Multi-model. Then container detention and payment of PNI club and transponders. Are you able to follow, guys? For this we had that story also. Indian team going to West Indies. That ship, signal, all container, all that is done. In this central government approval, apart from these code words, multi-model, container, all of that, okay. 2 points have limits. So you have to remember this for sure. If it's for payment to foreign print media by public sector undertaking, you have to see, is it for the following set purpose? Tourism, foreign investment or international bidding. Then it is exempt. Others na up to 10,000. So if PSU is advertising for 3 purposes, tourism, foreign investment or international bidding, then allowed. Beyond that, others up to $10,000. Prize money for sponsorship for sports that happens outside of India. Any state or national or international body of India is conducting cricket tournament, badminton tournament, whatever tournament, there is no. Apart from state, national, international, private is conducting up to $1 lakh is allowing. $1 lakh into 80 is close to 80 lakhs. Ada tandi agu for keeping cricket tournament for private company. So they're allowing up to that much. Are you following? Now we are going to schedule 3, current account other than individual. So if I come back to this diagram over here, now we have finished revising schedule 1, what you cannot do. Schedule 2, central government is done. Schedule 3, we have finished with individual. Now we are going to schedule 3, can do with RBI permission for other than individuals. In other than individuals, there are only 4 points, and all these 4 are important limits. Okay, I told there are only totally 8 limits in this act, correct? Only 8 limits with some schedule numbers. You can't remember this. If you look at the past exam question, this only they are testing. These limits will come for 4 or 5 marks. Now, commission to an agent abroad for sale of residential or commercial plot in India. So, let's say you are selling residential or commercial, your house in India is purchased outside. For that, for agent commission is $25,000 or 5% of inward remittance, whichever is higher. Logic is more higher, more commission you will get. Consultancy for infrastructure up to 1 crore, $10 million. Others 10 lakh, $1 million. Following, guys, clear? Next, reimbursement of pre-incorporation expenses, that is allowed up to 5% of investment in India or $1 lakh, whichever is higher. This you have to mug up, but the logic you know, why higher, why lower. Last one is a new point, donation. Very, very important for exam. If you are donating for 3 purposes, code word, chairs for chairs over there, or funding of educational institutions or any funds for educational purpose, or technical institution for research in the same field of donor company, then in that case, it will be 1% of forex earnings of last 3 years or $50 lakh, whichever is lower. This ends our current account 4 dabbas. Not that difficult to remember, correct? Half an hour before exam you go through that 1.5 day, you can revise. Now coming to capital account, much more easier. What is capital account definition? We saw capital account is basically a person resident in India alters asset, liability, contingent liability outside India. Person resident outside India alters asset, liability in India. For that, examples only are in schedule 1 and schedule 2. Not that important in capital account. That's why we didn't write here. Meaning simple, fairly easy list. Giving loan, taking loan, buying asset, selling asset. In schedule 3, there are some prohibitions. That is more important for capital account because things to remember. North Korea, can you enter into transaction? No. Who has to give permission? Central government. If you enter into transaction, buy asset, sell within 180 days. Then for a PROI, is prohibited to invest in India, even though we are getting forex, chit fund, nidhi, agriculture and plantation, and real estate, TDRs. You can't invest. TDRs is transferable development rights. But the word real estate does not include this. That means these things are included. Commercial and residential flats you can invest. Real estate infrastructure trust you can invest. Township, roads and bridges they can invest because that is for development. Otherwise, how will we develop? These are basic developments that are needed. Lastly, some miscellaneous concepts we saw, where apart from the limits, apart from residential status, what to remember. In reverse, if you see this account like RFC, resident foreign currency, or EEFC, exchange earners foreign currency, balance will be in dollars. These are exempted from FEMA because it's in dollars. Next, if any foreign national is working in India and getting salary, he can take the money and go abroad. Remittance of salary of non-resident working in India for the job should be maximum 3 years, but Pakistan means you can't take the money. Then under definitions, foreign exchange definition, you know what is foreign exchange. Balance in bank account in foreign countries. Ada Tandi he is saying, any instrument like traveler's check or bills of exchange drawn in India but payable abroad, payable in dollars, or drawn outside India in dollars, payable in India in rupees. Between the two things, where it is drawn, where it is paid, any one should be abroad. It should be in dollars. Then also we call it as foreign exchange. So these are the concepts in FEMA. Quick revision except for residential status and related point of PRIA and PROI. Are you able to follow, guys? That's all you have to remember for exam, guys. Thank you. So today residential status what we saw. For exam, what to remember, sir? One last time we will do and close. You never left India. You are a PR. II. You left India for 3 purpose. You are a PR. OI. I don't care about days. You left India for other purpose. I will check the previous financial year. If it's more than 180 days, yes, you are a PR. You left India for other reasons, but last year you didn't stay for more than 182. No, then you are a PR. OI. Come down. Coming into India is easy. Coming into India, 3 purpose. Yes, PRI. Others are PROI. Then this PRIA and PROI, that property purchase. Are you for, and for company you have to write last one, residential status for company, for other than individuals. 3 points. Incorporated or registered in India or registered, simple I'll write. Okay. Indian entity, the PRII controls foreign branch or subsidiary or whatever. This also will become PR. I'll write all these are PRI. This also is PRII. And last one, PROI. Let's say foreign entity controls branch or subsidiary in India. That's it. All these three are PRII. Second point, Indian entity PRII is controlling the foreign branch or subsidiary. Third point, PROI, foreign entity is controlling the Indian branch or subsidiary. Clear? Make a note. Anyone has a doubt, guys? Okay. Now to summarize the whole chapter, if you see, we basically have current account and capital account. Now if you see the three schedules, if you remember, now if you read the limits, you will understand. Schedule 1 is what is allowed for a PRII, correct? Schedule 2 is what is allowed for a PROI. அப்போ நான் நான் ரெசிடென்ட் சொல்லியிருப்பேன். Schedule 3 is basically what is prohibited. This includes both PRII and PROI. How it includes both? Schedule 3 only talks about PRII not to go have transaction with North Korea. Schedule 3 only also talks about PROI cannot invest in Indian Nidhi company, chit fund, all of that. Current account also has 3 schedules. First, schedule 1 of current account is basically what is prohibited for a PRII, mainly II, PRII is prohibited. Then schedule 2 talks about what? Wherever you need central government approval, this was majorly for those PSU entities and chartered vessel, all of that. Schedule 3 pathina, they classified into individuals, others. Individual what is permissible with the permission of RBI. For others, what is again allowed 4 points, but here permission of central government, RBI. Again what? Then same. Others also what is permitted with the permission of RBI. Are you following, guys? Correct? We covered all the 7 schedules, guys. Limits la. This is what we finished before this. Now are you understanding? Whether you know residential status or not, limits are not going to change for you. And the schedule is for whom, you have to be aware when you're writing the answer. Done, guys. Can we proceed? Hello. That's it. With this we are done with FEMA. Thank you. Any doubts before we close? Fine. Thank you.
We are finally done with the entire expected question marathon, guys. If you're a student who survived the entire marathon, watched in one stretch or watched in installments, thank you from the bottom of my heart. Thank you for all the trust, love, and support, guys. Believe me, I'm recording this very late in the night, the whole thing for you guys, and that's what you're seeing it now. And I won't be doing it if not for the love and support that I get from you. All the energy I get is not from me, is from you guys. When you guys keep sharing all the love and support, saying you go to Karthik sir for law, Karthik sir's law is good, expert question is coming, all your comments, it gives me one kind of a satisfaction inside, guys, that I don't think any kind of money can buy that. And it's never about money for me over here. It's about me giving my possible best and you guys enjoying it. So if you are watching till here and if you watched it till here, go to the comment section and just write one small message. I don't want you to spend a lot of time close to your exams. Just write a small message as to how this marathon or any other videos from our channel has helped you guys, because it might just be one small comment for you, but when I read that, in whatever difficult situation I am at that point, it actually makes my day. It makes my day, guys. I know you all would have already subscribed to the channel. If not, just go do it, guys. I can't keep asking you to do it again and again. Just go do it. So thank you so much, guys, from the bottom of my heart, and I'm very, very happy that you're watching it till here. I don't know how many of you are watching it till here. So just put in the comments whatever you feel like putting in. Yeah, go and ace your law exams, guys, and we will keep supporting you, not just in this video, beyond this video, until group 1 gets over, group 2, and soon by the time you come to final, I will be there in final. So I am just dedicating my life for this community, guys. That's it. CA students and mental health, that's about it. This is what I'm going to do as long as I'm there over here. Thank you so much. And if you feel like you want to do something for me, just pray for my health. That's it. Seriously, many people ask me, sir, you're doing so much for us. What should we do for you? Just pray for my health. Whenever you go to some temple, wherever, when you're praying for yourself, you just pray that extra few seconds, Karthik sir, health or whatever. I think those prayers and all will manifest, because for me, that one thing which is little weak at this point is health. So more wishes from you guys will definitely improve it, guys. Thank you. All the very best. Keep studying. Bye bye.